Chairman, sorry, try all that again.
Okay. Good morning. Josh, can you hear us? You can. Well, I just went through the preliminary remarks, told all kinds of stories about you. So you didn't need to hear those. But anyway, long story short, you have the floor. It looks like you have several members of your staff there.
Well, thank you, Mr. Chairman, and I'll just have to review the recording, I suppose, to hear those stories. That probably not very interesting, probably really, actually. So I do have my team here today, and Mr. Chairman and members of the board. I would say the first order of business, though, is to look at the minutes from the last meeting and maybe take some action on approving those, if is your pleasure.
Thank you, Director. Are there any corrections or notations that anyone would like to make to the minutes? If not, I would entertain a motion.
Mr. Chairman.
Mr. Secretary.
Thank you, Mr. Chairman. I would move that we adopt and approve the February 3rd, 2022 State Loan Investment Board meeting, Business Ready Community Grant and Loan Program minutes.
Motion's been made by the Secretary. Is there support?
Second.
It's been seconded by the auditor. All in favor signify by saying aye.
Aye.
That motion carries.
Right. Well, thank you, Mr. Chairman. I'm going to now turn it over to my team for the presentation of a few projects to go through for this quarter. I'll turn it over to Bert Adam, who is our investments director at the Business Council. Thank you, Mr. Chairman.
Thank you, Mr. Adams. I'll recognize you.
Thank you, Mr. Chairman. Members of the board, I appreciate your time this morning. I'll jump right in regarding the BRC projects we have before you today. I'll start with a quick budget review. So currently we have just over 34.6 million available in BRC funding and have 4 requests for a total of $977,855. If all 4 of these requests are approved, the remaining balance in the BRC budget will be approximately $33.63 million. Today we have 4 projects before you. First is a community readiness infrastructure project in Lander. And then the remaining 3 are planning grants from Newcastle, Rollins, and Sheridan. And with that, I will hand it over to one of our experts, Noelle Reed, our community development manager, to walk through each of these in more detail.
Thank you, Ms. Reed.
Thank you. Good morning, Mr. Chair, members of the board. We will start with the City of Lander. The City of Lander is requesting $889,105 community readiness grant to develop a 3.94 acre site, which will house a future assisted living and memory care facility. The proposed location is located between the Sage West Hospital and the Lander Golf Course. The site is city-owned and requires water, sewer, street upgrades, phase 3 power, fiber conduit, and natural gas to be shovel-ready. Funds from the BRC grant will be used to leverage a $13.1 million USDA grant loan application for the actual construction of the new healthcare facility. This shows an approximate 15-to-1 BRC dollars leveraged with follow-on capital. The Table Mountain Living Community Facility will be owned by the City of Lander, designed, built by a private firm, and operated by a management company through a separate public-private partnership. The Lander Housing Authority will be the manager, and a private entity, Better Senior Living, will be the operator. Table Mountain Living Community will house 24 assisted living beds and 14 memory care beds, and is anticipated to create 20 to 25 new jobs ranging from administration and medical professionals to other ancillary jobs like maintenance, accounting, cooks, and nutritionists. The needs for this project was well established. The project began about 5 years ago when the need for an assisted living facility was identified by community members. The city then created an assisted living task force to determine the viability and completed a market demand and feasibility study that showed a need for 24 additional assisted living beds and 12 memory care beds. The community also completed extensive research and due diligence. They vetted about 22 different private and public sites to determine the best location for this type of facility. And they also spoke with other local healthcare providers. And all of the local healthcare providers are very supportive of the new facility and agree that it will fill a void in the community. Some of the state considerations are that the project does leverage 15-to-1 and follow-on capital. It further enhances the healthcare ecosystem in the region, and it does align well with the Wyoming Economic Development Strategy. The Business Council Board of Members does recommend funding for this project. There is a contingency in place that there needs to be a letter of intent for full funding of the actual facility construction from either the USDA or another financing institution. And with that, I'm happy to answer any questions on the Lander project.
Thank you, Ms. Reed. Are there any questions for Ms. Reed about the Lander project? Hearing none. Ms. Reed, do you know if there's anyone from Lander that would be on the line who would care to address the board?
I'm not sure if I see anybody online right now.
Okay, thank you. Thank you. What's the pleasure of the board?
Mr. Chairman. Mr. Chairman, we do have a couple of hands raised.
Oh, okay. Thank you, Mr. Bone.
Mr. Chairman, they've put their hands down.
Oh,
Mr. Chairman, one more time. Regine Strube-Fossen.
very good. Ms. Fossen.
Thank you, Mr. Chair, members of the board. I just want to say that we're happy to announce that we did get some letters of intent to finance this construction project. So we're hoping that it will go forward. And we really appreciate this opportunity to increase our healthcare in Lander, Wyoming. And I would answer any questions that you have about the project.
Thank you very much. Any questions for Ms. Fossen? Hearing none, you're
Ms.
lucky. Or wait, auditor.
Mr. Chairman, thank you for being here. Just one thing I just wanted to clarify to make sure we have a realistic expectation. The timeline in the proposal seemed very, very optimistic. Is that accurate, or when I just don't want to set, a timeline expectation if we know it's not going to be met? And could you just give us an update on what you believe the timeline to be as of today?
Thank you, Mr. Chair and Auditor. The timeline is very aggressive. In the community, of course, we feel like we've been working on this for 5 years, but we are waiting for USDA approval for the construction of the project. The timeline was set such that we could bid and put the infrastructure in this year. So the Business Council timeline isn't that aggressive, but our USDA grant is probably more aggressive than it needs to be. We anticipate USDA to give us information later this summer. So we will miss that construction season probably for this year. And it's more likely that we would start next spring and the facility would be built and habitable in 2024. But that's a USDA timeline. The actual lot timeline here for infrastructure is reasonable.
Thank you.
Thank you.
Thank you, Madam Auditor. Any other questions? Any other questions? Hearing none. What's the pleasure of the board?
Mr. Chairman,
Madam Auditor.
I would move that we approve a community readiness grant to the city of Lander in the amount of $889,105.
Second, Mr. Chairman.
It's been moved by the auditor, supported by the treasurer. Any discussion? Hearing none, all in favor signify by saying aye.
Aye.
That motion carries. Congratulations. Thank you. Ms. Reed.
Thank you, Governor. Our next project comes from the City of Newcastle. The City of Newcastle requests an $18,750 planning grant to determine the feasibility of a public gathering space called Heritage Park. Heritage Park will host activities such as the locals farmers market, community events, and be a home for the Veterans Memorial. The proposed site is located at 1401 Washington Boulevard, which is at the intersections of Highways 16 and 85. The community envisions that this location will be a welcoming stop for travelers and further attract visitors into their downtown area. The site is currently undeveloped and will be donated to the city by Pinnacle Bank if the planning grant is approved. And that site is valued at approximately $250,000. The community is dedicated to raise funds needed for the project completion through local sponsorships and other grant opportunities. The city of Newcastle has the funds to operate and maintain the project and will provide their public works staff to maintain the property. The community does have a history of completing projects utilizing community involvement and sponsorships, including their Stampede Street Historical Project, Project Play It Safe at Dow Park, some murals downtown, bike path, and other improvements to the Weston County Fairgrounds. Pinnacle Bank has committed to donating the land, and that leverages BRC funds at a 13-to-1 ratio. Additionally, the Newcastle Veterans Memorial Group has already begun fundraising for the home of their memorial, and the University of Wyoming Extension sees an opportunity for the promotion of wellness and nutrition with a recreation area and enhanced farmers market. The proposed scope of work for this project will include looking at the existing infrastructure and what will be needed for that, including a detailed cost analysis and including public involvement. Our board of directors does recommend funding as requested, and I'm happy to answer any questions.
Thank you, Ms. Reed. From the board, are there any questions for Ms. Reed or the Business Council? I don't see any. Thank you. Mr. Bump, do we have anyone from the community that would like to address the board?
Mr. Chairman, Dave Ehlers.
Mr. Ehlers, we'll recognize you. Thank you. You may be on mute.
There we go. Can you hear us from Newcastle?
We sure can.
Wonderful. Good morning, Mr. Chairman and board, and thank you for your time. My name is Dave Ehlers. I am a member of the steering committee for the Heritage Park project here in Newcastle. And we certainly want to thank you for your time today. And we specifically want to thank Brandy and all the staff for helping us out. They've been a wealth of information. The Heritage Park project is what we feel is just a starting project for a lot of economic development. We're hoping for Newcastle. And it is imperative, I think, that we have this feasibility study for us to use that as a blueprint on moving forward for this particular project, but then also other economical development projects as we move forward as well. As mentioned, we feel that there are several travelers. We're our corridor that goes directly from Denver up into the Black Hills area. And we feel that there are a lot of travelers that come by our community without pausing. And we want to have proof, and this feasibility study certainly will aid in that. That will help us, give us, again, the blueprints to move forward for this particular project, and then use that information for future economical projects as well. We are committed. We have a strong steering committee, a champion committee that would like to see this through. And we appreciate your time, and we're here to answer any questions you possibly might have about our project.
Thank you, Mr. Ehlers. Are there any questions from the board? Are there any questions? Hearing none, thank you, Mr. Ehlers. The superintendent and I were up in your lovely community not long ago. And it's exciting that you're going to be catching some folks as they come by. And just wanted to wish you well. Hopefully with this vote, that'll help you get underway.
Thank you.
What's the pleasure of the board?
Mr. Chairman.
Mr. Treasurer.
Mr. Chairman, I would move for the approval of this grant for the city of Newcastle. But you usually don't see quite as much community involvement in a match like this. And I think it's a really good, truly seed money project that could hopefully blossom into something that will get people to take a pause and take a look at the community in Newcastle and spend a little more time there. So I would ask for the committee's favorable consideration.
Thank you. The motion has been made by the treasurer. Is there support?
Second.
It's been seconded by the secretary. Any discussion? Hearing none, all in favor signify by saying aye.
Aye.
That motion carries unanimously. Thank you. Congratulations. Ms. Reed.
Thank you, Governor. Our next project comes from the City of Rollins. The City of Rollins requests a $50,000 planning grant to develop a 5-year economic development plan for their community. This plan will outline the economic vision, mission, and goals of the community, outline economic strategies and specific actions to be taken, align with the 2021 City of Rollins strategic plan, and help citizens, businesses, and local partners to understand and work towards the economic priorities of the community. City leadership has expressed interest in developing the economy of Rollins. They have created an economic development department and hired a team that will implement the strategies identified in the proposed plan. They have a new economic development director in the city. They have a new city manager, and they've recently hired a city grant writer to help them implement what comes out of this plan. And each of these individuals will be integral to the completion and implementation of this. The city did complete a strategic plan in 2021 and identified economic development as one of their top priorities. They also see an opportunity to capitalize on their geographical location, that their I-80 business route goes directly through downtown Rollins. Finally, the last time that the city went through an economic and community development plan was 2012. So that plan is 10 years old. And so it's really just a good time for the community to look at what they need to do going forward. The proposed scope of work will include a needs assessment, creation of a citizen-driven advisory panel, and monthly meetings. And then the end product will produce a roadmap and a strategy for things like recruiting or expanding businesses, attracting employees, diversifying the economy, attracting those tourism dollars, and providing opportunities to keep youth from leaving the community. The community does anticipate the final report will provide policies and procedures, and they anticipate it being completed by March of 2023. Our Business Council Board of Directors does recommend funding as requested, and I'm happy to answer any questions, and I believe I saw that there are some community members on as well.
Thank you, Ms. Reed. Any questions from Ms. Reed? Any questions? I hear none. With that, Mr. Bump, if anyone wants to raise their hand, we'd certainly love to hear from them.
In the room.
Oh, in the room. I'm sorry. I'm staring at my TV. Yes, please come up. Good to see you. Thanks for coming here.
And we're just so excited about this opportunity. Like you said, we have a whole new staff on board for economic development, and we're just excited to get going. This would be a citizen-driven plan comprised of citizen members that meet monthly to identify the needs in the community, address the community as a whole, identify future economic opportunities. And the main thing that we're focusing on is we have millions of people passing through Rollins every year. And we want to figure out how to get those people off I-80 and come spend their tourism dollars and play and work and stay in Rollins and have a good time there. So we're really looking for this grant to give us some ideas and some directions. The other thing is we do see, like many Wyoming towns, a lot of our younger generation looking outside of Rollins for a place to settle their families. And that has a lot to do with our oil economy and things like that. But we really want to look at industries that we could bring in that will retain that younger generation and provide opportunities for them to raise their family in Rollins like so many people have been blessed to do. So.
Well, thank you. Are there any questions? I do have one, but Auditor, I'll recognize you first.
Mr. Chairman, thank you for driving over.
Oh, sure.
Will this plan, I know that Rollins in particular is really struggling with housing. Will this plan address that all or have some synergy with anything regarding housing?
Absolutely. You know, the plan is just in the beginning stages, but we did do a strategic plan last year. And one of the main things identified in that under our economic development plan is quality of life. And the first thing we've identified on that is affordable housing to make it possible for people to live and work there. Yes. So I'm confident that that will be a big part of our plan and the direction that we're moving to get more affordable housing in Rollins. Absolutely. Thank you. Yes.
Thanks, Madam Auditor. My question, I noticed that one of your partners is the town of Sinclair, and I'm just curious how that works together. I know both communities are closely tied, but
Well, we've been really blessed to have the Sinclair Oil Refinery support us in a lot of our endeavors. They do a lot of community works with us. And I think the reason for that is we're just, I think we're like 6 miles apart.
Right.
I only moved here a couple months ago, so I'm still learning, but the majority of workers that work at the Sinclair Oil Refinery actually live in Rollins. Sinclair is pretty little, and so most of the people, their homes and their families are in Rollins. And so we just have partnered together pretty much on everything that involves their employees, and that makes up a big majority of our population.
well, fantastic. And the reason I ask is that you have the Parco Theater and all that wonderful stuff
Right.
in Sinclair, and what a wonderful treasure that is. So
Yeah, we've been really blessed to work with their mayor closely. So, yes.
great.
All right. Any other questions?
Yeah, Mr. Chairman.
Yeah, Mr. Treasurer.
I guess I'd encourage you to take a look at some of your zoning laws and stuff, especially in affordable housing and different types of construction and manufacturing that's out there. There's new technologies that will appreciably reduce the cost of different types of affordable housing. I won't go into it now, but one of the biggest hurdles is archaic zoning laws that prohibit new types of manufacturing.
Okay. And in our strategic plan, we did identify looking at business-friendly ordinances and re-looking at zoning laws. So I know that's on the plan for our city council moving forward. That's something that's been identified in our strategic plan. So I appreciate you calling attention to that.
Great, thank you.
Great. All righty.
Thank you, Ms. Hammond.
Thank you.
Appreciate it. Dan, I see we have a hand, or it looks like we have a hand up.
Mr. Chairman, Sean Metcalf.
Thank you. Mr. Metcalf,
Hi, can you hear me?
we sure can.
Awesome. I just wanted to thank Ms. Reed, also Andrew Hammond for their great summaries. And I just want to let you know again how excited we are about economic development in the city of Rollins. Like Andrea said, we just have so much potential here on I-80, and we really just need a little bit more direction through this plan to start making the best decisions moving forward. So I just want to thank the board for their consideration today.
Thank you, Mr. Metcalf. Any questions from Mr. Metcalf? Thank you for joining us. It doesn't appear like there are any questions. So thanks again, Mr. Metcalf and Ms. Hammond. What's the pleasure of the board on this item? Mr. Secretary.
Mr. Chairman, I would move that the board approve the City of Rollins planning grant application amount of $50,000 for their economic development plan.
Thank you. Been moved by the secretary. Is there support? Second. It's been seconded by the auditor. Any discussion? Hearing none, all in favor signify by saying aye.
Aye.
That motion carries unanimously. Thank you. Ms. Reed, is there another?
Yes, there's one more project, Governor. Thank you. The final project comes from Sheridan. The Sheridan Economic and Educational Development Authority, or SEDA, requests a $20,000 planning grant to evaluate 3 to 4 potential sites for a continuation of the high-tech park concept. The first phase of the Sheridan High-Tech Park has been one of the community's most successful economic development efforts. The 43.5-acre park currently contains 3 businesses that employ approximately 300 residents in light manufacturing and R&D occupations. Occupants of the tech park include Kennan, Weatherby, and Vacutech. SEDA's history of implementing projects is well established. The initial Sheridan High-Tech Park emerged from a master plan process and feasibility study. They have also completed past funding packages to develop projects. SEDA anticipates that if the feasibility study shows development of phase 2 should occur, they will complete a similar funding package with multiple sources, and they have already begun to identify what those potential sources could be. The proposed scope of work for this project will include identifying strategic parcels of land, evaluating each site in terms of developable land availability, potential opportunities or obstacles to development, environmental concerns, rough costs to develop to site to project ready status. Then they will select a preferred site. That will also include preparing a conceptual plan and engineering costs for initial development, as well as identifying potential resources and funding opportunities. The initial Sheridan High Tech Park was identified in the North Main Master Plan process and further developed with that site-specific feasibility study. The proposed Phase 2 feasibility assessment would give the community an opportunity to replicate the success of Phase 1, as well as provide future project-ready sites for business recruitment or expansion. The planning needs for Phase 2 were also identified in a CEDA board strategic planning process in 2022. And our board of directors does recommend funding as requested. I'm happy to answer any questions you may have.
Thank you, Ms. Reed. Are there any questions for Ms. Reed? Hearing none. Is there anyone from CEDA or Sheridan that would like to address the board? Mr. Bump.
Mr. Chairman, Robert Briggs.
Wonderful. Mr. Briggs, we look forward to hearing from you.
Mr. Chair, thank you. I just wanted to thank the board for the continuing support of the Sheridan community and our economic development efforts and initiatives. We're really just looking to replicate the success that we've seen in the past with the High Tech Business Park, and I'm happy to answer any questions.
Thank you. Are there any questions for Mr. Briggs? Any questions? Looks like you got off easy, Mr. Briggs.
Thank you.
So with that, let me ask, what's the pleasure of the board?
Mr. Chairman,
Madam Auditor, sorry.
Miss Auditor's okay. Auditor lady.
Yeah.
I would move approval of a $20,000 planning grant to CEDA for the High Tech Park Phase 2 feasibility study.
Thank you. The motion's been made by the auditor. Is there a second?
Yes.
There's a second by the superintendent. Any discussion? Hearing none. All in favor signify by saying aye.
Aye.
Motion carries. Thank you. Ms. Reed, are there other matters to come before us?
I don't have anything else for you, Governor. Thank you.
Thank you, Ms. Reed. Director Durrell.
Thank you, Governor, and members of the board, and for your work today and helping really, again, build those resilient communities here in Wyoming. These planning grants, while the dollar amounts may not seem giant or anything like that, make a big difference because they get alignment within the community. They really help people understand their assets that they have today and that they need to move forward. And I think closely align with the economic development strategy of the state. So thank you for your work this morning and over the course of the year. Thank you.
Thank you, Josh. Thanks to all of you and your board for your work, and appreciate it. With that, Madam Director, I'll turn it back to you.
Mr. Chairman, the next item on the agenda is A1, which is approval of the February 3rd, 2022 State Loan and Investment Board meeting minutes.
Get our books organized and thank you. You've heard the director's suggestion. Are there any comments, corrections, discussion items with regard to the minutes from
February.
I'm sorry, February 3rd, sorry. Any corrections, any comments? If not, I would entertain a motion.
Mr. Chairman, move to approve the minutes from our February 3rd, 2022 Slib meeting.
Madam Auditor, thank you for that motion. Is there a second? It's been seconded by the secretary. Is there any discussion? Hearing none, all in favor signify by saying aye.
Aye.
The minutes have passed. Thank you.
Mr. Chairman, we now move to letter B, the reports. We have provided the board with the usual reports behind tab B. We do not have anything to add at this time, but we would stand for any questions of the board.
Members of the board, are there any questions from the reports behind tab B? Any questions? Hearing none. Madam Director, you can proceed.
Mr. Chairman, that brings us to the D matters, which are the state investment matters, and I would yield the floor to Mr. Treasurer.
Thank you. Mr. Treasurer.
Thank you, Mr. Chairman. Mr. Chairman, thank you, Mr. Chairman. The first issue up for our purview here is the University of Wyoming Student Portfolio Management Program update. That is going to be handled by CIO Patrick Fleming. Patrick.
Mr. Chairman, Treasurer, thank you. My name is Patrick Fleming. I'm CIO for the Treasurer's Office. And today we have a few of the University of Wyoming students that will come over and present to you today and tell you a little bit about their background and what they're doing. Philip Trike, who runs the program, is at a conference today. So Professor Choi was able to come over. Professor Choi was professor at UW when I was over there and was instrumental in helping me run the program. She's just a wonderful, wonderful person, and we're very lucky to have her over there doing what she's doing. She's a former chair of the accounting and finance department. And with that, I will introduce Professor Choi.
Thanks. And while you're coming up, I just wanted to, for the superintendent, this is his first formal meeting as a member of our board, and would let him know that this is unique for Wyoming. We actually, you can maybe, Professor Choi, kind of go back a little bit through the history, but it is now over 2 decades old, I think, that the state of Wyoming allows students at the University of Wyoming to actually trade, not model portfolios, but actually invest state dollars for the university. So with that, Professor Choi, welcome and nice to see you.
Good morning, everyone. Thank you, Governor. Thank you, board of the members of the board. Thank you so much for giving us, specifically the students, this opportunity. I've been at the university for 13 years, and I know that this program has been around before I got there. So I don't have the exact dates, but it's been really instrumental for the finance department. And I would like to have all of our students introduce themselves. Thank you.
My name is Cross True. I'm a senior in electrical engineering at the University of Wyoming with a minor in finance. This course in particular is one I've been looking forward to taking for a long time. I knew Professor Trike kind of through my dad, and so then found out about the ability to be able to get actual experience trading and managing a portfolio. So that was something I was really excited about. And so this semester was very excited to be able to take this course. I'm a Casper, Wyoming native, so grew up in Wyoming my entire life. And just really enjoyed this course so far.
Thank you, Governor and the board. It's an honor to be here, really. I'm a senior at the University of Wyoming, a trustees scholar, double majored in finance and accounting.
Could you identify yourself as well?
Yes, I am Cole Hopkins. Nice to meet you guys. This program has really provided me with a lot of information that I didn't think was really possible. For us to be able to trade, like you said, not with these model portfolios, but with actual money that's tangible, has really given me an idea of how important this is. And I don't know, it's just great to be here, honestly.
Thanks very much.
Yeah, my name is Shane Forey. I'm originally from Laramie, Wyoming, and I am majored in finance with a minor in honors. I just second everything that Cross and Cole said. This is a great opportunity. It really, you learn a lot in school, but never do you get to apply it really. And this is a great opportunity to do that. So thank you for that opportunity.
Thank you. I at the risk of putting you on the spot, have you got particular investment that you've looked at or a particular approach you've taken?
The approach that I've taken based on the career field that I want to go in is more defense related and DoD related. So Raytheon, Lockheed, none of that has really worked out in spite of the Ukraine-Russia conflict. However, there are other investments that are doing very well, such as UAN and Occidentals. So
Patience, patience. Thanks. Cole or Cross, you want to give us an idea of what you've been looking at?
Yeah, so a few that we've been looking at, like you mentioned, UAN's a huge one, especially with the supply chain crises that we're facing with Russia and Ukraine, inflation as well. It's really pushing the prices of fertilizers and other petroleum-related products up. We're seeing a lot of growth, especially in the energy sector, but it's highly volatile as well. Something to keep an eye on. We've added a few of those to our portfolio. See some other good ones. Consumer staples is a huge one, especially since, not to alarm anybody, but there is some sign of a stagflated economy. Consumer staples are going to go through the roof, we think. We've been keeping a close eye on those as well.
Fantastic.
Yeah, I would just say, to follow up with that, I'm much more interested in the energy sector. Most of my experience has been in oil and gas. And so it's been pretty cool because we were able to take a position in RIG, which is a offshore oil drilling company. The only one that really survived COVID and didn't have to file for bankruptcy. And so as we've seen volatility in Russia and oil prices go through the roof, that position has done very well. And then I've also been looking into presenting Chevron to the portfolio because it has a very high dividend, and the cash on cash return has been very impressive for that company based on the analysis that I've done. So I've been much more interested in the energy sector as we've seen what's happened in Ukraine and our global economy really turning back towards oil, which is, I think, a very exciting thing for the state as well.
Thank you. Mr. Fleming.
Governor, would it be possible to get a picture with the board and the students and Dr. Choi?
Absolutely.
Thank you.
Well, I thank you all for your presentation, and it is truly exciting and kind of fun. Patrick, I want to recognize the fact that you kind of revamped this program. It was it was sort of fun to do, but it was not very impressive until you got there and actually put some stuff in. I guess Professor Trike has taken it even further. So congrats and thanks.
Thank you.
Okay. We'll take a break for photos.
This will be a first for us. We haven't done
Yeah,
that.
so when they come around, you want to go in front.
Behind or
Yeah,
front?
probably.
I think
Okay.
we better go.
So you guys, now some of you are going to stay in the investment bracket.
I'll point where you're supposed to look, because I'm bossy like that. Oh, we need somebody. Okay. Look here first. All right. Okay, all right, thank you.
So did you guys have a competition that you presented at recently? No. We haven't had that. There used to be one back before.
Yeah.
Well, that's okay. Bias is all right as long as it's correct.
Perfect.
Thank you.
Mr. Chairman, I believe a couple of other schools have followed our lead. I know CSU had a grant and they're doing it as well. They do.
Copy. Thank you. Thank you, Mr. Treasurer, for that opportunity. And I'll throw it back to you.
All right, so now we're going to get into the hiring of a private credit investment manager, BlackRock Global Credit Opportunities Fund 2. I think everybody has been briefed on this, but we'll have this presented. Patrick will take the lead, and I think you have Caleb there to get into the details.
Mr. Chairman, Mr. Treasurer, thank you very much. Yes, before we get into the presentation, just so the audience knows, this is not an asset class or a manager that we are just talking about right now and voting upon. We've done numerous hours of due diligence. Previously, we've met with all of the Slib members before this meeting and gone over all the material, and then we'll have the presentation. So it has been an extensive process. IFC has been an integral part as well, and Mr. Tom Chapman is with us today to comment on the IFC's view of the manager as well. One thing I want to point out before we start is one of the concerns that was brought up in your board matters. You're going to see on page 4 with the RVK report that shows the percentile performance of this fund. And one of the things that I just wanted to highlight is that this index is a very, very poor index and is not really representative of what we are looking at here. So when we're looking at it, this is a Preqin index that is comprised of 95 managers. And of those managers, the asset classes within this component that they look at would be senior debt, unitranche, distressed, special situation, mezzanine, and even venture. So it's really a catch-all of everything. If you were to look at it, it's encompassing equity, it's encompassing very senior debt, which we're looking at today, which comprises the bulk of their portfolio. But it's a very poor index, but it's the best of what we have, so that's what you have to use it. So if you see on page 4, the quartiles, it shows that BlackRock would be a third and second quartile fund with their IRRs and their MOIC, the multiple on invested capital, the return. But it is that we're comparing apples and oranges. So what we did is, Caleb and I, we really deconstructed the Preqin index to really show what it was. And there are 95 funds, as I mentioned, within this. And of that, 51 of those 95 are senior or senior subordinated or subordinated debt funds. And then when you look at that, how many of those funds would actually be investable? So we cut it down further to say, okay, what about the funds that had assets, AUM of 500 million and above, because we really couldn't invest any more than that. And there are 26 of those 95 that would do that, that would have that criteria. And then if you go further, how many of those funds actually have an IRR or a multiple, a MOIC above 1.2, similar to what the BlackRock fund, and there's only 3 funds. So as we've talked about before, that you can't compare apples and oranges on this. So if you're really looking at it, it's just one of those situations which we've talked about before, but there really is not a good comparable index to replicate this. And as far as our comparable or what we're benched against, we don't even use this index because it's so bad. We use the aggregate plus a percentage, 4% above or what have you, because as we've talked about, it's just very difficult. So
Patrick, is Preqin also self-reported?
I do not know. Do you know they are? Yes.
Yeah. Okay.
One other factor which is interesting when we're going over this is that the reporting dates of these 95 managers, some of them go back to December of 2020 and others are December of 21. So even with the 95 that you have, you don't even have it consistent. In December of 2020, 10-year interest rates were at 0.91%. Now we're 2.6. So it's not only is the universe completely skewed, but the reporting dates aren't even the same. So just that was one thing that was just brought up. And so I just wanted to highlight, and we really wanted to break down that it's not comparable to say that this is a third or second quartile fund. And then it just doesn't fit into this fund. The BlackRock fund fits into a multitude of different areas that Caleb has mentioned before. So with that, Mr. Chairman, I would like to have Tom Chapman speak about the IFC's questions. And this was one of the big questions that the IFC had, but I would like to bring him on to be able to comment per your request of having an IFC member discuss with the board their concerns and what they were looking at when we presented this fund.
Thank you, Mr. Fleming. Mr. Chapman, good to see you. It looks like you're someplace snowy.
Unfortunately, it's a fake background, but anyway, that's what Jackson can look like on a really nice day. Thank you, members of the committee. I'm Tom Chapman, member of the Investment Funds Committee. It's a pleasure to be here. I don't really want to give out the punchlines too much because I think Caleb and Patrick will present sort of the merits of this fund. And I know you all have had some meetings already to discuss this fund. But as Patrick said, sort of our meeting when we talked about BlackRock, clearly all the members know the firm BlackRock very well. And it's a very, very large, very deep resourced investment firm. The question really is sort of why this fund? And, we kind of have the same, I guess, discussions on the retirement system where we're kind of entering into a new asset class. And this is, our first sort of foray into private credit. And frankly, BlackRock actually does make a great beachhead and a good anchor tenant as far as being that manager to do it because of their resources, because of their deal sourcing. It probably makes a lot of sense. I think if we were further down the curve, I think members of the IFC would agree that we probably want to try to look for more niche type sort of private credit folks, which again, we're going to be allocating to them and we will be doing that. We really, as Caleb points out in his memos, the investment universe, the sourcing and access of BlackRock is really unique, frankly, because of their size and their global reach. In short, we talked a little bit about the risks, and there is definitely concern about the shortness of the track record of this group. We're also a little bit concerned with the key man risk, frankly. But again, I would also caution you that we sort of have this concern with just about every manager, so to speak, in some way, shape, or form. So it's not really, I would say it's fairly commoditized as far as that risk. And then the last point that we also discussed a little bit, talking about, frankly, we've seen in the press a lot about ESG, and I'm not talking about European energy security and guns. There is a little bit of a concern of headline risk, frankly, of a big giant manager like BlackRock in terms of the ESG. So I just want to caution the committee on that. But other than that, again, the committee voted unanimously in favor of this manager, and I stand for any questions, or Patrick, please, anything that I left out.
Let me stop there and see. Are there any questions? Mr. Superintendent.
Mr. Chairman, my quick question would be, what is the shortness of the track record? How short is it?
So, and again, Mr. Chairman, Mr. Superintendent, the track record, this is their second fund. And again, I think the team will get into more of the details of how much realizations, but there's always a concern in illiquid funds like this about, they make the investments and then what have they really been able to pull out or realize? And so far, we haven't seen a lot of realizations yet. Combination of, again, sort of early days, but at the same time also, we're not really sure. So that's always sort of a bit of a risk factor, frankly. But Patrick, I don't know if you want to make any comments about that.
Mr. Chairman, Tom, yes, thank you. The fund started in 2016. And also, just to reiterate, the manager, Dave Turcano, was involved in a long-short portion of a credit hedge fund at BlackRock since 2012, and previous manager since 2007 with a very well-respected fund called Centerbridge. And also, when we look at managers, we try to do as much due diligence as we can. And also, I have a very close colleague at BlackRock for over 10 years, who's a personal friend for over 35 years. And so we always just kind of try to triangulate and check, about this person, because everyone will say, oh, this person is the best there is. But it really, he really is a very well-respected person within the firm. And also they have a great regard for him internally and externally as well. So not only have we done the work through RBK, by the way, RBK, this is one of RBK's top 5 best private credit funds as well. So we've gone through all that due diligence as well. So if that answers your question, Mr. Superintendent.
Thanks. Other questions? Tom, one question I have, and possibly Patrick or Caleb, BlackRock has made this statement about fossil fuels and climate change, and we're aware of that. My understanding is that the way Larry Fink approached this, the chair, was that he took a good long look at what was originally called SASB, which I now think has gone to IFRS, which is sort of the International Fund for Renewable Standards and so on and so forth. In those criteria, it is my understanding they have not given an absolute prohibition against fossil fuels. What they have done is asked folks to take a look at the challenges that they present and to talk about what they're doing to rectify those. Are you aware of that? Do you know? And Tom, I don't know if this I didn't have a chance to talk to either of you, but BlackRock had a big part to do with SASB, which has now been sort of incorporated into that sort of global standard. And I think when we all talked with them, they were saying they were looking at a variety of them. But again, not an absolute prohibition, simply how are you addressing climate change? Is that a fair statement?
Mr. Chairman, I'm not familiar with that part of what they were doing, but we do have Rajiv here from BlackRock who would be able to comment on that. The one area that we have talked about before is Chairman Fink. He has made those comments or what have you, but the other aspect of it is to actually see what they're actually doing. And if you look at every major fossil fuel producing company that is traded, large cap company that's traded on the exchange, BlackRock is either the number 1 or number 2 largest holder of those firms. And I believe it's over 280 billion. Rajiv sent me the breakdown on how much money they actually have invested. So when you actually look at what they're doing versus some of the concern, they are a major investor in all mineral and fossil fuel companies throughout the world.
Great, thank you. Tom.
Yeah, Mr. Chairman, that investment's in both equity and bonds. So they put the money in the bond market also on energy companies.
Thank you, Mr. Treasurer. Tom, one question that comes up from time to time, and BlackRock certainly is a very, very large firm. Sometimes large firms don't have the necessary performance. Everybody invests in them because they're big, not necessarily because they outperform. And that may be a question that we have here. I just wanted you to have a chance to address that.
Yeah, thank you, Mr. Chair, members of the committee. No, that is true. I mean, listen, there's no question that there are pros and cons of investing in a very large investment management firm. I guess what I would say to that, Mr. Chair, is given again that we're now starting, a new program as far as private credit, that this really does give us a bit of an advantage of getting a really good global scope in terms of investments because again of their reach. it's really hard starting to start populating managers, when you start thinking about going in sort of niche players, et cetera, et cetera. But this is a really good way to kind of have a bit of a shotgun approach. You're absolutely right, though, that there is no question that because generally of the size of the firms, right, that those returns can be drawn down. And generally most, I would say, funds like us, try to get more and look for people that specialize in particular areas. But I think, again, as a sort of beachhead approach, like that BlackRock is a good start for this program.
Thank you. Other questions? Well, it looks like Josh Keevan is on, but it looks like somebody else besides Josh. Is it Becky?
Mr. Chairman, it's Becky Gratzinger. I apologize. I took Josh's Zoom link. He was not feeling well last night and asked me to fill in for him today.
Well, thanks. It's good to see you.
Good to see you too.
Mr. Superintendent, Becky is the CEO of RVK and has been involved with our portfolio. She started when she was 1 year old in 1996, right? Something like that?
That's correct.
Nice to meet you, Becky.
Nice to meet you too. Thanks for the opportunity to be here today.
So are there comments? It looks like you froze for a second, but do you have comments on this as well, Becky?
Mr. Chairman, we'd just like to echo the points that Patrick as well as Tom has made. We do think this, I love the term, Tom, a beachhead investment. We love that idea to start a program. It was one of our best ideas this year. And, one of the things we also like is this avoids the area of the private credit market that is so oversubscribed in just plain vanilla direct lending. That is not this. And so we're excited about starting the program with this initial investment and expect that as the program is built, you'll have a lot of opportunity to look at some bespoke opportunities in private credit, asset-backed and other approaches, but we support this investment as well.
Thanks, Ms. Gratzinger. With that, Patrick, back to you.
Thank you, Mr. Chairman. So before I pass it over to Caleb, this is the first investment, as we mentioned before, with the asset allocation that we talked about. What we are doing is reducing our core bond exposure. As you all know, core bonds have a very low yield. They're getting higher than what they've been in the past recently. But still, when you talk about a 3% there versus an IRR of around 12%, what have you, we're giving up the liquidity, but to gain a significant amount of income. And this will be an ongoing process as we go through. One thing, just so we don't have a confirmation bias, what Caleb does is he looks at all of the managers without consulting RVK, and he comes up with his top list. And then he will consult with RVK, and both of them had BlackRock as one of their top investments. But with that, I'll pass it over to Caleb to introduce BlackRock and also just give a brief overview from his perspective on why this fund makes sense for us.
Thank you, Patrick. Thank you, Mr. Chairman and the board. It's a pleasure to be here today. My name is Caleb Simpson, and I'm an investment officer with the State Treasurer's Office. I'm privileged and pleased to be here today to present BlackRock's Global Credit Opportunities II Fund. And before I kind of dive into some of the distinguishing characteristics of the fund at a high level, before Rajiv and the rest of the BlackRock team go into further detail, I'll touch upon the basic premise and structure and how we are going about constructing the private credit asset class. As Patrick and others have touched upon, this really is a beachhead, to still Mr. Chapman's point, beachhead position in the fund. This will be our first allocation to private credit, which was approved by the board last year. As an alternative to core fixed income as an income generating asset, my first objective is looking for funds with the best risk-adjusted returns. As a private credit investor, I benefit from 10% of upside, doing a bit of hand waving with numbers, and face potentially 100% of downside in these investments. So it's paramount that we look for funds and firms that will return our capital and that will return the state's capital. BlackRock has done an exceptional job of doing that in their first fund, and I have an extraordinary amount of conviction and confidence that they will continue the process and deliver on their stated objectives in Fund 2. As a private credit investor, I'm looking for identifiable collateral. Are there tangible aspects to the investments they're making? If anything were to go wrong, that we could sell and redeem our capital. I'm looking for cash flow priority. Are these truly private credit investments, or are these equity investments masquerading as private credit investments? I'm looking for contractual protections. What type of covenants are they embedding in their contracts that they're lending to these particular vehicles? And I'm looking for significant cushion in the case or in the presence of any adversity that the investments may face. So with that, I will be recommending a $150 million investment in Global Credit Opportunities 2. It's a credit strategy that seeks to capture attractive situations across the credit spectrum, particularly in senior secured and in senior credit, as evidenced by Fund 1 having 74% of the fund in senior secured or senior credit. Additionally, as a building block to our private credit portfolio, it's presenting and offering broad diversification across geography, targeting approximately 2/3 exposure in North America, with the remaining in Europe and EMEA countries, as well as diversification across asset types and lending strategies. So this is really providing a unique opportunity to diversify our return streams and provide a high current income for the state. Fund 1, which funded in 2016, really has truly impressive risk-adjusted returns given the type of vehicles and individual investments they're lending to. Fund 1, as of 12/31, had approximately a 12% IRR, net IRR, and a MOIC of 1.21, all while maintaining the defensive characteristics I led off with: identifiable collateral, cash flow priority, strong contractual covenants, and so on. BlackRock really truly does provide unique sourcing access. Not only do they have an incredible team, but they have a broad capital markets group and alternatives platform that has nearly 300 members. Fund 1 had nearly 50% of the deals sourced from the alternatives platform, and BlackRock is uniquely positioned to see unparalleled deal flow relative to their peers. In addition, the fund has very attractive terms. And finally, BlackRock has an extraordinary amount of resources dedicated to risk, as well as legal professionals. And so with that, I'll take a moment to introduce Rajiv Ghia. He is going to introduce BlackRock's platform and his colleagues that are on the TV screens. Thank you, Rajiv.
Thank you, Caleb. Good morning, committee members. Thank you for having me here today. My name is Rajiv Ghia, and I'm the relationship manager here at BlackRock covering the state of Wyoming. With me, I have two colleagues on the Zoom link right now. I have Mark McComb, who's BlackRock's Chief Client Officer. Mark oversees all the global client segments at BlackRock. And I also have Dave Turcano. Dave oversees BlackRock Opportunistic Credit Platform, as well as the lead PM and chairman of the investment committee for GCO, our Global Credit Opportunities Fund. First of all, I want to thank the committee for having us here to present on GCO. We are very much honored to be considered for this investment. For those of you that don't know BlackRock, BlackRock is a global asset manager. We have offices based in 35 countries around the globe. We have over 18,000 employees, and we serve clients in over 100 countries. We look to create a wide variety of investment solutions to meet our clients' needs. These investment solutions include index products, active products, multi-asset strategies, alternative investments, cash management, and financial markets advisory. Our relationship with the state goes back through to 2019, when the state made their first investment with BlackRock. Since then, they've added a second investment in an active equity fund, as well as added our risk management capabilities in Aladdin. And with that, I want to hand it over to Mark to say a few words.
Yeah, good morning, everybody. Mark McComb here. Thank you, Rajiv, and members of the board. Thank you very much for giving us the opportunity to come and say hello and present our capabilities. As Rajiv mentioned, I serve as BlackRock's Chief Client Officer. That means that I spend a lot of time really focusing on our clients and what it is that the issues that they're trying to solve, as well as the challenges that we're facing. And I think, we can all agree that 2022, after a very tough 2-year pandemic, is continuing to serve some pretty significant global challenges, not least of which, of course, is the tragedy unfolding in Europe. This is a time when I think partnership really couldn't be more important as we navigate these incredibly difficult and challenging markets. I wanted you to know that the partnership that we've been building with the state of Wyoming is something we're incredibly proud of. We have a lot of resources dedicated to helping you serve the members that you have as part of your overall plan. And so, as we think about the way forward, we're extremely proud of our credit platform within our broader alternatives business that I know you have made investments in previously. And so, Dave and I, we're kind of joined at the hip. We work, very, very closely on all of our client mandates that we have. And we're excited that we'll be able to grow the partnership with you and make sure that you're receiving the best possible outcome for your members. So with that, I know this is an interactive, and obviously very happy to take any questions at any point in time, but I was going to pass the mic over to Dave to talk more specifically about the credit opportunities capability.
Fantastic. Well, thanks, Mark, and members of the committee. As a quick introduction, I'm Dave Turcano. I'm the head of our opportunistic credit business here at BlackRock and the chairman of the investment committee for global credit opportunities. Obviously very excited to present the fund to you today. And I'm obviously open to any questions as I go through kind of the highlights of the fund from our perspective. Global credit opportunities is the second vintage of the strategy. It's a strategy which seeks to generate mid-teen returns gross without the use of leverage in an all-weather strategy. We're trying to finance companies when capital markets close, when traditional middle market lending won't move up the risk curve without taking commensurate risk. And if you look at how Fund 1 performed, I think some of the stats were highlighted. It's a mid-teen gross return, low double-digit nets with largely senior or senior secured risk. That is what Fund 1 is doing. That is what Fund 2 will seek to accomplish as well. And we do that not just with a dedicated team, which I'll touch on, but also with the scale, scope, and breadth of BlackRock and its credit business. We think it is a structural advantage when it comes to underwriting risk, managing risk, largely through the sourcing of assets. And we'll talk about that as we go through how the strategy capitalizes not just on the relationships of the team, but also on the broader platform. I know there are some slides that are provided in the deck. I won't page flip other than a reference to a couple of points. And maybe just touching very quickly on page 4, after the highlights on page 3, our team is embedded within our global credit platform that's referenced on page 4. That's a $170 billion platform, 240 individuals globally. That matters in our ability to source opportunities on a global basis. This is a global strategy. It allows us to move to opportunity and allows us to leverage resources in addition to the dedicated team if an industry opportunity presents itself that we find compelling. Moving to the next slide, just to provide context on page 5, opportunistic, the way we think about the universe of credit is across risk and return. You should view our strategy as sitting between traditional middle market credit, middle market lending strategies, and down to the left of traditional distressed. Middle market credit, increasingly, it's becoming competitive. It's becoming more sponsor focused. It's looking for a lower gross return than opportunistic targets. And what's important about distressed is our strategy is not predicated on a default environment in order to deploy capital. That 15% gross return through senior secured risk at roughly 3/4 of the portfolio, we believe is differentiated when you look at it through the lens of risk and return. Moving to the next page, To touch on the team, this is important. You have a dedicated team managing your strategy, a dedicated team of 24 investment professionals supported by a deep bench of product strategy, risk, and legal and compliance. The team comes with experience, north of 20 years of experience on average. It's overseen by an investment committee that I chair that is populated with senior members of our credit team and the head of our private equity partners business as well. That matters. A lot of times our conversations come down to why isn't private credit the right solution and why isn't private equity a financing source for this company as it's having challenges. To have that senior input at the investment committee allows us to make, I believe, better decisions. And any investment that goes into the portfolio has to have a majority consent amongst the investment committee members. Down in the lower left, origination. Origination is the name of the game. It's an investment that BlackRock continues to grow. That's not just across capital markets, that's across various sourcing engines in addition to the dedicated team. We'll talk about that in a couple pages when we talk about pipeline. It's critical that you have dispersed sourcing advantages. On the following page, at a very high level, the strategy really allocates across 4 principal areas. The first 2 primary markets, we're directly negotiating with borrowers when they have challenges. Maybe they are engaged in project finance and banks have pulled out of that market. Maybe they are trying to make an acquisition and direct lending is not the solution. It's really, providing capital, what we call transformative capital, as companies are dealing with a challenge of having reduced access to forms of capital. Fund 1 was just inside of 70% allocated to capital solutions. We target between 40 to 60% for the second vintage, but again, the same strategy. The second area is restructuring. It's directly negotiating with companies, avoiding or trying to operate within the confines of a bankruptcy. It's not an area of significant focus in Fund 1, but in an area of increased distress, it's an area the team will focus on. And then the last 2, secondary market and niche, are areas of focus for the team. Secondary market activity, if markets dislocate, the ability to buy securities in the market or go to banks and be a solution provider to buy exposure off their balance sheets when they get stuck having made commitments that they can't sell into the secondary market. The next point I'll make is what I was referencing earlier, which is really, how does the team create a competitive advantage? It does it through its underwriting. It does it through relationships. It does it through industry focus, but it does it by seeing a lot of transactions and being very selective in the things it chooses to finance. Jumping forward to slide 8, for Fund 1, we looked at just over 1,150 transactions to finance 25. Somewhere between 1 to 3% is our target. We want to be highly selective in the opportunities we choose to finance. The only way to do that is by having very robust sourcing channels. The team at the bottom generated about half of the transactions that made its way into Fund 1, with the balance being the broader firm. I would look at the top of the pie chart when you think about what BlackRock brings to a strategy such as GCO, our capital market sourcing, our alternatives platform. It allows us to see transactions our competitors do not. It allows us to be partners to companies when they have challenges. And it allows us to get up to speed from an underwriting perspective, smarter, faster, quicker than a lot of our competitors. And Fund 1 and Fund 2, as we've started the deployment process, demonstrates that through example. The last point, and I think this was mentioned by Caleb in his opening comments, is at the end of the day, how do you think about generating return without taking commensurate risk? Jumping forward to page 9, just a couple of points. Our underwriting's deep. It's thorough. Sometimes it takes months. It's not weeks. What we're focused on is making sure we're not only generating the types of returns the strategy targets, but we're also protecting the downside. A couple of points I would highlight here, which is critically important, in our opinion, increasingly so given the current environment we believe we're heading into. We are focused on capital markets driving our return, not businesses growing their value. So refinancing is an area of core competence, providing capital when markets are closed, with the ability of companies to generate the return we're looking for when they have access to capital. We go down the left. When you look at structure and pricing, we drive the structure, we drive the pricing of our own deals. We're not buying into syndicated transactions. That allows us to control the pricing and structure of how we choose to lend to companies. What that led to in Fund 1, and it's starting to play out in Fund 2, is 20 of the 25 investments, we were the sole or the lead. What we are increasingly important and focused on in the middle is what I think is lacking in a lot of other parts of the credit market, which is how do you think about downside protection? As referenced earlier, identifiable collateral, the ability to structure lien protections, negotiate documents, put covenants in if businesses don't perform to expectations, the ability to get to the table to make sure that we protect against principal loss. It's critically important so we can return your capital back to the state if things don't go according to plan. That's done through a number of considerations. I would say the two that I would highlight here: the team is an active participant in the companies it finances. We sit on boards. We sit on just inside of 50% of the boards of companies we choose to lend to. It allows us to be smarter. What are the challenges? How do we help a company when they have challenges? And how do we be offensive if an opportunity presents itself? How do we make more money? We allow, by being on the board, the ability to be a partner to companies, to be a partner in that journey. And then the last point, which we believe is ultimately, how do you get your money back? Lending to a company. On average, our portfolio one characteristics saw that exposure generating north of a 15.5% gross return with a loan to value inside of 50%. So businesses would have to be worth half of what we think they're worth before we start getting concerned about impairment. And then on the far right, I won't reference it too much, but when you're providing capital to companies when they have challenges, a lot of times you have the ability to additionally receive equity type returns. We do negotiate for equity. We do it through convertibility. We do it through equity grants. We have the ability, if a business can turn and regrow back into its business plan and generate equity value for its owners, the ability to participate along. And roughly half of the transactions in Fund 1 had equity participation in addition to the core credit return that we were looking to target. So I'll pause there for a second and open it up to any questions that may exist. We're obviously very excited about the opportunity set for Fund 2. The strategy is the same as Fund 1. The pipeline's extremely robust. Environments such as the one we're in, we believe is a fertile ground for the type of strategy we pursue. When companies have to access capital markets, they close quickly. When direct lending goes up in quality, sponsor focused, there is a wide swath of borrowers that are seeking capital and seeking it with certainty that are allowing a strategy such as ours to generate the types of returns we're looking for without commensurate risk.
Thank you, Mr. Tricano and Mr. McComb and Rajiv. Thank you as well. Questions? Mr. Secretary.
Thank you, Mr. Chairman and Mr. Tricano, and thank all of you for being here today with us. So just a quick question. You know, we're opportunistic here in between middle market credit and distressed, and you know, given the potential for higher returns, but also having the potential for the greater risk, could you generally describe your hedging strategies? I know you mentioned, I mean, a lot of things, obviously secured, security, equity participation, those types of things, but just in your particular investments, how do you hedge against this greater potential risk?
Try to answer that question in a couple of ways. It's a long strategy. We are investing into companies on a long basis. So the only hedging that goes on is if we're invested in foreign currency, we hedge back to dollars. So from a classic hedging standpoint, that would be the only financial instrument which would kind of be involved in the hedging process. When we think about hedging to risk, it really has to do where you sit within a capital structure. As referenced, 75% of the exposure in Fund 1 was senior or senior secured. That's important because we set up the capital structure. We really hedge ourselves by priority within capital structure, claim on cash flow, and the ability to financial covenant around business underperformance, where we get concerned about potential risk of impairment. So I think that's really how you should view the strategy from a hedging perspective. I think the other hedge is if markets are not presenting opportunity, we'll be patient in the deployment of your capital. The ability to have a wide sourcing funnel allows you to be very selective. A lot of competing strategies without the sourcing advantages are seeking to deploy. We're seeking to make investments and get overpaid for the risk we take. So those, hopefully that is relevant to the question. We're hedging through structure of our transactions. They have on average double-digit coupons. If we looked at Fund 1 right now, the average coupon would be just inside of 12%. We structure protections through issuing debt at a discount, through call protection, and those are the types of structural considerations that we put into companies as we're trying to be an intermediate capital provider. We're trying not to finance companies over 5 to 7 years. That's another natural hedge. Having a shorter term over which you're looking to finance a company allows you to have more control over what is observable, which is a shorter term perspective that can still generate the types of returns we're looking for without the same risk.
Thank you.
Thank you. Further questions? Further questions? Well, just a general thing. Obviously one of the big concerns for sovereign funds that are funded by basically fossil fuel industry, and there's lots of us. All of us get a little bit concerned when you invest in efforts that are designed to take that production off the table. And so I did want to give you an opportunity, because I know ESG is a compelling force in the investment market at this point. It's also a very popular and somewhat sexy one. But I do think there are responsible ways to look at ESG investing that are accretive, not just destructive. And I guess it strikes me that BlackRock has taken a leadership position in this. And I know, as I mentioned earlier, SASB, and I know it has now combined with the IRRC, and I think there's something Value Reporting Foundation that are trying to derive ESG index so that they can report to investors, generally speaking. I just wanted you to have an opportunity to opine on that. It just seems to me State Street and other big investment firms have made fairly provocative comments about shutting down coal, shutting down oil, and here in Wyoming, obviously those are huge sources of income for us. But we also feel very strongly and have taken a leadership position. I think we are the first state to say we want to be carbon negative. It's not something you can do with renewables alone. So I'm just curious where BlackRock would be on this.
Well, maybe I could come into that. As somebody who grew up in Scotland, the major economic underpinning of that country when I was growing up was the oil and gas industry. And I can tell you that many of my friends and family members and so forth were reliant on that industry. So you're speaking to somebody today who understands the power of the energy industry and what it means for job creation, economic growth, and providing an affordable means of energy supply, which of course is critical to lift people, out of poverty, help emerging markets develop, and so forth. So and of course, I think there couldn't be a greater topic today than energy security, given everything that we're witnessing in Europe. And I won't get started about Europe's energy policies, but I think they leave a lot to be desired, and we're seeing the sort of sharp end of that every day. Let me talk a little bit about BlackRock and its commitment to the energy sector. And you're absolutely right to mention that. We rest always on our principle of being a fiduciary, that our job is kind of twofold. On the one hand, it's to implement strategies according to the mandates that we're provided, that this is not our money, it is entrusted to us. And so when you listen to Dave talk about the investments that he makes, he's conscious every day that he's investing on behalf of his clients. The second point, of course, is for us to highlight and spot trends that are happening. And we've been very clear, and in many of our investments over the years, that we believe that there is an evolution taking place in the energy sector, which is critical to the ongoing and sustained growth, as well as some of the targets that you mentioned that many, if not most, of our clients are looking to put in place. I think the reality of where we stand as an organization is, if you just look at kind of the raw data, we are a deep and have always been a deep investor into the energy sector. We believe by being partners with the energy sector, that leads to a better outcome in terms of channeling capital to the places where it's going to both generate the returns, but also generate the kind of R&D that is leading to the technology and the innovation that we're seeing. I spend a lot of time directly with the energy sector, with companies based, in the United States, the Exxons and Chevrons and Oxys, working with them on sort of concepts and ideas about how to attract capital to the very places which we think are going to result in that evolution, reductions in emissions, cleaner technologies, and so forth. All of these things which, by the way, we believe the entire industry the vast majority of the industry is really embracing. So, we believe globally we're the biggest investor into the energy sector, about 300 billion in total, of which about 90 billion, is here in the US. We're big investors into the private side of looking at whether it's renewables, carbon sequestration, or indeed, just more efficient production and transportation and refinement of energy. So I think from that point of view, sometimes the media likes to write its own narrative. What we need to make sure we're doing is basing every decision we make and every investment we're making based on the fundamental core belief that as a fiduciary, it's our job both to seek out the returns, but also to look at what's happening in terms of the macro flow of capital and where it's looking for returns. So I hope that answers a little bit your question on our perspective.
Thank you, Mr. McComb. I really wanted to give you that opportunity, and I think you expressed it very well. Are there other questions? Other questions? Madam Auditor. Oh, I thought you were reaching for your button. Well, with that, Caleb, any further comments?
Thank you, Mr. Chairman. One final comment, and this is something that CIO Patrick Fleming loves to address, is it's never the commentary, it's the positioning. And so if we look at Fund 1 and even some of the pipeline deals in Fund 2, looking at Fund 1, the composition of it, you had approximately 26% in metals, mining, and energy. So as a fiduciary, they're looking for the best and most attractive deals in these funds that we get to participate and receive the benefits of. And so at the end of the day, they're positioning themselves to deliver the highest risk-adjusted returns in sectors that could be perceived to be, anti-ESG. They are still taking investments where they see it to be prudent. Thank you, Mr. Chairman.
Thank you, Caleb. Mr. Treasurer.
Well, Mr. Treasurer, Mr. Governor, I would guess that if there isn't any other questions, Mr. Chairman, I would make a motion.
Thank you. Hearing no further questions, the motion can be made.
Thank you, Mr. Governor. Chairman, the State Treasurer recommends that the board select the fund BlackRock Global Credit Opportunities Fund 2 as a state private credit investment manager, conditioned upon the approval of material terms and successful contract negotiations.
Thank you, Mr. Treasurer. Is there support for the motion?
Second.
It's been seconded by the auditor. It's moved and seconded. Is there any discussion? Any discussion? Any discussion? Hearing none, all in favor signify by saying aye.
Aye.
Aye. Nays? Any abstentions? Congratulations. Thank you very, very much, and a good conversation. Thank you, Rajiv, and thank you, Mr.
We look forward
McComb.
to working with you guys. Seriously.
Thank you so much.
Thank you.
Thank you, committee. Appreciate it.
Thank you. Mr. Treasurer.
What we have now is board matter D number 3, and that is to the approval or disapproval of material terms of investments. We have I think Lisa is going to go over those, and we turn it over to her, Mr. Chairman.
Thank you, Mr. Treasurer. Ms. Spillman, nice to see you this morning.
Morning, Mr. Chairman, rest of the Slib board. This is Lisa Jordy Spillman, General Counsel with the State Treasurer's Office. I'd like to go over the material terms for your approval today. As please note that this is our first private credit fund, so we are using external counsel to do a first run on the investment contracts. But these are the material terms. The carry terms, there is a hurdle of 8%. The carried interest for most limited partners is going to be 20%. However, we have negotiated a reduced fee on that. There is a capital return of 100%. So once there start to be returns, they have to receive an 8% hurdle. We receive 100% back, and then they can take their carry percentage of that. There is a 1.25% per annum management fee. That's for all limited partners. We have negotiated a decreased rate. There are organizational expenses. There will be a $5 million cap on those. There is a 4-year term of this limited partnership. There's a 3-year investment period, investable period. There is a potential for up to 2 consecutive 1-year extensions, and it also may be closed at the discretion of the general partner upon a consent of the majority of investors, and that would be an early close. The fund will provide distributions to the state of Wyoming. This was appropriate in Fund 1. There absolutely will be distributions, even though it is in the general partner's sole discretion. They've agreed to the tax withholding provisions required by the state of Wyoming. This is closed-ended, so there are no redemptions. The general partner may be removed by a 66 2/3% majority vote. There are key man provisions so that if a key person fundamental to this investment leaves the organization, the capital calls are suspended. There are default provisions. So if a manager, if a investor fails to fund a capital call, there are penalties. The state and every other investor enjoys limited liability. The partnership will deploy leverage, so they may use borrowing. The partnership may recall distributions as needed, and there are limitations to that. There may be in-kind distributions, but there are provisions for the state to achieve help in selling those. The limitations exist on us transferring the interest. There are standard disclosure, transparency, and reporting, and these meet the state of Wyoming's requirements. They've agreed to the provisions of the Wyoming Public Records Act. They've acknowledged their standard of care and fiduciary duties. There may be potential conflicts of interest. There's not an advisory board. We've reviewed their valuation policy, and it's reasonable and conservative. They've agreed to the state's most favored nation status. So if they provide another investor coming in with the same dollar amount, better terms, we have the opportunity to achieve those as well. They've agreed to limit the state's indemnification requirements. They've agreed to insurance. They will acknowledge the requirements of the state's investment policy. They've agreed to the state's sovereign immunity provisions. They've agreed that the state is not going to be required to arbitrate. They do have skin in the game. Caleb, what is that?
Thank you, Lisa. Thank you, Mr. Chairman and the board. It is up to 2.85% or $100 million.
Thank you. They will not make any material amendments without a consent of a majority of limited partners. They've agreed to the jurisdiction of Wyoming state courts for all proceedings instituted against the state of Wyoming. If the general partner is overpaid, there is a clawback provision. As mentioned earlier, there is an opportunity for them to take back distributions for specific purposes. And there are the potential in the fund documents, if a particular capital call reflects an area of investment that the state or an investor cannot participate in, then there are excuse provisions. Are there any questions?
Thank you, Ms. Spillman. Are there any questions from the board? Any questions? Hearing none, Mr. Treasurer.
Well, Mr. Chairman, if we have no further discussion, I would make a motion that the treasurer recommends that the board approve the material terms of the state's investment in the fund BlackRock Global Credit Opportunities Fund 2.
That motion's been made by the treasurer. Thank you. Is there a second? It's been seconded by the superintendent. Any discussion? Hearing none. All in favor signify by saying aye.
Aye.
That motion carries. Thank you very much, Caleb and Lisa. Wonderful. Nice to have everybody on board. Thank you, Tom, for your analysis. And Becky, it's good to see you. And thanks for RVK. Mr. Fleming.
Mr. Chairman, thank you. The next fund will be Ashbridge, and Matt Smagash will be here to introduce Ashbridge and also how Ashbridge fits within our portfolio.
Thank you. Mr. Smagatz, good to see you this morning.
Mr. Chairman, members of the board, my name is Matt Swingash. I am the Senior Investment Officer over Alternatives, and I'd like to present to you Ashbridge Transformational Secondaries Fund 2. GP-led secondaries answer a persistent problem in the market as private companies are remaining private for longer. I think the median now is 13 years, and 10 years ago, it used to be 4 years that you could buy and sell. And this has created this weird subset of extremely attractive assets that need to be sold. There's an asset, we feel that Ashbridge, in the way that they construct basically the ability to lift out these star assets and kind of do the completion of that work with their long-term experience in space, are best positioned to earn outsized returns. We believe that their access, both through its place on Morgan Stanley's platform, combined with the exceptional deal team in this really lightly trafficked space in the lower middle market GP-led secondaries, really allow them to be extremely differentiated and access the best of that space. And as we're going, as this time has progressed, as we're watching things age out, as you're looking and seeing all the S1s that are currently filed and realizing that most of them won't go public, the deal flow should continue to expand, and their early roots in this space and their expertise in these kind of complicated deals are going to allow them to continue to have performance. With that, I would like to introduce David Frechette. He is the Global Head of Private Credit and Equity Distribution for Ashbridge.
Thank you. Mr.
Thank you,
Frechette.
Matt. Thanks, Matt. And Mr. Chairman and members of the board, thank you for the opportunity to present Ashbridge, as Matt just outlined, a private equity continuation strategy that exclusively focuses on GP-led single asset transactions. As Matt mentioned, my name is David Frechette. I'm the Global Head of Private Equity Distribution at IMSM, and I'm also joined by my colleague, Nash Waterman, the head of our Ashbridge platform and the lead PM on the Ashbridge Fund. I note that Nash has been a member of IMSM since 2002. Additionally, I'd like to note we're appreciative of the opportunity to grow our existing partnership with the state. We're thrilled to have the existing relationship with Patrick, Matt, and the team across investments in real estate and emerging market debt. We remain continually impressed by the diligence and perspective that the investment team brings to all the investment decisions, noting that Matt has been researching the market opportunity and the fund strategy and portfolio since early summer of 2021. And further, I also want to just quickly recognize the impressive work done by Josh and Kirby at RVK, who have really taken the time to understand this market opportunity and our distinct approach and advantage. My personal view is in doing so, they've really accurately captured our market advantage in the strategic objective of the fund. Lastly, I just would like to, before our prepared remarks, note that, given the importance of the broader relationship between you and us and the desire to grow and strengthen that partnership, we're proposed an offering here, which we'll detail, I know, in a few minutes, that has advantaged economics, a co-investment capacity of 1-to-1, and an offered seat on our LPAC. What I thought I might do, because we're not together, is just reference a page that I'll speak off of. It's page 6 in your materials, the executive summary. I'll spend a few moments here and then I'll hand it over to Nash. So just to be clear, the objective of Ashbridge is to seek to deliver private equity returns in a shorter duration. So let's think equal or greater to 2.5 times multiples in 5 years or less. We seek to do this by building a portfolio of direct single company positions, acting as the lead third-party investor in bespoke single asset transactions. As Matt referenced, our efforts enable an existing general partner to hold a prized high growth asset longer, while providing LPs the option of either staying invested in the asset by rolling into this transaction or exiting at a fair market value. If we keep in mind that GPs own a portfolio of assets in closed-end vehicles, we all can conclude that there are times when the closed-end structure creates a forced selling. This forced selling sometimes happens at a moment in time where the portfolio company is approaching or realizing an accelerated growth potential. And there's real value in all parties owning that asset for a continued amount of time during that growth phase. And our capital and our expertise allows the GP and those investors to participate. Quick moment on the team. In this particular strategy, there's no one I don't think in the market whose team is more experienced or has greater continuity in this specific space. Nash will walk through his background and his team, but the top 6 investment professionals in Ashbridge have been actively pursuing this strategy together for 15 years on average, with no one on that team for less than a decade. The body of work is impressive. You know, over the course of the last 16 years since 2006, the team has deployed approximately $2.7 billion of capital across 46 deals. The composite return over those 16 years is approaching 23%. As I'll note in a minute, the predecessor fund at Ashbridge 2, the fund that we're discussing, performance exceeds the composite average. So just a quick moment, if I could, on the growth in the market opportunity. You know, while the traditional secondary market has experienced significant growth, let's call it around a 3 times or a triple since 2011, the real accelerated growth within this market has been the GP-led transactions, which for the first time in 2021 equaled the total secondary market transaction volumes at approximately $63 billion each. But I would argue that's part of the story. The real story is within that GP-led transaction base, the real growth has been single assets, which for the first time in 2020 represented a majority of all GP-led transactions. This happens to be where Ashbridge spends exclusively all its time. We are confident, just on this note, that the transaction volume we're seeing is going to continue to increase. We're also confident that the supply-demand imbalance, which is currently in our favor and which we're benefiting from, will continue to persist for the foreseeable future. This is particularly and especially true in the lower middle market, where the competition for these deals is less and where Ashbridge exclusively focuses. Let me just make one comment on the track record before I hand it over to Nash, who's going to spend more time on the portfolios, the investment strategy, our investment process, and the performance by highlighting just 2 things. Ashbridge 1, the predecessor fund, which is fully invested, is currently marked at a net return of 1.8 times multiple and a 43% IRR. And I note that the retained assets are still growing on or above plan. And Ashbridge 2, which is the current investment opportunity, is approximately 50% invested and already marked up at a multiple of 1.3. I know Ash will spend some more time on both those facts in a minute, and let me now transition this to my colleague, Nash.
Thank you, David. And thank you, Mr. Chairman and members of the board, for your time today and for the opportunity to present to you Ashbridge 2. At the very core of what we do here is Harvest, I should ask you first, if you wouldn't mind turning to page 8 in the document. At the very core of what we are doing here is seeking to harvest the very best assets in lower middle market funds across that spectrum. And we've achieved that by honing in on a sourcing method where GPs find that they have a very clear view on creating substantial value in a 3 to 4 year period, but they have something structurally that's holding them back, often fund life. Sometimes they're running out of capital for a buy and build strategy. They need a solution that can service all of their LPs who want to stay in the company or who want to get liquidity. We come in to solve that problem. And through doing that, we get the very best access to the assets in the portfolio. And we also get an insight in the company where we can determine that they have a method to create value that is consistent and can be consistently performed going forward. I always say we make investments where we expect people to do nothing heroic to hit our return profiles. If you wouldn't mind moving to page 9, please. This highlights the team here. I'm very, very proud to say I've been working with these senior professionals now for an average of 15 years, at least 10 years. Together as a team, we have defined and refined the strategy from the very start. This partnership is absolutely committed just to this product, both in our professional work as well as our financial lives. And we have very high conviction on what's going forward. I'll now take you to page 10. And a couple of things I want to highlight here. First, in Ashbridge 1, we have outperformed on all the metrics that we seek to. We outperformed private equity, we outperformed secondaries, we outperformed all of buyouts as well. And we did that also by having a top quartile return of capital to our LPs. And that at its core is our mandate, is to produce buyout-like returns in 3 to 4 years. So transitioning now to Ashbridge 2, we are taking this same model of lifting out the very best companies out of the lower middle market and applying it now to an environment that has grown substantially. And so the significant difference between these two funds is the breadth of the opportunity set. And it's evident in what's happened in Fund 2 already. We have been investing in this fund over 14 months. We have found a tremendously high quality set of assets that we have walked through with Matt. And we have seen exceptionally strong performance right from the start. And that is the key. These companies are in a path where they're growing earnings fast enough that it is creating value upfront, hence the fund being marked at year end at 1.3 times in just over 13 months. So I'll conclude here by saying that I really appreciate the time that Matt and RVK has spent with us on this project. I am tremendously excited about this opportunity. This is one where I think we can produce the best results for our investors I've seen in my entire career. And I'm putting a substantial amount of my own net worth into this, as are all my partners. This is the single biggest investment in my portfolio. And so we are really excited about what's coming forward. We are really excited to partner with you and with Matt and a team there and to build this relationship going forward. So thank you again, Mr. Chairman and members of the board. And I would be happy to welcome any questions.
Thank you, Mr. Washburn. Are there questions? Any questions? Well, let me ask Tom to comment if I may.
Sure. Thank you. Thank you, Mr. Chairman. I'll just give a little summary from the IFC discussion. I say that the IFC was actually pretty excited about this investment opportunity. One of the issues that we struggle with clearly with funds like the Treasury is really how do we access private assets effectively and how do we do it well, given that, frankly, Matt does an incredible job, but he is one person. And, it's a tremendously large market. So as Nash and David were talking, what's great about this strategy is when you look at the risk-adjusted returns of secondaries relative to, say, private equity, you're effectively getting the same return with less risk because you're cutting out a portion of the J curve. And so we think this is a really great plug and play type strategy for where the program is today. So we're very excited, and we think that certainly with the Morgan Stanley access and the size of the firm that they're going to have they have a great pipeline. The negatives, I guess, clearly, we're obviously always concerned about fees. There is definitely an extra layer of fees in there. But I guess what I would tell you on the mitigant side of that is, again, when we look at our staffing, that frankly, it is incredibly important that we have this almost in a way as sort of an extension of staff. So that to me is a big mitigant. And the only other, I guess, concern that maybe the IFC brought up was the increased fund size. RVK also brought that up as well. But again, I would argue that it seems like most private funds are increasing their fund size tremendously. So it's a little bit of the marketplace, but again, it's something that we're a little bit concerned with. But overall, the IFC voted unanimously to support this investment, and we're very excited for it. And hopefully it'll maybe give Matt an extra hour of sleep at night since he's working so hard on the hedge funds and private equity.
Thanks, Tom. Becky.
Well, thanks for Mr. Chairman, thanks for the comments, Tom, that you made. We certainly concur with them. We think that this investment is certainly constructive as we work towards our pacing budget and the heightened private equity allocation that was approved last year for many of the funds in your asset allocation study. As you build out these direct exposures, not only is this an interesting kind of bespoke strategy that fits in that sweet spot in the smaller end of the market and is looking at both secondaries and the direct component. So it's a very interesting investment idea, obviously with the J curve advantages, as Tom had mentioned. But the other opportunity is here as you build out these direct investments is to look for future GP relationships to help build out perhaps in future fund opportunities. So we think that this particular investment with the Morgan Stanley team and their AIP group through the Ashbridge specific team here certainly gives you an advantage in looking for future opportunities for investment. So again, nothing else to add, but we're excited for you to look at this opportunity today.
Thank you. Any further questions? Any further questions? All right. Well, thanks, Mr. Treasurer. Back to you.
Thank you, Mr. Chairman. And I'm kind of excited about this. I think Matt did an excellent job on this, and the team did an excellent job. And I think this is a really, really exciting adventure with these folks. With that, Mr. Chairman, the State Treasurer recommends that the board select the fund Ashbridge Transformational Secondaries Fund 2 LP as a state private equity investment manager, conditioned upon the material terms and successful contract negotiations.
Been moved by the treasurer. Is there a second? It's been seconded by the auditor. Is there any discussion? Hearing none, all in favor signify by saying aye.
Aye.
That motion carries. Thank you. Mr. Fleming.
Mr. Chairman, I'll pass it on to Lisa Judy Spillman for the terms and conditions.
Thanks. Ms. Spillman.
Thank you, Mr. Chairman and rest of the board. Lisa Jury Spillman, General Counsel with State Treasurer's Office. I'd like to share my screen to move on to material terms approval. This is as the secondaries fund, we will have a co-investment opportunities as well as a fund. We'll be joining a fund through a fund of one strategy. The carried interest in this particular fund is 12.5%. The preferred return is 8%. Capital return is 100%. The state will receive a 10.10% management fee break, and so our total management fee will be 1.25%. The organizational expenses will be capped. There are no fee or carry for the co-investment fund that we join. Okay. The manager will have skin in the game. Do you know how much that is?
3%. So on a $3 billion fund, that's 90 million.
Thank you. The term here runs until June 29th, 2028. So that's a 6-year term. There may be 3 one-year extensions permitted. There is a 3-year investment period. There will be distributions pro rata as soon as practicable after the fund receives returns. They have agreed to the state's tax withholding provisions. It is closed-ended. The partners may not generally withdraw from the fund. There are provisions to remove the general partner. There are key person provisions in this fund as well. There are default provisions, so it hurts any limited partner that wants to not respond to a capital call. The state will enjoy limited liability. This fund will have leverage, so there is going to be borrowing. There are provisions where the fund may recall distributions and may give the state in-kind distributions, but there is language that permits us to ask the GP for help liquidating those. In general, the state's interest is not easily transferable. However, there are opportunities on the secondary market for the state's interest should it need to sell. There are standard language and appropriate disclosure, transparency, and reporting. They've agreed to the Wyoming Public Records Act provisions. They've acknowledged and will acknowledge their standard of care and fiduciary duties. They will attempt to avoid conflicts of interest, but there may be the potential for conflicts of interest. There is a limited advisory committee, and they've asked the state of Wyoming. They've indicated that we may have a seat on that committee. The valuation policy has been reviewed by our office, and it is appropriately reasonable and it is conservative. They've agreed to the state's most favored nation provision. They've agreed to limit the state's indemnification obligations. They will maintain appropriate levels of insurance. They've agreed to receive and acknowledge the requirements of the state's investment policy. They've agreed to the state's sovereign immunity requirements. They've agreed we're not going to have to arbitrate. They will have skin in the game, as Matt mentioned. There will be no material amendments without majority and interest approval. They've agreed to the state's exclusive jurisdiction for suits against the state here. There are provisions that we can claw back from the GP if they are overpaid. And there is the potential for recall of distributions or distributable cash retention specifically for purposes outlined in the limited partnership agreement. And as mentioned, there is the potential for limited partner givebacks. That's it for the material terms. Are there any questions?
Thank you, Ms. Philman. Are there any questions? Any questions? I hear none. So with that, Mr. Treasurer.
Thank you, Mr. Chairman, and thank you, Lisa, for putting this together. Appreciate it. The state treasurer recommends that the board approve the material terms of the state's investment in the Fund Ashbridge Transformational Secondaries Fund 2 LP.
Thank you. It's been moved by the treasurer. Is there a second? It's been seconded by the superintendent. Any discussion? Hearing none, all in favor signify by saying aye.
Aye.
Congratulations. Thanks very, very much. Matt, always good to hear your analysis. Patrick, thank you very, very much. Mr. Treasurer, you have a phenomenal team. And congratulations to Ashburn. So look forward to hearing more.
Thank you,
And
Mr.
with
Chairman.
that, Mr. Treasurer.
Yeah, Mr. Chairman, we're in order, material number 6 here, board matter number 6. And I guess we're going to have Becky of RVK look at our RVK performance report that's attached.
Well, Mr. Treasurer, Mr. Chairman, thank you so much for the opportunity to speak with you a bit about what's going on in the markets, and I'll spend just a couple of minutes on performance. So as you turn into the first couple pages of the report, and thank you, Lisa, for running our slides, the next page actually takes a look at what we like to call the quilt chart on the left-hand side. It's interesting to note as you look at the rightmost column in the left third of this chart that some of the best performing assets are in the real asset area. MLPs are doing well this year so far through February, and that's what this snapshot is concentrating on, followed by cash, and then a lot of negative red numbers as the markets have been worried about inflation this year, and now most currently with the Russian-Ukrainian conflict and what that means for inflation and supply chain issues and commodities and other goods. As you probably saw in the news this morning, there was an indication that the job market continues to be hot. The initial jobless claims last week were 166,000, which is the lowest level since 1968. So for folks trying to hire talent, it has been a difficult time as the price of labor continues to increase. And so certainly there is that component that is worrying the Fed. And the Fed now is signaling that they are going to allow about $95 billion in off and not invest them per month with the hope of reducing the Fed balance sheet. And they've also signaled that the interest rate hikes this year, we're expecting multiple hikes. We've had the first one. There is some consensus of opinions that those hikes may not be 25 basis points. They may be more like 50 basis points in nature, as the Fed is waking up to how the inflation picture is materializing and trying to figure out how to create a softer landing, if you will, to help reduce inflation, and doing that by raising interest rates. So there's a lot of news to be looking at. As you look at the next few pages, we've got, as you look on page 3, we've got just a couple of snapshots that helps you quantify in your mind the size of the Russian-Ukrainian conflict in terms of their participation, those two countries' participation in global GDP. Russia, according to the World Bank, as of 2020, was less than 2% of global GDP, and the Ukraine was actually 20 basis points, so 0.2%. So even though this is taking the world stage and there's a lot of conversation about the size of Russia specifically, on a global GDP basis, they are a much smaller component than probably many would think. And in terms of relative participation in equity indices, although they've been taken out of the equity indices, you see in the bottom left-hand corner, as of March 4th and 7th, depending on which index you're looking at. Before that occurred, Russia was 0.4% of the world index. So again, smaller components. But if you look on page 4, when it comes to the bigger concern, I think for investors is on the right-hand side, and that is the percentage of that Russia represented of global production of minerals, as well as agricultural products, and then of course, oil and gas. And so that has been the big discussion there, is how to, in the light of sanctions, actually look at replacing some of those resources. As you look at page 5, this is a quick snapshot of a forecast of what could happen to the CPI here in the US with various costs on oil. And we're looking more like the blue line, a little north of the blue line, not quite as high as the yellow line as we look at the price of oil today. What that means for its relative contribution to CPI certainly means, if you look towards the left-hand side of this chart, which represents earlier this year, as even higher elevated levels of CPI, hopefully rolling down to lower levels as we move through time, but certainly hitting some pain points of inflation due to the cost of energy. Page 6 is just to read at your leisure. It just gives you a bit of a snapshot of prior conflicts and the next day impact of those conflicts in the S&P, the Fed stance during that time, the worst performance that was seen during that event, and then the 30-day view for the S&P and then European and UK equities. And the messages here, typically the 30-day picture is much better than the worst type of experience during these events, but obviously every event is unique. And our basic message on page 7 to investors is to stay the course. Obviously, watch world events and what that could mean in terms of impact on inflation and national security. But because we can't predict the future and we're long-term investors here, we definitely want to concentrate on your asset allocation and making sure that that remains appropriate for all the funds. So if you look to page 8 real quickly, this is again through February. The total asset value is about 24.6 billion. You can see the Permanent Mineral Trust Fund being the largest fund at 9.5 billion, which is about 39% of that overall asset snapshot, and the Common School Fund 4.5 billion. In terms of performance through February and on a fiscal year-to-date basis, which is really where I will concentrate my comments, you see that on the next page. Again, this is total fund, and this is towards the middle of the page, the fiscal year-to-date return through February, 0.2%. As we look at the first 2 months of the year, minus 2.1. Now, we have seen some improvement in equity markets since this particular snapshot. The S&P, as we look today, or actually through the end of 3/31, since that will be the next formal report, you will see the S&P is down about 4.6%. So we've seen a little bit of improvement there, but the bond market has actually worsened because interest rates have gone up. One of the things that Patrick has talked about in a lot of past meetings is what's happening with the 2-year Treasury and the 10-year Treasury. And they actually have been flirting with that inversion point. They're pretty flat as we look at the snapshot through March. So again, there's a lot of market speculation. When the 2 rises above the 10, we start getting that inverted yield curve environment that investors look at as potential recessionary signaling. But again, it's been flirting with those levels and has been pretty close to even. As you look at the asset classes and what they've done for us in this fiscal year to date so far, it's been a mixed bag of positive contributors and negative contributors. The US equity market through February is still giving us, on a fiscal year-to-date basis, positive returns of 2.4. Small cap and negative return territory, a lot more concern about rising interest rates and availability of capital for US small cap equities. International equities, again, as we factor in what did well in the last year, what has done well in the last fiscal year, it still has been dominated by US large cap. Preferred stock, again, a little better return. You do get a yield component there that helps soften the blow of those valuations for the fiscal year to date. The big star in your portfolio has been inflation-related asset classes, which is MLPs on a fiscal year to date basis, up 15%, core real estate up 14%. 2021 was the best year on record for core real estate relative to its primary index. And so when we look at the inflationary times we're in, certainly the state is very aware of what that's done to the cost of energy, which has been positive, but also other real assets in your investment portfolio. Some have really benefited from this environment. There's been, in hedge funds, a little bit smaller drawdown there relative to other asset classes like equities, so down 1.5%. Core fixed income, this pain has worsened as we look through more recent periods as the 10-year Treasury. Relative to last year, if we look at the end of 3/31, the 10-year Treasury was at 2.3 versus 1.5 as of the end of the year. And as when we look at a more current snapshot, interest rates at the 10-year Treasury are up 1% relative to last year, to the end of 12/31/2021. So that pain is continuing to be felt in core fixed income. but you'll recall in the asset allocation efforts last year, there was a real lightening of core fixed income and a movement towards other yield-oriented asset classes and other return-oriented asset classes. We're very happy for that move. The other thing we're very happy about is looking at placing the assets that need to be ready for capital calls for some of those less liquid or illiquid asset classes. We're placed in some cases in low duration fixed income, and that has certainly been a very positive move in that less interest rate sensitivity is felt there by the rising interest rates impact on bond prices. And when you look at some of the other fixed income areas of the market, core fixed income is down, bank loans up. They don't have interest rate sensitivity for the most part. You're just taking advantage of credit. Emerging market in EMD, as you see, in negative territory, influenced by currency, as well as risk off fears, but still generating a powerful income there. Long duration fixed income is feeling that interest rate sensitivity. Workers' comp fund, again, being impacted by that. These investments look like the liabilities of the workers' comp fund. And so that's a quick snapshot in terms of what's happening on the asset classes. And when you look at the fund's performance on the following page, page 10, and I'm almost finished here with these brief remarks, but when you look at the Permanent Mineral Trust Fund and other total return funds that are permanent, you see the fiscal year to date for permanent mineral is still in positive territory, 0.8%. Very strong returns when we look at 1, 3, 5 years really benefiting from very strong equity markets. When you look at the income-oriented permanent funds, fairly similar results. Those funds are outlined in blue. When we look at workers' comp, again, more impacted by that long bond exposure. Again, that looks like the liabilities, so down 1.4 on a fiscal year-to-date basis. And then finally, on the next page, on page 11, we've got LISRA, Pool A, and the state agency pool, all in negative territory in the case of LISRA, down about 1.2 when you combine the three pools. Pool A, as you can see in red, and then finally the state agency pool. So again, 2022 has certainly been a volatile market. But one of the things I wanted to end on as you look at the next page, your asset class diversification across the funds, especially in the longer term permanent funds, when we look at that purple line, which is expressing the standard deviation of a 70-30, which has really been that risk-oriented benchmark we look to, all of the funds have significantly less standard deviation than that 70-30. And we tend to be very thankful for that when the equity market's correct. And so certainly that is the case as you look at the other funds and other colors that are in the lighter type, you can see that they're all below that particular standard. So with that, I thought I'd just end my comments on this quick update through February, but I'd be happy to take any questions that you have.
Thank you, Ms. Gretzinger. Mr. Treasurer, any comments?
I'd just like to, I think, make a comment I really thank the staff for what they've done over the last several years in manager selection, because Patrick has really guided that process to look at managers that lose less money in downturns and performs well in the upturns. And I think a lot of this our overperformance in the down areas, is actually substantial in this downtrend. And a lot of it is the managers. It's the asset allocations from the IFC, and but really that implementation of that, these guys have done, I think, an outstanding job in this very, very choppy times. And Patrick, I want to thank you and thank your team for the performance that you've been able to squeak out in these situations. And let's hope that it turns around at some point in time. But we are losing a lot less money in these downturns than the indexes. So they're still outperforming even in the tough times. And that's what we're trying to do is put together an asset allocation and a manager team that essentially is that big boat on the ocean that's going to get to its destination, and something that'll weather all storms. And we're really with the diversification and what the legislature did with the reference portfolio, and what the Slib did with looking at the asset allocation approval, as Becky mentioned, sliding out of some of the lower performing areas and getting into other areas that aren't so interest rate sensitive, and in the diversification, it's starting to take shape that we are going to have that type of an investment fund and an investment structure that is going to weather the storms.
Thank you,
Thanks,
Mr.
Patrick.
Thank you, Mr. Treasurer. Any other questions, comments? I would only say, Patrick, for you and your team, and Becky, maybe that there's a perspective here on this too. It is hard to move, and sometimes luck is better than skill, and I think we're certainly benefiting from your skill, but we also have a substantial amount of luck in that it takes a certain amount of time to get some of this stuff done. MLPs, I can remember that's been 5 years ago, and we certainly took some rough times with MLPs till recently. So just thanks for you and your team, and Mr. Treasurer.
Thank you, Mr. Chairman.
Well, with that, thank you, Becky, very, very much. Good to see you as always. Thanks for your perspective, and I appreciate the presentation.
A pleasure.
Mr. Treasurer.
The the CIO report and the review of the Russia and Ukraine investments. And Patrick, take it away.
Thank you, Mr. Chairman, Mr. Treasurer. Thank you for your comments. One thing that I would comment, we have some quotes on our new wall from the trading floor, but one of them is the harder you work, the luckier you get. And that is something that I just want to mention throughout the staff and some of the things that we've done. Not only the investment team that has done, I think, just a great job in the work effort that they've put in, but also all the work that Lisa has done, and with the treasurer's guidance, and Don Williams, who has just done a tremendous amount, and our accounting department that is just working through tremendous growth, new managers. We've almost doubled, the managers that we've had since we started to work together, and with the asset allocation differences and trying to move on into some of these private markets. So it's been a tremendous lift, but the staff has done a phenomenal job in my opinion. So I do want to comment on the great work they've done. This is real quick, just an update. This was from the Investment Funds Committee that we wanted to mention to them, just so all of you were aware of the situation and what kind of impact we've had with our Russian exposure. So if you do see the D7 matters, what I wanted to show is the January versus the most recent numbers that we have, which is the end of February and March 6th. We will get attribution numbers at probably in the next few weeks from our manager. So we'll actually see the difference between the January and February numbers. The assets had declined, but we don't know whether that declining valuation between the two was a result of the market price or how much that they were able to liquidate. So in our next meeting, I will be able to update you to show you how the managers perform. But as you can see, it's a fairly de minimis exposure in the emerging market exposure with Russia. At Feb 28, we had 5.4 million, and with the Russian equities, 3.6, so 9 million with a 25 billion portfolio. You're talking about less than 4 basis points of exposure in Russia. At this juncture, many of the markets, the bonds and equities are not trading. So you would look at this and assume that that's pretty much a zero, that 9 million. And we just hope to be able to claw something back over time. But right now, that's what we would assign that value to. So that is just an FYI of the valuation that we're seeing now, and we'll see where it goes. Big picture wise, the tremendous tragedy, as everyone is aware of. But as far as the state goes and some of the valuations that we've seen, with the demand in energy and so forth, PRB coal is up to $16 now. Obviously, spot crude at $100. The forwards are much lower, but from the mineral and oil standpoint for the state, that's a positive position that we've had from that aspect. So very terrible circumstance, but as far as the silver lining, hopefully you're seeing a differentiation where coal was kind of the evil person for quite a while, and now with some of the restrictions that Europe has putting on not buying Russian coal and so forth, that demand has increased coal markets and theoretically extended the life of coal for some time.
Thank you, Patrick. I appreciate that. So essentially what you're saying is things are good now, but don't hold on too long.
Well, Mr. Chairman, it was interesting. I'm part of a Milken Institute CIO panel, and it's CIOs across the globe. And the last meeting, the theme across the globe is everyone is just saying, hunker down, don't take a lot of risk right now. And Mike Milken was saying in the 50 odd years that he's been investing, this is one of the only times that he's seen that markets are not behaving rationally. There's just so many different fluctuations. And then just be very careful what happens when the Fed starts hiking rates. We've been talking about this for numerous times, and now we're into it. And they're just increasing the amount. This morning, there was another fund who thinks that we'll see 350 basis point hikes. And if you remember, I think it was in mid-55, William McChesney Martin, the federal chairman at the time, said, it's really tough when you start to remove the punch bowl, talking about the liquidity that they've given. And so this punch bowl is massive. And if they are trying to remove this punch bowl, there will be some serious dislocations in the market.
Well, thank you. And I know that one of the efforts that you were putting in place was a ladder strategy to sort of deal with interest rate hikes. And it would be nice, Mr. Treasurer, down the road, just sort of see how we're sort of mitigating against the risk of a higher interest rate environment, particularly in our bond portfolio. So
it's going to be hard to get, I guess, any returns over inflation. It's these last things that we put on will get over inflation, but yeah, just even with bond rates going down, one thing that Patrick has done, he's taken a lot of the duration out of our core and out of our internal bond fund. So that has helped quite a little bit in that regard. But yeah, it's new times. There's no roadmap for this one. I think it's going to be a lot of a considered thought process to make sure that we navigate this.
And I guess, the concern I want to express, and I know it's one we talked about, is that our state agency pool, which is our bank book, is affected by the bond market. So even though we've passed a budget with numbers that are hard, those numbers can change if we end up in a bad situation on that. So I really appreciate your work on that. Cash is not return. That we talk returns a lot, but you can't spend returns the same way you can cash. So
exactly,
very, very much appreciate that. Thanks.
So, Mr. Chairman, just as a reminder, March 9th, we will be doing our asset allocation in with the meeting with the Investment Funds Committee. We did tremendous amount of changes last year, and it's more of stay the course this year and implement those changes. But we will look forward to presenting to you and the market outlooks and some of the other information that we have.
And that's May 9th.
May 9th.
Yeah. Okay. Thank you.
Very good. Becky, thanks. Give our best to Josh. Hope he feels better. Mr. Treasurer, anything more?
No, just, yeah, it's same back at you, Becky, with Josh. Yeah, we do hope that he makes a speedy recovery, but we're glad to have you here today. Thank you.
Thank you so much, Mr. Treasurer, Mr. Chairman.
Thanks. Thank you all. Madam Director, let me ask my board if they want to take a very brief pause here, or do we want to just dive right in? Brief pause. Okay. I'm sorry. We all got outvoted. Thanks. We'll let's try to be back here in no more than 10 minutes, but closer to 5. Thank you, Madam Director.
Oh, whatever you can. Okay.
We're all back. Thank you. And thanks for anybody online for, and those here in the audience for that, being patient with us as we're talking through investments. Madam Director, the floor is yours.
Mr. Chairman, that brings us to E1, which is a farm loan matter. It's to consider one application for a beginning agricultural producer, Jess Aaron Evans of Pavilion, Wyoming. I would say that normally this would be a matter on the consent list if we could have a consent list of one. So I'll just highlight quickly for the board that the applicants requested a loan in the amount of $693,000, which will be used to purchase 289.85 acres comprised of 140 acres of sprinkler irrigated cropland, 20 acres of gravity irrigated cropland, 56 acres of irrigated pasture, and about 74 acres of range. In addition, the applicant's requesting to finance the 1% origination fee. The applicant meets the eligibility requirements to be considered a beginning agricultural producer. Analysis of the applicant's current financial position and credit history provides support for this loan. The appraisal of the properties indicate that adequate value exists to secure a beginning agricultural producer loan in the amount of $700,000, which is approximately 70% of the appraised value. The state will have a first mortgage position on the property. So we are recommending approval of a beginning agricultural producer loan in an amount up to $700,000 for a 30-year term. The interest rate for the loan for the initial 10 years shall be the lower of 8%, or the average yield on a 10-year U.S. Treasury bond for the previous year rounded to 2 decimals. This estimated rate at the date of loan closing is plus or minus 1.2%. At the end of 10 years, the interest rate shall be 8%.
Thank you, Madam Director. Are there any questions for the director? Mr. Bump, is anyone here that would like to address the board?
Mr. Chairman, no hands raised at the moment.
All right. Well, thank you. If there's no discussion and there's no one here to address the board, what is the pleasure of the board?
Mr. Chairman.
Mr. Secretary.
Mr. Chairman, I would move the director's recommendation for board matter E1.
Okay, but it's been moved by the secretary. Is
Second.
there second by the treasurer? Any discussion? Hearing none, all in favor signify by saying aye.
Aye.
Thanks. That motion carries. And congratulations.
Mr. Chairman, that brings us to the H matters, which are the mineral royalty grant matters. We note for the board that there is approximately $5,576,469 remaining for the biennium for MRG funding. Any amount remaining after today's meeting will be available for regular MRG funding at the board's June 2nd, 2022 Slib meeting. Currently, staff has received about 28 applications for funding in the amount of approximately 11.2 million, so over what we have available for that June meeting, and that those numbers do not include these 5 emergency MRG applications, should those be deferred to June as well. So, Mr. Chairman, the first matter, H1, is to consider one application for a Chapter 3 emergency mineral royalty grant for the town of Grable, Wyoming. The town of Grable is requesting $100,000 in emergency grant funding to address a leak in their shell well number 2. In early 2022, a substantial water leak was discovered by town staff below the building that houses the well. After excavation was completed around the foundation, it was evident that the original 16-inch diameter steel pipe used to divert well flow during completion of the well and headworks had a series of holes at the location where it passed through the building's concrete foundation. That well has since been shut in. The town receives water from 3 artesian wells, Shell 1, Shell 2, and Shell 3. The town is able to meet current water demand with wells 1 and 3. However, if the repairs to well 2 are not completed, the town worries that it may not be able to ensure adequate water supply during spring and summer when demand is much higher. We understand that the town may be eligible to meet water demands through connections to the Bighorn Regional Joint Powers Board water line. The requested $100,000 is equal to 100% of the total project costs. While staff does believe that this is a good project, it just simply fails to meet the definition of emergency required by the program. And because the application will not alleviate an emergency situation which poses a direct and immediate threat to the health, safety, or welfare of the community. We've shared the application with our sister agencies. DEQ recommends approval of the town's emergency MRG application for funding, but the Water Development Office does not recommend approval. We are recommending that the board deny the town of Grable's application for $100,000 in emergency MRG funding to repair well number 2 and defer the application to the June 2nd Slib meeting to be considered for regular MRG funding along with all other applications submitted.
Thank you, Madam Director. Are there any questions for the staff? Hearing none.
Mr. Chairman, I'm sorry. Yeah, I have a couple of questions. I'm not sure whether to direct these towards Director Scoggin, or I don't know if there's any folk from Grable here today that could respond to some of these, but I read where it said in 1985, well number 2 was put into service as the main source of water supply. Is it still the main source in Grable?
Mr. Chairman, I would defer to Beth Blackwell, who is here to provide the board with detailed answers to their questions.
Ms. Blackwell.
Mr. Chairman, I totally just blanked. Mr. Superintendent.
That's okay.
You're new. The town relies on 3 different wells to get their water from. I believe this well produces more water than the other 2, but the other 2 wells that they have online are adequate to supply the necessary water for spring demand. They have put in an emergency fix that is currently working, and per the engineer and the public works, that the emergency fix is viable for as long as needed to complete the repairs. So, and then they also have an additional option of connecting to the Bighorn Joint Regional line. They have 3 emergency connections that they could utilize as well to meet summer demand if they needed.
So well number 2 would not be considered a main source of water supply in Grable today, now?
I think that's honestly, you would have to ask the town, or maybe I can defer to DEQ or Water Development, as they are technical people and I am just an accountant.
I do see that Ms. Hunt has raised her hand. Mr. Bump, why don't we recognize her? Mr. Superintendent, maybe that helps answer your question. Ms. Hunt.
Yep, we are here, and I have Jake Wright with Nelson Engineering here, and I'm going to let him talk about this well.
Jason from Town Public Works is here as well. This is the main source of supply of water. It produces about, is it double the amount of water of the other 2 wells combined? Maybe a little more than that. Currently, the other 2 wells meet demand because we're in winter months and flows are considerably lower than they will be here in about a month. So that's the rub with this well, is it is definitely the main source of supply.
And along with that, I'm not sure again who to ask this of, but with that being the case, I read where DEQ said that the wellhead leakage presents a possible source contamination. What's the likelihood of that happening? Highly likely, moderately likely, mildly likely, do we know?
Moderately likely if it was allowed to continue to leak. Currently it's shut in and not leaking, but also not completely usable.
Okay. And Director, if we deferred this to the June 2nd Slib meeting to receive regular MRG funding rather than emergency MRG funding, would Grable most likely get the same amount of the 100,000 as requested, or no?
Mr. Chairman, Mr. Superintendent, unfortunately, they would not be able to receive the $100,000. Part of the benefit of having an emergency award is you are able to receive 100% of project costs, which is their request here. So at the June meeting, they would be required to come up with a match of at least 25,000, if not 50,000, dependent on their eligibility and other criteria they must meet. And the other thing I have to note that the June meeting is competitive. So they would be competing directly with other water, sewer, healthcare, fire-related, a gamut of different projects. So that part is very competitive.
Okay.
Please
Could I
proceed.
real quick, Mr. Chairman, get the number cited earlier, Director Scoggin, on the balance in the
Mr. Chairman,
program?
Mr. Chairman, Mr. Superintendent, the board has approximately $5,576,469 remaining for the biennium for all MRG funding.
Right, but that's minus the amount that was just awarded for the application for a beginning agricultural producer loan. Is that right, or no?
Mr. Chairman, Mr. Superintendent, no, those are two totally different programs. So the farm
Okay.
loan is the farm loan program. This is
Okay.
the MRG program.
Okay. So my other question, I guess, would be, would there be any other reason for not awarding Grable this amount other than it doesn't meet this standard of an emergency?
Mr. Chairman, Mr. Superintendent, the other item that comes to play is when you review their application, they do have 172,000 in their reserves, but they would prefer not to deplete their reserves. So they truly could put some skin in the game in this instance where they are asking for 100% funding. That comes into play also when you look at it. But really, we've had similar applications that just haven't risen to the level of an emergency.
Mr.
Sorry.
No, go ahead.
As well as having the option of having the Joint Powers Board or the Bighorn Regional Pipeline nearby. That's an option. Also, the fact that their fix is working right now. That's another thing. Had their well continued to be leaking and they couldn't fix it and shut it in, that would have also come into consideration.
So well number 2 is working now?
Well, it's shut in. I don't believe it's producing at the level it generally does. The town would have to clarify that, but I do know that the leak has been contained.
The well is producing, but the shut-in fix is actually to tie up a driller's rig 100% of the time to keep a packer installed in it to shut that flow down to the diversion. But at current, it can produce, but it does so at the cost of someone's drill rig parked in the site constantly.
So, sir, from your perspective, you would still deem it an emergency?
Absolutely. They're not going to function properly without it, even with the Bighorn regional connections. You know, there could be unforeseen issues in the future that require more demand on the Bighorn regional as well. And they may not want all the, you know, a 1,200 gallon a minute flow tied up with the town of Grable for the next several months either.
So my subsequent questions, Mr. Chairman, and forgive me, Director Scoggins and team, I know I asked you the other day some of these questions as well. And also I obviously operate out of some level of ignorance here as well as my rookie status. But I can only go on what I know and what I've read in this some of this paperwork here. So Well number 2 supplies approximately twice the amount of water as well number 1 and 3 combined, and is considered a critical water supply well, and is still considered the main source. And then in the near future, the town may not be able to ensure adequate water supplies in the spring and summer when the demand is much higher. Combine that with, and again, looking at this from a layman's perspective or an average person in the community, perhaps not necessarily well-informed, but still asking questions. Combine that with what Stanley Miller, the project engineer, said, that the wellhead leakage presents a possible source contamination. Combine that with the Department of Environmental Quality agreeing that the designation of this project as an emergency, and project engineer Jacob Wright says the repairs should be completed as soon as possible, and the mayor deems it an emergency. My question, again, perhaps in ignorance, I know I don't understand all the variables and nuances, is how is that not an emergency? It would be my question.
Mr. Chairman, Mr. Superintendent, all very valid points. I think it gets down to the bottom of it right now. Is it a direct and immediate threat to human health and safety today? And they're meeting their water demands as they stand today. The well is shut in. Therefore, it does not rise to that level of a direct and immediate threat to human health and safety.
Mr. Chairman, what does the people of the project engineer, the mayor, the people of Grable say on that? Do they feel it does still represent a direct threat to health and safety?
It certainly would if another well right next to it that's the same age and the same manner of construction happened to go down next week, then you're down to about 300 gallons a minute of supply that the town can produce themselves without Bighorn Regional.
And Mr. Superintendent, there is all the points you've made are very good, and I really think it's great that we have the conversation. There are a couple of things that I think probably should be borne in mind as we look at this. One is that there is a finite source of funding. There are other communities that may see immediate things. I think of the town of Opal, for instance. A few years ago, their water tank collapsed, in which obviously was a significant emergency at the moment. There was no workaround to it. But if you're submitting for an emergency application, you move immediately to the front of the line, and there are other projects that come along later, and just the finite amount of the funding is something that we always bear in mind. One question I guess I have, just from perspective, looking at the next biennium, there really isn't much in the way of MRG, no emergency funds, none of this is available, which doesn't mean we should keep it over, but it does mean puts a particular point, because I think the legislature believed that ARPA would be able to meet all these. That is yet to be determined. And so that is a consideration we should also look at. And I want to make sure people that are online understand there are no dollars available next year for MRG. So, Mr. Secretary, you wanted to follow up.
Yeah, thank you, Mr. Chairman. Just real quick, I know that DEQ opined that the engineering estimates were very imprecise. That letter is dated March 7th of this year. Is that still the case, or how comfortable is the town or the office with the engineer's estimate of $100,000?
Mr. Chairman, Mr. Secretary, I would ask for Stan Miller from DEQ to come and address that.
Mr. Miller, that's why I couldn't see you. You were behind the podium. So good to see you. Thank you.
Yeah, so this is my first rodeo here, so my apologies if I don't go through all the formalities that we normally should. But yeah, when we looked at this project at the time when it came in, there was an ongoing leakage, which presented a risk in our opinion at that time. Now that they have the leakage actually under control, maybe that factor is no longer quite as relevant. And that's been discussed. And the other factor that we were looking at was there were a lot of doubts about where the actual leakage was occurring and how much it would cost to fix that. And so I'm hoping that they have a much better handle on what the actual cost is going to be at this point. And I don't know if they do or not. So that's where that came from.
I suppose that the comment that it was imprecise was based on maybe a lack of itemization or
Yes,
something, or?
yes.
Okay. All right. Maybe the question's better suited for the town as well.
I think the engineer probably.
Okay.
Yeah. Thank you.
Thank you. Mr. Superintendent, did you have a follow-up on that as well? Okay, thanks.
Yeah,
Mr. Treasurer.
A couple of things, I guess. Maybe a clarification. Are you saying there is a contractor's drilling rig there on site all the time to continually plug the leak? Is that what I heard?
Mr. Hunt, if you're on, can you answer the treasurer's question?
They have removed the drill rig from the site for now. Their packer is still in the well. They'll have to come back with the drill rig and reinsert to remove that packer when the final completion takes place. They're estimating to be down about a month at that point.
Another, may I, Mr. Chairman?
Yeah, absolutely.
Yeah, I guess one of the questions I have is like, how long will this fix actually take? Because I'm assuming you're gonna, from what I understand, is that your two small wells are gonna be basically, you'll have to go on some kind of water rationing or something in June when you're or maybe even May when your demand goes up. So I'm wondering how long would it take to complete those after you've sourced your contractor and done your bidding or whatever you have to do to get everything done?
Based on contractor schedules and their estimates, the well will be down for approximately a month. The construction itself won't take that long. It'll probably be a matter of days to a week. But just due to their scheduling conflicts with everything else, this being kind of an emergency thing that came out of nowhere to everybody, it'll be approximately a month that the well will be down.
Yeah. The fix that you've done here now, I guess this is a temporary fix. Is that good for 6 months? Is it good for 2 hours, or what type of guarantee on the time that it'll remain fixed?
There's really no guarantee on the length that it's viable, I suppose. It seems to be holding and holding well for now, but it could probably blow out anytime. It's a weld on, old casing pipe.
Okay. Well, Mr. Chairman, I think I'm inclined to make a motion. And
hold on to that
Yeah.
for just a sec so that the auditor can ask.
Oh,
Mr. Chairman, thank you. A question for the town. Have you spent the ARPA allocation yet that you received last June?
Yes, we did.
The full amount?
Correct.
And do you have plans to spend the approximately 160,000 that's coming in a month or two?
We do. We have a sewer project that is on phase 2 that we're spending that on.
Thank you.
Okay. Thank you. Mr. Secretary.
The question regarding the preciseness of the price of the fix, $100,000. Do you have the engineer there, or your public works director could tell us perhaps if that's how accurate those numbers are?
Those numbers are coming from contractor estimates, and money already basically spent on their end. I think invoicing comes to a little over 60,000 currently already invested in the project.
Follow up.
It may be a follow-up for Ms. Blackwell or whomever. I don't know if I'm hearing they've already spent $60,000 of the $100,000 needed. What are our rules on reimbursement under the MRG program?
For emergency MRGs, one of the other benefits is that we can reimburse for costs incurred prior to grant award. Because generally when emergency happens, you just got to get on it and take care of it. You can't wait weeks to come to Slib and take care of it. So that is another benefit related to an emergency MRG grant.
Mr. Superintendent, I saw you reaching for your button.
Yeah, I just want to make sure I'm clear what I'm hearing. So speaking to the engineer online, I forget his name. Is it Justin?
Jake.
Jake, I'm sorry.
No
So
problem.
Jake, from your standpoint, has the severity of the emergency lessened or been mitigated somewhat from the day it happened to now?
Currently, yes, because there's not water actively traversing the ground into the neighboring properties. I feel like the emergency will arise again as soon as this well's shut down for a month in May and June or June. Then I think the reality of the emergency for people in town will set in when they find out they don't have the water they're used to.
And Mr. Chairman, maybe the question more directed to you to the point you were making, part of the decision-making process here is determining the priority emergencies versus what we deem maybe the lesser emergencies. Is that correct?
That's a little bit of it. It's not intended to dampen any, and I don't think anybody here, it's just that conversation.
Yeah.
I did have, Jake, one question. I noticed in the I think your write-up that you're talking about the steel pipe having numerous holes, and that was sort of the cause of the leak.
Right.
How far does that steel pipeline extend, and how many more potential holes do you see?
It's actually quite short, and it's probably, I think it's 20 to 30 feet long is all. Its purpose was, this well puts out a lot of water. There's no controlling it, and it's fairly high pressure at the surface. I think roughly 100 psi. And it was intended to be a diversion line for completing the well, so they could actually divert the water down that pipe, complete the well, and put it back together. It's actually been used for that during this emergency fix as well. But that's really its only purpose, and it doesn't go to anywhere. It'll be repaired to the point where it's no longer an issue with this fix.
I see. So we're not looking at sort of cascading failure.
Right. It's the failure is in a part that's, kind of almost an unnecessary thing at this point.
Okay, thank you. Yeah, Mr. Secretary.
And Jake or whoever can answer that, have you been billed $60,000 or have you actually had to pay that yet?
We've actually paid that.
Okay. And then to Ms. Blackwell, again, so on the emergency side of things, we can reimburse. What happens if we get to June? Are they out the $60,000 that they've spent out of the $100,000 necessary to do the repair?
With a regular MRG award, we can pay for costs incurred prior to grant award for engineering and design. So any of the material they purchased, that kind of stuff, we wouldn't be able to reimburse for. So the design of the fix, paying their engineers, but other than that, we wouldn't be able to reimburse for other things.
Yep, follow.
And then back to the town, the $60,000, you have an itemization of what that covered? Because I think it's important to know for obvious reasons.
The cost. So we had the driller cost incurred in there, the parts for the fix, and the contractor to make that fix is what we're at right now.
So the $60,000 is not part of engineering costs or planning costs at all?
Yes, to date, that has been in there as well.
How much of the 60,000 is attributable to that?
About 6,000.
And just so my concern is that we get to June and we can't reimburse them. It sounds like for $54,000 of what they've already spent on $100,000 fix. And if that's true, that changes my analysis a little bit as far as the timing of when we take care of this.
Mr. Chairman?
Mr. Treasurer.
I guess I'm still ready for a motion, and the people, I guess, could vote it up or vote it down, but I think I think it's reasonable.
Okay.
So, Mr. Chairman, I would ask that the board approve the town of Grable's application to the extent that it does not exceed $75,000 in emergency MRG funding to repair well number 2 and defer and that's it.
All right. Thank you, Mr. Treasurer. Is there a support for that?
Second.
It's been seconded. I'm going to recognize the superintendent just because he needs one. So thank you, Auditor. Is there any discussion?
If the superintendent wants to make the motion, I'll withdraw.
No, thank you, Mr. Secretary. You had a discussion point.
And could, Mr. Treasurer, your motion, what was the amount of that?
75.
Okay.
Thank you.
And just to reiterate with the office, I mean, am I correct in that analysis that we may be more unable to help them in June? Okay.
Very true.
All right. Thanks.
Thank you. Further discussion.
Mr. Chairman, one more question, and I'm supportive of this motion, but in response to your question, we could help them in June with emergency, you can have an emergency in June as well, correct?
So that would be difficult because and this may be a matter to refer to the director as the order of things. If you accepted the director's recommendation as it's written, you would be deferring it to June for regular funding.
Gotcha.
In my tenure in my position, I have not had an application that we recommend denial of emergency funds and to defer it to a regular meeting to then consider it for emergency funds at that meeting that we deferred it to. Does that make sense?
It does, thank you.
And Madam Auditor, I'm going to have an executive order saying no emergencies in June.
No, because Elizabeth
Okay.
said so.
Yeah, all right. All right. Well, is there further discussion? Further discussion? Further discussion? Hearing none. All in favor of the motion signify by saying aye.
Aye.
Any nays? That motion carries. Thank you and congratulations. Thanks for the conversation.
Thank you.
Thank you.
Ms. Blackwell.
Mr. Chairman, that brings us to H2, which is to consider one application for Chapter 3 Emergency Mineral Royalty Grant for the town of Worland, Wyoming. Worland is requesting $184,349 in emergency grant funding to upgrade mid-block fire hydrant lines. In August of 2020, a cast iron mid-block fire hydrant line failed and flooded the closest house, which had to be torn down and rebuilt. The city has inventoried all mid-block fire hydrant lines, which run between adjacent houses from the main and the alley to fire hydrants in the front yard. It's been determined that there are 13 additional cast iron lines that require upgrades. The city believes these lines have been in service for at least 50 years. Due to the previous incident, the city believes that these 13 cast iron lines need to be replaced. The request of $184,349 is equal to 50% of the total project costs, with the city providing the remaining funding from its water reserve account. Staff has analyzed the application, and while they believe Worland's project is a good project, it fails to meet the definition of an emergency as required by the program. DEQ does not recommend approval of the emergency MRG application for funding, nor does the Water Development Office. However, the Department of Fire Prevention and Electrical Safety and the Wyoming State Forestry Division accept the application as necessary and recommend approval of the application for funding. It's the director's recommendation that the board deny the City of Orleans application for $184,349 in emergency MRG funding for the fire hydrant line upgrades and defer this application to the June 2nd Slib meeting to be considered for regular MRG funding, along with all other applications submitted.
Thank you, Madam Director. And let me ask one quick question, and perhaps your office knows, or perhaps the auditor does. I'm blanking on whether infrastructure funds from ARPA can be used for these types of projects, and would ask that. And then also, Ms. Blackwell, you and I have spoken for years about trying to figure out how to score these so that we have a way of not just responding to emergencies, but we have a way of sort of thinking ahead about how to fix these.
What was your first question? Sorry, I just blanked.
Are they infrastructure funds available for ARPA?
Mr. Chairman, ARPA funds may be used for water and sewer infrastructure. They're tied though to SRF eligibility. So the question here would be, would this be considered just for fire suppression? Because I believe within the SRF program, we cannot fund programs just for fire suppression. So there may be some additional analysis that needs to be done with the technical staff to truly determine, would this be an eligible project for the SRF programs, which then it would be eligible for ARPA.
Thank you. Any questions? Is there anyone from the town of Worland online? Mr. Bump?
Mr. Chairman, the mayor of Worland just had his hand raised.
Mr. Mayor, if you're, it looks like you're muted at this point.
There you go. Try it now.
Governor, how sweet it is to join you and the board this morning. Team Worland here with Jim Gill. I'm the mayor of Worland. We have our city engineer, Mike Donnell, with us. Our superintendent of public works, Nick Kruger's here on board, and our clerk treasurer, Tracy Glantz, with me this morning. Thank you for the opportunity to address this critical need that the city has at this time. But before I get to the details of that, I must tell you that I was tempted to put on a pair of bib overalls and old boots this morning to honor a past municipally elected official out of the town of Basin, Phil Juilliard. I'm sure many of you attending today remember him as well. He had to have had the blue ribbon of attendance to Slib board meetings in his era of service. He is gone now, but still highly regarded here in the Bighorn Basin. But let's get back to business. Folks, the city of Worland has 13 residential yards that we have these mid-block fire hydrant lines passing through. We had a cascading flooding problem here that was mentioned in the introduction of our application. The problem is, why do we consider it an emergency? Because we've done our due diligence to determine where we had additional lines like this when it happened, and we came up with 13 lines. We've gone through and prepared what it would cost us to take care of this situation. So when can the next one happen? It could happen tomorrow, or it could happen 6 months from now, maybe not 6 years from now. But it is, they're getting old. This is one of the things that a mayor comes into service his community, and you never know. But boy, do we know about how this can affect a given family when this happens. With that, I'm going to pass on to our city engineer, Mike Donnell, some of the other details of why this is considered important to us at this time.
Thank you, Mayor, and good morning, Mr. Chairman and board. I've been doing this for 36 years and I've never seen anything like this. In August of 2020, this particular line failed and destroyed the house next to it. Fire hydrant lines, of course, sit under pressure because you never know when they're going to be needed. That particular line had never leaked or needed any maintenance. If it had, it would have been replaced. We found out we have 13 of them exactly like it. When this one failed, the homeowner, of course, filed an insurance claim with the city of Worland. That was denied because there was no hint that this could happen. It came completely out of the blue as a surprise to everyone. And now we know we have 13 of them that could do the same thing. If it was just one or two, it'd be pretty easy to go do. Doing 13 of them this quick is a little tougher. And so that's why we thought it was pretty important. We don't want to drive anyone else from their home like that one. And they did not get a successful insurance claim. I think it was called a flood, even though it was a city water line. And we don't normally replace water lines that don't leak, but these 13 are going to have to be upgraded just as quickly as possible. So I'd be happy to take any questions.
Thank you, Mr. Donnell and Mayor Gill. It's always good to hear you. And it was great seeing you just a couple of weekends ago. Are there any questions for Mr. Superintendent?
Thank you, Mr. Chairman. So in working through this materials, I'm going to take the same tack as I did with the other situation. DEQ says there is, quote, no reason to expect such a failure would be imminent. My question would be, is there any reason to expect such a failure would not be imminent? And it sounds like what the mayor and the engineer are saying is, no, there is no reason to expect such a failure would not be imminent. Is that correct? Either Mayor or Mike Donnell?
Yeah, we didn't expect the first one to happen. It came as a complete surprise. And like I say, in our history of working with the town of Worland since 1932, I'm the third Donnell to do this. There had never been one of these actually fail like this. It was not expected. And so that's why the insurance claim was denied. And now we know there are 13 just like this. So it could happen any minute. Yeah, you just don't know.
So Mr. Chairman, if I may, there is no way to predict with any certainty that it could not happen again in the next couple of days or weeks?
Absolutely not.
There you go.
Okay. So then beyond that, as I was working through the material, I noticed 2 out of the 4 reviewing agencies did not recommend funding the request as an emergency, and 2 out of the 4 did recommend the funding, calling it an emergency. So essentially you have a split decision between the reviewing agencies, 50% for, 50% against. But you have the Worland Fire Chief, Chris Cocker, saying it needs to be done ASAP. You have project engineer Mike Donnell saying it needs to be done as soon as possible before another cast iron line fails and floods another home. Plus 2 out of the 4 reviewing agencies saying it meets the standard of an emergency. And I bet the house that got flooded to the point it had to be torn down and rebuilt, I bet those poor folks would call it an emergency. So you know where I stand on this vote.
Folks, in addition, I'd like to add to the point that was made, especially by Fireman Coker. What we explored just shutting down those lines to service a given, the other fire hydrants, and these are dispersed in other areas. It isn't just this one particular area that we have that situation as is. But my point is, we decided that in conjunction with Chief Coker that we would have to maintain and let them stay live in case a fire did occur, which could happen at any minute as well, as you well know. That's why, again, our options in dealing with this are very, very limited.
Thank you, Mr. Mayor. I have a follow-up from the secretary.
Thank you, Mr. Chairman. Just one thing for our consideration, and if the town would like to comment on this, I mean, if it is an emergency situation, your estimated drawdown of any grant awarded basically tells us that this won't be constructed until September, October, November of this year. And I guess my question would be, and design and permit is August of this year. So my question would be, have you accelerated that, use some of the town's money to get the plans and design done now, so that whether it's today or in June, if we were to grant you this money, you could start construction almost immediately? Because it seems to me, if it's a ticking time bomb, October, November is too far away. So that's just an observation. If you could clarify that for me, I'd appreciate it.
Well, and that may come down to, this is Mike Donnell again, this may come down to the fact that when I first put this application in, it was in February of 21 for the June meeting. And generally at those meetings, it takes a little while before you actually receive the money. And then you have to go through the advertising process. You have to bid it and it takes a while to do the bidding, and that was about as quick as it could be done. In this case, if there's any way to make that faster, such as we've already done the mapping, we already know which ones it is, that part will be fairly quick. So we've got, we can put together plans and specifications probably a lot quicker than normal, because we've already got it mapped out, already got them figured out, and we know the process to do it. It will be a pipe bursting process. So yeah, we would definitely speed it up as quick as we could, because I think legally we're on the hook here. If one goes again, we've had warning, and that's what scares us.
And I might add as well, we're asking for half of the cost that's expected to replace these, and it was surprising to this mayor to hear that this program would allow for requesting 100%. So anyway, just want to throw that in. We're putting skin in the game, folks.
Thank you. Follow up anymore? Okay, on Madam Auditor.
Mr. Chairman, for the town, a little bit of follow up to the secretary's question. I don't think that any of us resist the concept that this very much is necessary and needs to be done. But my question is, we've, the bar of the very strict bar of emergency that we, the board, have set, and we realize that's somewhat arbitrary, but it's allowed us to manage a very small pot of MRG funding over the course of 2 years. That's why we have any money left at this meeting, is because we have consistently said no to anything that was not very, very narrowly defined as an emergency. And so just know that that's kind of the way I'm framing my approach. So my question is, if this is truly an imminent emergency right now, this catastrophic failure happened 18 months ago, and there's been quite a few SLIB meetings come and go since then. Why have we not seen, if this is truly a dire emergency, why have we not seen this application in the last 18 months? So that would be my first question. And then the second question is, your timeline, as the secretary mentioned, is quite far into the late summer and fall. Does that timeline change at all if you were to know you get money today or the first week of June?
Yeah, again, Mike Donnell. When this first happened in August of 2020, we actually missed the next SLIB meeting, which was in January. And so we applied in February for the following meeting. That meeting was canceled. And so that kind of left us out on the limb. And we found out that we could apply for this one. We actually had this in to go to the next SLIB meeting. And we've prioritized these to try and get to the ones that are the most dangerous. For example, the one that failed, the line happened to go by a basement window, which when it failed, it burst through the basement window. It filled up the basement, started to lift the first floor. And it was because of the proximity of the house and the basement window that it was kind of a perfect storm. So we've looked at a lot of these lines around town to find out, can we narrow these down to the ones that really are potential problems, just like that one. And we've got it down to these 13. Now, we will expedite it. This is the first project we do as soon as we find out we can actually afford to do it. If we can't, we're going to have to guess which one is going to be the most dangerous. And out of these 13, that's pretty tough to guess. Yeah. We happen to find corrosion in the bottom of the pipe, which was discussed in the application. That's not something you can determine until it fails. The weight of the ground on the pipe and the weight of the pipe on the bottom of the pipe kept it actually had no leaks come to the surface, even though it had corroded the bottom of the pipe. We don't know if these other pipes have done the same thing. We assume they probably have. We have to assume the worst at this point. We'll definitely expedite it as much as we can. And it may have been a mistake on my part because the first application was for the June meeting, and that's as fast as I thought we could do it and meet the requirements for advertising the project. This got moved up to this emergency meeting kind of at the last minute, and maybe I didn't get the timeline changed for that, and that's my fault.
Follow up, Madam Auditor.
Mr. Chairman, the second part of my question was, if you know you get funding the first week of June or not, how does that change the timeline you have laid out in your materials, which is quite a few months from now?
I need to find the timeline. So that has design by July 15th. That leaves about a month for design, a month for bidding and advertising, which it does take, and another month to start construction. Now, the quickest I've ever seen the bidding and advertising go, you can advertise twice, 1 week apart, And if you can get a contractor doing that, you can jump on it. That has not been the case the past few years. It's been really tough to get contractors. Hopefully we can for this. If not, we're going to be doing it ourselves, I guess.
Mr. Chairman, one more follow-up.
Yes, please, Madam Auditor.
One more question. The town of Worland received 435,000 in ARPA funding last June. Has that been spent?
Chairman, no, we have not spent that yet. I wasn't aware that we could spend it on.
Sorry, you need to have the microphone on. I don't think we can hear you.
Our treasurer's here.
Tracy Glantz, Clerk Treasurer. Chairman, we have not spent that money yet. I was not aware that it could be used for this type of project.
Mr. Chairman, could I just take a moment? So there's been a really substantial change in ARPA guidance that came through in January. Previously, we spoke a lot about direct ARPA dollars versus revenue replacement dollars. And all of our small towns and counties were going through the complicated lost revenue calculation that the state did. Every little town and county and municipality was doing that same thing. The guidance has been loosened up substantially in any entity that received up to $10 million can claim up to $10 million of revenue replacement. So the effect of that is every single non-entitlement unit in Wyoming that got ARPA dollars, it can be used for almost anything. Any general government expense, save the very few 3 or 4 restrictions like debt service and pension deposits. And so that essentially affects every county and every city in Wyoming, save Natrona County, Laramie County, and the city of Cheyenne. And actually those entities can assume up to 10 million in lost revenue as well. The calculation is no longer necessary. It doesn't matter if they've actually have lost revenue or not, but essentially it allows any town or city to spend their ARPA allocation on almost anything.
Mr. Chairman?
Mr.
Quick
Superintendent.
question by way of clarification. So Worland has $435,000 of ARPA monies still?
And
that
Mr.
what we're
Chair,
hearing?
yes, and Mr. Chairman, as a follow-up, it's anticipated that they would receive a similar amount in June of this year.
And that some of that money can go to fix this problem, you're saying, Madam Auditor?
Mr. Chairman, unless the town were, like I said, that's why I asked if it had been spent.
Mm-hmm. Thank you.
Thanks. Ms. Blackwell, I think it would be helpful if you can kind of walk through the timeline. That's a little bit what my thought is here. If I understood Mr. Donnell, they had anticipated putting it in for a regular MRG meeting and then move the timeline up as an emergency funding issue. So can you walk kind of through that?
Yes, sir. Mr. Chairman, with this happening in August of 2020, they could have started applying for emergency funds for that starting October of 2020. They didn't have to wait for a regular meeting. If they thought this was an emergency, they could have applied at any regular Slib meeting. During the 21-22 biennium, I'm going to use round figures. We had approximately $13 million to award in the MRG program. That's compared to our 32.3 that we used to get. So huge decrease. With that limited funds, what the office proposed to the board and the board ultimately approved was we would have one meeting at the beginning of the biennium, so January of 2021, and then we would skip the June meeting for 2021, the January meeting for 2022, and then have a final meeting, which is this June. That was our approach to being conservative and ensuring that we had emergency funds to fund any emergency that came before the board through the whole 2 years of the biennium. That was our plan. We had issued notice on our website that those meetings had been canceled. As I stated, the board approved a board matter to cancel those meetings. They were also noticed on our due date spreadsheet that those meetings had been canceled. So that's the situation with the meetings. The one other thing I would like to suggest to the city is with regular MRG funds, we can reimburse for costs related to engineering. So you can start your engineering today, yesterday. Those costs would be reimbursable with a regular MRG. So there's no need to wait until you're awarded that grant if this is truly an important project and you're going to go forward with it regardless. One of the other things I think it's important to share is when we look at these applications, we look at it many different ways. One of the things that jumps out to me with this one is the lines are 50 years old. They keep saying they hadn't leaked, but they haven't talked about, were they inspecting them, making sure the quality of them was in place. The other thing the auditor brought up is it's taken 18 months to request this project. So to me, it appears more as a maintenance project versus an emergency to address an emergency. You know, this is a what if situation. And so those were some of our thoughts going into this of how we analyze this. And lastly, the other thing that I look at generally when I am reviewing these applications is I look at an entity's financial statements that are included in this, their packet. And their water reserve account as of June 30th of 2021 had $3.2 million in it. So that's something else we look at is, can the community afford the project without the help of a grant?
So Ms. Blackwell, just, I know these are difficult decisions for you and you have to be kind of sober in how you assess these. And and this is not necessarily the case with Worland, certainly, but I know one of my first sort of meetings, a long time ago, longer than I care to remember, the practice at that time was maintenance was failure. You know, we would have failure that would come to the board because that was a way to get funding to do that. And I know at the time we were really trying, and I think we continue to try this. COVID sort of intervened, but we were really trying to start to identify preemptively because it's much easier to sort of do the maintenance or kind of fix things before they become catastrophic. And that I think is a practice that we need to continue to work on, even with these ARPA dollars, because failure is not a good option. So I just wanted to put that kind of a little bit in perspective. It is interesting. I think auditor, you bring up a good point, and thank you for that. About the availability of those funds. Certainly the issue here in Worland is a pressing one. And I see Director Reed's comments, and I think they really speak to the situation as being important, but I don't think they talk about it as being emergent. With that, I don't know what the pleasure of the board is. Madam Auditor.
Mr. Chairman, I would move the director's recommendation, and again, would very much hope to see Worland back at our June meeting.
So you've heard the auditor's motion to deny per the director's recommendation, but to encourage coming back for June for Worland. Is there support for that motion?
I second it, Mr. Chairman. Given what I've heard with more context, I would second it.
Thank you, Mr. Superintendent. It's been moved and seconded. Is there any discussion?
Mr. Chairman.
Mr. Secretary.
Just simply some reiteration, but certainly please understand that we know that this situation is something that needs to be taken care of. And these are the tough decisions we have to make. But it sounds like with the funding and the timing, some of those issues, I think you can get started like immediately to get your plans and design in place. And appearing at the June meeting, I don't think is going to present any obstacles to you addressing this very serious issue. Thank you.
Thank you, Mr. Secretary. Any further discussion? Mr.
Chairman,
Treasurer.
Just for informational purposes, they're at a 50-50 grant this time, but in the regular mineral grant process, those are normally what, 2/3, 1/3?
Mr. Chairman, Mr. Treasurer, it is dependent on if an entity is eligible for 75% grant, but historically, I'd say for the last 4 years, we've erred towards 50-50 grants to ensure that the money goes further.
Right. Okay. Thank you, Mr. Chair.
Thank you. Thank you, Mr. Treasurer. Yeah, for anyone listening, I would just point out the MRG stuff is the funding has just really radically declined over the years. And I think it's shows a lack of understanding of how important they are to communities. That's a legislative issue. Any further discussion? Any further? Hearing none, all in favor signify by saying aye.
Aye.
Nays? That motion carries. Mr. Mayor, thank you, and Mr. Donnell. We look forward to seeing you in June, and certainly hope for the best in the meantime.
Thank you, Governor.
Thank you for consideration. Thank you.
Thanks.
Mr. Chairman, that brings us to H3, which is to consider an application for Chapter 3 Emergency Mineral Royalty Grant for the Laramie County Fire Authority in Cheyenne, Wyoming. The Laramie County Fire Authority is requesting $74,599 in emergency grant funding to replace 18 complete self-contained breathing apparatus, which include the harness, air bottles, spare batteries, face pieces, MSA safety hub, and compatible rapid intervention team rescue packs. An internal assessment was performed by the district 3 years ago, where it was found the condition of the equipment was identified as a pressing need. The current equipment has been in use for over a decade and is quickly approaching the end of the manufacturer's useful life. The requested amount is equal to 50% of the total project costs. The remaining matching funding will come from the Laramie County Fire Authority's general fund. Staff believes the Fire Authority's project's a good project, but unfortunately fails to meet the definition of an emergency as required by the program. The Wyoming State Fire Marshal and the State Forestry Division accept the application as being necessary and recommend approval of the application. The director's recommendation is that the board deny the Laramie County Fire Authority's application for $74,599 in emergency MRG funding for replacement of the self-contained breathing apparatus and defer the application to the June 2nd Slib meeting to be considered for regular MRG funding along with all other applications.
Thank you, Madam Director. Are there any questions of the staff?
Yeah, Mr. Chairman.
Mr. Treasurer.
You know, from what I understand, that your self-contained breathing apparatus is extremely important, especially in the areas of preventing cancer. And that's a stretch, you might think, but a lot of fires you get into, you have no idea what the chemicals are. And that's a leading cause of cancer within firefighters. And so, you know, this definitely truly is a life and safety issue. If you get a failure of that breathing apparatus and you're in a fire where you should be using it, that's a dollar figure just on cancer treatment that dwarfs $74,000 for any one patient. And so, you know, I guess it's I just wanted to draw that to everybody's attention that there's basically truly a health and safety issue, not just a life issue, but a health and safety issue with having properly functioning equipment.
Thank you, Mr. Treasurer. Any other questions? Hearing none, is there anyone from the Laramie County Fire Authority who would like to address the board? Mr. Bum? Oh, there we are. I'm sorry, I'm sitting here staring at my screen. Thank you.
Good morning, Mr. Chair and members of the board. Jason Coy, Fire Chief, Laramie County Fire Authority. If you don't know who we are, we used to be Laramie County Fire District number 2. We've merged with Laramie County Fire District 8 over the last year in an attempt to maximize the taxpayer dollars and better service. We identified this project 3 years ago before it became an emergent project. Through our organizational assessment, NFPA, the National Fire Protection Association, deems how long SCBAs can last. With that, they also upgrade standards based off of new technology and risk to firefighters. So 3 years ago, we identified this as a major concern for us. And so we attempted to fund this project through multiple means: Assistance to Firefighter Grants Program, through FEMA, and so forth. A year ago, we were ready to present to the board a project about $350,000 to replace all of our SCBAs. We were told at that time that the June meeting was going to be denied. So we pivoted it again and applied through FEMA for assistance. That'd be the 3rd year in a row that we applied through FEMA to fund the project. Fortunately, we were awarded that project, but only at half the value. So what happened, and what now has created this to be a true emergency, is one, we have failing outdated equipment that the manufacturer no longer services. Part of what the directors stated as far as the need for those breathing apparatus, they have to go through an annual service. That service is now null and void annually because the manufacturer doesn't recognize those units as feasible and usable. With that, they no longer have parts for them. So now we're internally servicing those remaining packs by robbing parts and pieces off of old packs that the manufacturer has given us to utilize for parts. So basically, we're going to the junkyard and getting parts to put on our apparatus and now sending our members into those hazardous environments. Through AFG, we were awarded that grant, but again, at a reduced amount. We were able to replace half of the needed SCBAs for our jurisdiction. That's really compounded the emergency. So now we have half usable, half unusable. So a third of our organization, now the interoperability between the old stuff doesn't match the new stuff. So the face piece doesn't match the regulator. So when you get in the fire truck, you have to have the right face piece for the right pack that's in that apparatus. Secondly, the rapid intervention kit, which is the tools that we use to go in and rescue our own firefighters in the event that they succumb to those risks in those buildings, doesn't match because they're not interoperable between the two of them. Thirdly, we've had to reduce the number of packs on our apparatus. So now we have fire trucks that normally would have had SCBAs that no longer have them. So those 3 or 4 pieces has critically impacted the immediate life safety of our folks. We have 100 volunteer members. We have 120 staff total. Their participation, especially for our volunteers in our community, which is harder and harder to get volunteers, their life safety is important. And if they don't feel confident in what they're using and that's going to provide them safety, their purpose of wanting to respond dwindles. On top of that, every time we use them, it's kind of like, I grew up in Minnesota in the 1970s. When you used a snowmobile, every time you used it, you had to fix it. That's pretty much the status of our old SCBAs that we're trying to replace today. Out of service, non-compliant with national standards, can't get parts for them. Every time we use them for training, guess what? We're having to steal another part off of the junk pile to make them work. That's hard to explain in written form for the staff to be able to divulge all that. So we would really ask that you consider approving this project. We have 50% match in it. We are prepared today. We have a bid in hand to order those today. That bid is good through the 15th. There'll be a 12% increase following that. So another $17,000 roughly onto our existing request. So that's why we'd prefer to be able to move forward today. And we do believe it is an emergency for the life safety of our firefighters.
Thank you, Mr. Cloyd. Any questions?
Mr. Chairman,
Madam Auditor.
could you talk to me in numbers? How many
SBCA's does this, how many do you have? How many does this purchase?
So before, when we first did our initial assessment, we had almost 40 SCBA's. Through the grant that we received through the federal government, we received 18 of them. This grant or this assistance program, we're going to receive another 18 to 20. Right now, the bid is for 20 of them to be able to match up with what we originally started with. So we're not increasing any. We're trying to get back to where we were.
Thank you.
All right, further questions? Further questions? Hearing none, what's the pleasure of the board?
Mr. Chairman.
Mr. Treasurer.
I am kind of passionate about this particular one there, as you guys saw, because that's one of the things when I was in the legislature, we had the firefighters in the committee I chaired. So I know quite a little bit about some of the things that happens in these cases and the safety issues. So it's a small amount of money. I think what we'd be looking at if this went to June we'd be looking at trying to get the most amount of money to the most participants and probably doing some of the smaller things here. But even though this is a small amount of money, I think it's extremely important. So, Mr. Chairman, I would make a motion that the board approve the Laramie County Fire Authority's application for $74,599 in emergency MRG funding for replacement of self-contained breathing apparatus. Period.
Thank you, Mr. Treasurer. You've heard the motion. Is there support for the motion?
I'll second.
It's been seconded by the auditor. Is there any discussion? Is there any discussion? Is there any discussion? All in favor signify by saying aye.
Aye.
Nays? That motion carries. Ms. Blackwell, I hate to do this to you, but can you tell us what our running total is? I don't think it's diminished that much, but we always want to be pretty cautious about it.
Sorry, $5,426,000, $26,870.
Thank you.
You're welcome.
Madam Director.
Mr. Chairman, the next matter is H4, which is to consider one application for Chapter 3 Emergency Mineral Royalty Grant for the City of Rawlins. The city's requesting $6,144,708 in emergency grant funding to rehabilitate the city's water supply infrastructure. During the summer of 2021, the city discovered that its water service delivery system had multiple leaks, 20 miles of corroded pipeline, faulty blow-off valves, and an antiquated SCADA system that was partially serviced at the points of collection by 108-year-old wood stave pipelines and spring boxes. In response, in October 2021, the city submitted an emergency MRG application to the board for $750,000 to address failing transmission and distribution lines, which was denied because it was determined it did not meet the definition of an emergency. On March 3rd of 2022, the city suffered a failure of its water service delivery system. The city was already restricted to 2 water collection resources due to leaks at the Sage Creek collection sites and was barely collecting and processing water to fulfill their daily water supply. A pipeline that was being repaired was put back into service and unfortunately failed. Also, water that had been collected in the reserve tank to get the city through until spring had dissipated due to leaks at the storage facilities, and 2 faulty blow-off valves added pressure and stress to the lines. When 3 lines broke, 60% of the community was without water. The remaining 40% of the population with water had non-potable water, which was subject to potential contamination due to bacteria entering the leak sites. The city was immediately put on restricted water use and a boil-only advisory was issued. The city has made some immediate repairs in order to bring its system back online. The water reserves are slowly filling up again due to compliance with the city's water restrictions. The requested $6,144,708 is more than the funds available in the current MRG funding account. It's equal to 63% of the total project costs and will be matched $1,550,000 from the Sage Creek Basin Springs Phase 1, $1,252,292 from impact assistance funds associated with the Choke Cherry Wind Project, and a pending community development block grant in the amount of $750,000. The Office of State Lands and Investments believes the city's project's a good project, but the entire rehabilitation of the entire system fails to meet the definition of an emergency. It's believed that immediate repairs required to bring the system back online from the unexpected breakdown may meet the definition of an emergency. The city and staff spoke and we tried to understand what maybe a smaller amount might look like that could address the emergency nature of the project. We were provided a number around $1.5 million, but then did not receive any further documentation or an amended application. So we were unable to fully evaluate and understand the city's smaller request for emergency funding. We also believe that the city could explore other project funding options through the ARPA funds, for eligible water and sewer projects, local government support projects, or state revolving funds. So the SRF program might be an option. They also may wish to explore funding opportunities through the Water Development Office. Our sister agencies, DEQ and Water Development, do not recommend approval of the City of Rollins emergency MRG application for the 6 million plus. It's also our recommendation that the board deny the city's application for $6,144,708 in emergency MRG funding for the rehabilitation of the entire supply infrastructure, and defer this application to the June Slib meeting to be considered. Maybe aspects of it could be funded through the regular MRG funding decisions of the board.
Thank you, Madam Director. Ms. Blackwell, I was going to ask about the the SRF funding. And then the other question I guess I have is rural development. I know that communities find rural development funding complicated, a lot of paperwork to fill out. There's engineering has to be done by PE. It's kind of a hassle. But we have routinely left on the table millions and millions of dollars just because it's a hassle. I guess, could you give us a little bit of perspective on whether, because I think you've been working with Lorraine and others to try to figure out how we can access more of those dollars. Can you just kind of highlight some of that?
Mr. Chairman, we've always tried to work with USDA, and like you said, it's difficult because entities don't want to work with USDA and you can't force them to. I mean, it goes back to what we say about our loans in our office. It's a 4-letter bad word. Nobody wants a loan if they can get a grant. It's just facts. And so with USDA, you don't know what grant funding you're going to get up front. It's kind of at the end of the ballgame. So things aren't known up front for people, which they don't like. What we've done recently with USDA is we've been working with them on the Town of Lusk's big improvement project that includes water, sewer, and their streets, as well as curbs and gutters and sidewalks. What we are doing is currently we have phase 1 and 2 funded through Clean Water SRF, Drinking Water SRF, our capital construction loan program, as well as some funding through USDA. What will end up happening is the majority of our loan funds are going to be used to construct the project. They're going to come in when the project is 80% complete and complete the last 20%. They're going to come in and take over our loans and pay them off. And so Lusk will only have a loan with USDA rather than having multiple loans. So this is very beneficial for the community. However, it can be detrimental to our SRF programs in the sense that it decreases our utilization rate, which can put us on the radar with EPA. So this is going to be a very balancing act that we have to do. Joint funding is going to be great, but if at the end of that joint funding, they're always going to come and take us out, that's going to cause a problem. But the thing that may reverse that, to be honest with you, Governor, is SRF staff is looking at interest rates within that program. They're already really low, but we're trying to figure out how do we work with our big communities and entice the Cheyennes, the Caspers, the Gillettes to come here versus bonding. How do we make that more affordable? And so we're once again contemplating lowering those interest rates. And so it's just going to be a balancing act with USDA in our office. And truly, it's a decision that the applicant has to make and be committed to and be willing to go through the process, because it is a long process. But a recent entity that went through it, who will tell you it was a headache, it was rough, would be the town of Upton. However, Mark Lindstrom will tell you with that PER he had to do for USDA, he has a great roadmap for what needs to be done in his town, which is something that most towns lack. And I think Grable would admit to that, Worland would admit to that. Mayors come in and they don't know what's in the ground. They are going to deal with the squeaky wheel or the first leak. If these mayors came into their positions and had a capital improvement plan, even an inventory of their systems, they would at least know where to go start and make their systems improved, rather than having these emergencies come out and be like, oh, we have to redo our whole system now. If we had planned and they knew what their condition of their system is, they can then come in and do preventive care or preventive projects versus having to come in and do emergency projects, which generally cost a lot more.
Thanks. Mr. Treasurer.
What's the cost of doing that plan? Are there any, planning grants or anything like that, or anything that we could do to, get the first part of it so we could leverage that plan?
Mr. Chairman, Mr. Treasurer, SRF staff once again is working on developing an opportunity through the SRF programs to give grants to capital improvement plans. We could also use the ARPA funds to do capital improvement plans as well. We could fund a whole bunch of $50,000 to $100,000 capital improvement plans for all the small communities. They could then come to us when we have the infrastructure funds, which some of it will be at 100% principal forgiveness, to do the projects that are identified on their capital improvement plans. I mean, it's kind of a horse and buggy thing. I mean, a lot of times people's buggy is in front of their horse, where if they had that horse, which is their plan, the map of their system, everyone's going to function much better, more efficiently, and our money is going to be used much more wisely.
Yes, Mr.
Are
Treasurer.
any part of that have to do with establishing the right proper amount that water rates are levied at?
Part of a capital improvement plan is reviewing rates and reviewing their ability to function in the future. How are you going to continue? How do you have to continue to raise your rates to ensure that you're not losing money on your enterprise accounts? Because the costs of operating a system are ever increasing. However, if a community or a system is not increasing their rates at the same time, they're going to be losing money, and they're going to end up having to use other funds to supplement that. And in fact, those enterprise funds should be paying for operations maintenance, as well as saving for a rainy day and saving for your maintenance projects.
Thank you, Mr. Treasurer. Any other questions for the staff? Mr. Metcalf, I see your hand is up. I don't know if there's anyone here. Yes.
Yes, thank you. We have a couple of people here that would like to speak for a moment. I believe Andrea Hammond is there in person. Myself, city manager, and then Austin Gilbert is our city engineer. And I'd like to, if we may, we'd like to take a few minutes
Absolutely. Let me recognize Ms. Hammond here. She's standing at the podium. So,
Thank you, Governor, Honorable Board.
and for the record, would you just introduce yourself with a?
Certainly. My name is Andrea Hammond. I'm the grants writer with the City of Rollins. And I just wanted to, I'm a little bit caught off guard because we had discussed with the Slib staff amending our grant to 1.3 million. And I thought that paperwork had gone in, that Austin Gilbert had a conversation with Shauna Perkins. And so I'm a little bit thrown off, but I'm just going to make a case for us to get the 1.3 million because we desperately need it. On March 3rd, the City of Rollins and the town of Sinclair, who also receives our water money, our water services, and the Sinclair Oil Refinery, which uses it to process its oils, suffered a catastrophic failure of the water service delivery system, causing a dire emergency for our community. The system has been operating on a 108-year-old wood stave pipe system and spring boxes that are over 50 years old, allowing 8,000 gallons of water to be leaking per minute, as well as our 20-mile pipeline, which has leaky blow-off valves and is rife with holes, leaving it open for contamination. We are operating on a dangerous situation, basically. On May 3rd, 2 pipes burst, the SCADA system was defective, the pump failed, and the water reserves in the tank that we had that would have covered that emptied out. So we had literally no potable water for the entire 2 towns. We were under a boil delivery advisory notice by the EPA for 6 days. The schools had to be shut down because of, obviously, with COVID and hygienic issues and having porta potties and things like that. Our economy suffered tremendously. For 6 days, our restaurants were shut down for hygienic issues again. And the servers who depend on tips, they were out without money for 6 days, as well as the restaurant's revenue. So it's really hurt our community to be going through this. What I'd like to say, just on behalf of the town of Rollins, it was amazing to see how our community pulled together and how the state as a whole grouped to help us. In those 6 days, we got 99,000 bottles of water donated to us from churches, other municipalities, and businesses in our community. So it was wonderful to see. The high school students, since they had a day off school, passed out water at the fairgrounds. People were just wonderful. The firefighters put on a barbecue. We were trying to do the best we could with the bad situation. But the reality is, this summer, we're going to use 5 times as much water as we use in the winter. This is going to happen again. And we desperately need to at least have the 1.3 million to fix the leaky blow-off valves, which are our critical situation right now. I'm not an engineer, but as a citizen of this community, this really hurt us. And we're just looking down the tunnel to it happening again. We're putting water restrictions in place. We're looking at raising our water rates. We've written CDBG grants. We're looking into USDA funding and have started on a PERS process. We're really trying to use anything we can to leverage money, but this is an immediate crisis. We can't wait till June. We need to get the money now to fix this problem now, because if June, then we're a couple more months down the line of actually being able to fix it. That's all I can say, and that's just coming from my heart. I'll let Austin, the engineer, address the actual engineering points of this and why we need this money so desperately.
Thank you, Ms. Hammond. Mr. Metcalf, do you want to address, or does Mr. Austin? Is it Mr. Austin?
It's Austin Gilbert, sir.
I'd just like to make one comment and then turn it over to Austin. All of us that are here today are new to the city. I've been here the longest, with 1.5 years. These are some issues that we've encountered and we're dealing with, as Andrea said, every possible way that we can. I just want to address specifically the rates that I have, even as last night I talked to the council and told them we have to raise water rates. There is not a choice. We need to be setting ourselves up in the future for a better situation. So that is something I can promise you I will not stop until they change those rates. I want to turn the time over to Austin now.
Honorable Chairman and Board, thank you for your time listening to our needs. we're in a situation here at the city of Rollins where if we do any regular maintenance on our transmission line coming from our main source of water, we will be in a low pressure situation again. We are walking on the edge of a blade. We have absolutely no power over our situation except to have a major construction project to replace our blow off valves and our air release valves on our transmission line, and to also perform cathodic protection. Ultimately, the result of our cathodic protection system going down within the past 20 years has led to substantial corrosion on our line, such that we cannot even perform regular maintenance. If we open any of our blow-off valves, what happens is that the bonnets will shear, and all of the pressure to town, it'll be cut in half, potentially, or even more. And it could even introduce contamination into the line. So anything that we do for regular maintenance right now, we are in such a dire situation that if we do any regular maintenance, we'll be back probably on a boil order within the next 30 days. Anytime we touch our transmission line, anytime we try to work on our air valves, the air release valves, those particular air release valves are, if I'm not mistaken, there are close to 90 air release valves. Anytime we touch those, due to the corrosion or other mechanical action, those often split. We had 2 of them fail during the water crisis in early March, and we've lost 3, I believe 2 of the blow-off valves, and in one we were able to rehabilitate pretty quickly. But the issue is any work we do right now puts us in a situation where we're going to be in a boil order. So we're right now, we're taking the time, we're working diligently, and we're creating a package for seeking after loans, effectively speaking, with USDA. We're looking at trying to fund a larger project overall that incorporates a lot of different facets that we have in the city that are in need of replacement. Overall, right now, what we've identified in the city for just immediate needs for a replacement of existing infrastructure is over $17 million. That includes tanks, iron ductile lines, transmission lines, cathodic protection, the blow-offs, the air valve, Spring Valley, Sage Creek Springs Basin, the collection system. That includes the vaults for the collection system, the spring vaults. That includes the existing wood stave pipeline that's still up there. That is over 100 years old, and these sections all need to be replaced. We've got to replace our tanks. We have 2 farm tanks, what's what we call them, at over 3 million or 7 million gallons each, and those need to be replaced. And so we're in a position where we have to, regardless of what we get from Slib, whatever is given to us, we're going to have to get a loan to be able to perform this work. And right now, if I'm not mistaken, the MRG royalties that remain are not close enough to be able to even help us in a substantial way beyond probably $1.5 million. And so what I did is I sent an additional amount of documentation over to Shauna Perkins such that it would demonstrate what would be the absolute need, which is about 50% of the total cost of this project to get the blow-off valves and the air release valves repaired and the cathodic system back online. And that would be just enough to get us started. And I really appreciate the time and the efforts that you've taken to review our application, and I really look forward to hearing your response for our request.
Thank you. Thanks very much. Questions from the board? Mr. Superintendent.
Mr. Chairman, maybe this was already stated by the individual that was just speaking. Was that Austin?
Yes, sir.
Okay. But how much to get it started? Yeah, you said 50% of the total cost of the project. How much would that be?
1.3 million of the blow off valves and the leaky valves. That's just to address the immediate emergent. We can't even do maintenance right now.
And does anyone know if Rollins has any ARPA funds left?
We designated all of our ARPA funds for water infrastructure.
We put in
Thank you.
1.7 million so far.
Okay.
And that's from not just ARPA, but also impact funds and general funds.
Thank you, Mr. Superintendent. Follow up on that. Okay. Madam Auditor.
Mr. Chairman, not really a question, just a statement. I mean, from the packet, we obviously have both of our experts saying, yes, this needs to be done, but it doesn't constitute an emergency. But one of the other concerns is even with the complete application, there's conflicting and unclear cost estimates for the project. And so now it's very difficult to consider an amount that we have no support for and no data on in this short period of time. Again, Mr. Chairman, not really a question, just a statement.
Okay, yeah. So this is Austin Gilbert again, city engineer for the city of Rollins, and I'd like to speak to that. So over the course of the past year, we've had 2 engineering firms provide preliminary cost estimates for the work. And in that, we provided the most accurate information that we could. These are from licensed engineers. The information that you do have is from licensed engineers. In terms of this being designated as an emergency, let's see. The best way I can describe it is that if you did any maintenance to your system and it were to fail, would that be considered a crisis? Like, at this moment, we literally cannot do anything to our system to maintain it. We cannot operate our system to maintain. I don't understand what constitutes an emergency. If you would please give me the definition of an emergency and what constitutes an emergency, maybe I can speak to that to a better degree.
Mr. Chairman.
Mr. Treasurer.
Yeah. The question I've got is on page 2 or 3 of our application here, or our material. There's a $1,550,000 from the Sage Creek Basin Springs Phase 1. Could you tell me what the Sage Creek Basin Springs Phase 1 project is?
Yes, sir. Thank you for asking. So this is Austin Gilbert again, city engineer for the city of Rollins. So speaking to the Sage Creek Basin Springs Phase 1 project, that project was planned back in November by city staff so that we would be able to provide water during the summer months, the upcoming summer months. We were in a situation where we were under water restrictions because of the existing Sage Creek Basin Springs collection system being, it would leak so much that we could not provide enough water to town to meet the needs for irrigation. And so we set that project up as an emergency project and moved forward in a way so that we could have water this summer. And it has been able to, it should be coming back in line here in mid-June. And hopefully we'll be able to have some irrigative assets shortly. So, but then also I would like to speak, if I may, about the grant request amount. So I was asked more directly as far as what would it take to get us started. And I looked and I generated a smaller estimate to the amount of $1.57 million. And that was based on estimates from WWC Engineering and from Sunrise Engineering. And as you're well aware, costs for everything are going up to such an extreme rate right now that we're seeing costs for projects from last year going up as much as 40%. And so a lot of these costs, yeah, it is quite a bit of a range between these 2 estimates that I provided to Ms. Perkins, but I do believe that it is relatively accurate and we'll be able to get us started on this project where we would do the air release valves, the cathodic protection, and do the replacement of and relocation of the blow-off valves.
You mentioned that that you've done some work with the Wyoming Water Development Office there. So was that a planning grant, and did they put together a phased-in plan for implementation to get your water system back on track?
Andrea, I believe, spoke to the Wyoming Water Development Commission. Is that correct?
Yes, I've spoken to them about possible funding resources, but the phase 1, phase 2, and phase 3 were done by an engineer previous to the water problem happening. They were already broken into phases, and phase 1 was the Sage Creek one that he was just addressing. Phase 2 would be these blow-off valves.
Okay, so Mr. Chairman, you are following a plan that was developed, but not by WWDO or DC or whatever.
Right, correct.
Yeah. Have you talked to the Wyoming Water Development Office, and have you applied for any grants there?
We have been in contact with them since this water emergency happened, and we do plan on applying for money with them as well.
Yeah, 'cause that's really their bailiwick is transmission and wells and things like that. They don't do distribution, but they'll do everything else. Yeah. Thank you, Mr. Chairman.
Thank you, Mr. Treasurer. Ms. Blackwell, it strikes me that there is around $50 million coming to Slib for water projects, and that should be available starting July 1. Is that correct? I know we have a process we're going to have to go through and build all that, but I just wanted to get a sense of that.
That's the plan. As long as everything runs smoothly, we would hope to be receiving applications in July, and depending on the number of applications that are received, we would set a board date in the future as to when we would review them.
Okay, and to Mr. Metcalf and Mr. Gilbert, it sounds like you sort of inherited a problem that the dimensions of which you had no concept of until you started looking at it. Now it's pretty much systemic and potentially catastrophic. And if I understand you, you can't sort of look at it piecemeal. You have to do the whole thing at once. Is that a proper assessment?
Yes, sir. At this time, we feel that we could do some piecemeal just so that we're not in such an emergent situation where if we worked on these air release valves, the cathodic protection, and the blow-off valves, we may be able to have a sustainable transmission line into town, which is the largest reason why we went under the boil order back in March.
Yeah, and I think you may have heard earlier my recounting that there used to be a deal where people just let stuff get to the point where it was all going to fail, and then it was presented to this board as an emergency, and that was the way to jump the queue on MRG and get your project funded. And I'm not suggesting that's what you're doing at this point. I'm just saying that was the practice. And so we did not have a particularly good way of analyzing these things. And I'm thinking of, the town of Newcastle has a project very similar right now with their sewer system, where, it's been several years. They've known about the problem, but they haven't addressed it. And in this case, it looks like you have wood stave, and it's been a while. I don't ever remember doing wood stave piping, but I have run into wood stave piping, and I'm just sort of thinking that there's been an emerging problem here, not an emergency, but an emerging problem for some time. And I'm just trying to get a kind of a bead on how on how we look at this. I know this doesn't diminish in any way the challenge the community is facing at this point, but I am wondering if there isn't a way to address it more completely by somehow getting to midsummer. And I know you're worried about summer water supplies. I just want to give you a chance to address that. And I understand you've inherited this problem, so it's not yours. It seems like it's been one that's been building over perhaps a couple of administrations.
Yeah, if I may, this is Sean Metcalf, the city manager. You're definitely correct. This is something that we have inherited as we're all new here. And it just reached a point where it reached a head that we have had all of these issues. And I just would say again, my philosophy is that all of our enterprise funds are taking care of themselves. I would never want to come back for another emergency funding ever again. Honestly, I don't want to ever be in that situation again. It is really what we're in right now. And we could really use the help at this moment, just with the lower amount, not the total that we've requested, but this lower amount just to get us by right now, and so that we can get ourselves in a better situation. And sincerely appreciate everyone considering that.
Thank you. Any further questions?
Mr. Chairman,
Superintendent.
so what would the lower amount be?
The lower amount that we were looking for is the 1.57 million.
Okay, thank you.
Thank you.
And may I make an additional comment? This is the city engineer for the city of Rollins.
Sure, please go ahead.
So we do have debt service for some water infrastructure projects in the past 20 years. Sean, do you know the amount that we have for debt service that we're currently?
I don't have that number off the top of my head, but one of the things that we are doing right now, in addition to what we've talked about, is we're going to try and pay off as much of this debt service so that we can take on some new loans to deal with this situation as well. We're literally doing everything that we can think of to deal with this problem right now.
If I'm not mistaken, we have almost $4 million worth of outstanding loans
somewhere in there. Yeah.
For water infrastructure.
Yep.
I just wanted to make that available to you as well.
Ms. Blackwell.
Mr. Chairman, I think first it's important to identify that this has been an ongoing problem, and these projects are on the intended use plan, have been on the intended use plan since 2012. There will be placeholders for them on the next intended use plan. So the infrastructure funds would be a really good opportunity for them to maybe go and try to get those to fund this, in addition to the ARPA funds. In relation to their debt, we currently have drinking water loan or drinking water 147. Its original amount was for 718,700, and I can't get my system to open it up. They also had an ARA loan, which I assume was 100% principal forgiveness. Drinking water 80, they also have. So drinking water 147 they are in repayment, and they have a remaining amount to pay of $422,257. Let me look at their other loans, sorry.
Well, yeah, if you come up with that, that's fine. But
in any event, we've been on this for a
Yeah.
bit, and so I don't know if there is a motion that or further question, Madam Auditor.
Mr. Chairman, just hopefully a quick question, just to sort of put into perspective. If we approve this today, we have about 4 million left for June. And Beth, I know you mentioned this number to me the other day, or somebody did. What's the dollar amount of requests we have coming in for the June meeting?
We have 28 applications worth $11.2 million in requests. So a typical MRG meeting.
Okay.
Thank you, Mr. Chairman.
Thank you. Well, what's certainly any more questions I would entertain, but if not, maybe it's time to consider a motion. What is the pleasure of the board?
Mr. Chairman, I would move the director's rec at this time.
Madam Auditor has moved the director's recommendation to deny the funding. Is there a second? It has been seconded by the superintendent. Is there further discussion? Further discussion? Further discussion? All in favor signify by saying aye.
Aye.
Is there a nay? Are there nays? That motion carries. Believe us when we say that we understand the direness of this and respect that. It's just the emergency nature of this, and we understand the imminent potential, and certainly don't take this as in any way, a feeling that we don't support the project.
Thank you for your time.
Thank you very much, and thanks for driving over too. Madam Director.
Mr. Chairman, that brings us to the final MRG matter. It's H5, which is consider one application for Chapter 3 Emergency Mineral Royalty Grant for the City of Mills, Wyoming. City's requesting $837,740 in emergency grant funding to address a funding shortfall for its finished water storage tank project. The city's only finished water storage tank is over 40 years old and needs to be rehabilitated. In 2020, they secured a Wyoming Business Council Community Block Development Grant along with city funds. They were used to assist in the design, engineering, and construction of a finished water storage tank project. During the initial design and engineering, the city realized the material and construction costs had increased substantially due to the COVID-19 pandemic, which put them over budget. The request is equal to 61% of the total project costs. The remaining 39% matching funds will come from a Wyoming Business Council Community Development Block Grant, $425,200, and the city's cash reserves in the amount of $106,300. Staff believes the city's project's a good project, but the gap funding fails to meet the definition of an emergency as required by the program. DEQ does not recommend approval of the city's emergency application, and Water Development informed us that based on the information they received, they were unable to determine if the application was an emergency. So it's the director's recommendation that the board deny the City of Mills application for $837,740 and emergency MRG funding to address the funding shortfall for the water storage tank project and defer the application to the June 2nd Slib meeting to be considered for regular MRG funding along with all other applications submitted.
Thank you, Madam Director. Any questions? Any questions? Hearing none. Mr. Bump, I see we have a hand raised. I don't see anybody in the room. I finally learned that we're in hybrid mode here. So, Mr. Bump, is it?
Mr. Chairman, Sabrina Kemper.
Ms. Kemper, the floor is yours. Thank you.
Thank you, Mr. Chairman and board members. This is Sabrina Kemper. I'm the Community Development Director for the City of Mills. I also have with me our City Clerk, Christine Trumbull, and Representative Kevin O'Hearn, who is our Building Inspector. We have applied for this funding, as the Director stated, due to completely the COVID pandemic. Of the $837,000 that we're applying for is all materials. None of that is labor that has increased. It's all materials. We ended up having the CDBG funding. We started the design and engineering on that. And that's when we realized the increase was about 600 at the time, which is about a year ago right now. We were working with the Business Council when they had the CDBG program. They were at the time getting ready to transition that program to a different department, which took quite a bit to do and took a while to do. So we were put on hold from about April last year until late fall, early winter, which is why we didn't seek other funding and we weren't sure where to seek other funding. We are also looking at the ARPA funds through the legislature for the water and wastewater. We're not sure on that yet. We've been talking to Osley to see when the rules will come out on that one, but we don't know anything about that at this time. So that's why we're here in front of you. The emergency status, we struggled with that one ourselves. No, it's not an emergency today, but if it's not addressed, it will become an emergency. So that's why we chose to label it as such. And we'll entertain any questions you all have.
All right, thank you. Are there others that with you that want to address the board?
No, sir.
Okay, thank you. Questions from the board for the town of Mills? Questions from the board? Seeing no questions, what's the pleasure of the board?
Mr. Chairman, I would move the director's rec at this time and hope to see them in June.
Second. That motion's been made by the auditor, seconded by the secretary to accept the director's recommendation and encourage resubmission for June. Is there any discussion? Any discussion? Any discussion? Hearing none, all in favor signify by saying aye.
Aye.
Any nays? All right, thank you very much for appearing before us, and we look forward to seeing you in June.
Mr. Chairman, may I
Madam-
make a point of clarification?
Yes.
Mills does not need to submit a new application. We'll take this application unless they want to change it. We'll just take the application that was presented today and move it forward to the June meeting. The same goes with all the other applicants. That's how we'll proceed.
Thank you, Ms. Blackwell. I hope, Ms. Kemper, that's a clarifying comment by Ms. Blackwell.
Yes, thank you, Mr. Chairman. Thank you, Ms. Blackwell. We hope to see you in person in June.
That'll be great.
Thank you.
Thank you very much.
Mr. Chairman, that brings us to the K matters, which are Board of Deposits. So I would yield the floor to Mr. Treasurer.
Mr. Treasurer. Yeah, Mr. Treasurer.
Okay, thank you. So we have a couple of new banks that were formed through some mergers here, and essentially on the first one, it's the Western Trust Bank is going to be the new state depository, and and we're going to revoke the approval of Rocky Mountain Bank. Gone through the whole process to make sure that all of their documentation is right. And essentially, we're just like I say, we're just going to look at approving and revoking these banks that are the first. Western Trust should be eligible as depository and receive any portion of the public monies and revoke their approval of the Rocky Mountain Bank.
Okay, Mr. Treasurer, I think you're looking at matter K2, is
K2.
that correct? Okay,
That's right.
thank you. So that motion has been made. Is there a second?
Second.
That's been seconded by the auditor. Any discussion? Hearing none, all in favor signify by saying aye.
Aye.
Okay, thank you.
Yeah, Mr. Chairman, I just flipped right to K2 and skipped K1. We'll go back on track now, so everybody's on the same page. And so on the K1 matter, Mr. Chairman, we're going to designate First National Bank of Omaha to be the eligible as a state depository to receive any portion of the public funds and revoke their approval of the Western States Bank. And Lisa Jordy Spillman is here to I guess if you guys need any clarification, but essentially it's the same thing where these banks are merging and we're getting rid of one as a depository, and the new parent organization is going to be the depository from here out. So we would recommend the board approve First National Bank of Omaha as a state depository and revoke approval of Western States Bank.
Okay, thank you. Mr. Treasurer, I think that motion's been made. Is there a second?
Second.
There's been a second by the auditor. Any discussion? Ms. Spillman, one quick question on this. And, this is a pending problem for the state of Wyoming. We are getting a lot of mergers from out-of-state banks and a lot of branch banking in the state. I know when I served in the office, I think you and I talked about one of the challenges was our constitutional provisions saying it had to be a state chartered bank or a national bank, and the number of banks were diminishing in Wyoming that could meet these requirements. Is that trend continuing? Do you have a sense on that? And I probably didn't have any anticipation I was going to ask that, so I apologize.
Mr. Chairman, rest of the board, Lisa Jordy Spillman, General Counsel for the Treasurer's Office. Yes, we, as we're bringing these two to you, we are seeing more of these mergers happening. The Constitution says that the banks that the state can use as its depositories have to be national banks or banks chartered in the state whenever practicable. And the whenever practicable language is what I believe the legislature used in order to authorize non-state chartered banks that do business in the state of Wyoming to be approved to be state depositories for purpose of state and local monies. And we are seeing more mergers.
Thank you. Any further discussion? Any further discussion? All in favor, signify by saying aye.
Aye.
Motion carries. Thank you.
K3 matter, Mr. Chairman, just basically updates the list on the previous action that we just accomplished.
Thank you. Now,
And
Mr.
so
Treasurer, so you have a motion?
The motion would be that we recommend the board accept State Treasurer's recommendation of the list of eligible depositories to receive public funds on deposit.
Thank you. Is there a second?
Second.
It's been seconded by the auditor. Any discussion? Hearing none. I'm sorry. I did hear something from the secretary.
I just want to raise that old protest I have with Bank of the West. I know sometimes it may not be feasible, but I just got more information. We had our discussion on the ESG things this morning, and Bank of the West is one of those now who will give no financing for new customers with more than 25% of coal-related revenue. Thank you very much.
Well said. Yeah, that's been a long-standing issue that this board has had with Bank of the West. Thank you. Further discussion? Hearing none. All in favor signify by saying aye.
Aye.
Are there nays? And that motion carries.
Mr. Chairman, that concludes the agenda items for the State Loan and Investment Board. and the bank or the Board of Deposits.
All right. Thank you, Madam Director. I suspect we may want to take a brief break here for about 15 minutes or so, if that works for you. And we'll be back shortly. Thank you. gone and gotten her winter clothing. This is almost as good as the Oil and Gas Conservation Commission, you know, where
Yeah.
everybody has a heater.
Yeah, I convinced Tom to put a little heater under the desk so I can turn that on. So it's really nice.
Anyway, well, so we can, I guess I did not adjourn the State Board of Land or Loans and Investments, so I will do that. And I will note for the record that everyone's here on the Board of Land Commissioners, and so we can convene, and I'll turn it over to you.
Thank you, Mr. Chairman. The first item on the agenda for the State Board of Land Commissioners on the April 7th, 2022 agenda are approval of the meeting minutes from the February 3rd, 2022 State Board of Land Commissioners meeting.
Members of the board, are there any corrections or comments on the minutes? If not, I would entertain a motion.
Mr. Chairman,
Thank you, Mr. Secretary.
I would move that we approve the February 3rd, 2022 State Board of Land Commissioners minutes.
That motion's been made. Is there support?
Second.
Thank you, Madam Auditor. It's been moved and seconded. All in favor signify by saying aye.
Aye.
Motion carries.
Mr. Chairman, we have provided you with the usual reports behind tab B. We do not have anything further to add to those reports at this time, but should you have any questions, we would stand for questions at this time.
Are there any questions about the matters behind tab B? Mr. Treasurer.
Just double checking, we got almost $68 million that's available to purchase land. Is that what I'm saying in tab? I think it's B1.
Or Deputy Director Crowder.
I'm happy to answer that question, Mr. Chairman. As the board is aware, we keep track of the funds that we acquire through land sales or through the positive side of cash equalization payments, and they go into that bucket that's referenced in the report you're talking about. A good portion of that came from the Antelope Flats parcel sale a couple years ago to Grand Teton National Park. That's where the majority of those fundings come from. As you're also aware, prior to that sale, we were successful in selling other smaller chunks of land to Grand Teton National Park that made up the bulk of that as well. It's also important to note that within the statute, any funds that the office or the board receives from those sales from the federal government can only be used to acquire federal lands or federal improvements in the future. So while the balance of that account is $69 million, we have to subtract those funds that we receive from the federal government and use them differently than we would the rest. So I think I don't have the report right in front of me and I apologize, but there's a subset of about $8 million, $7 to $8 million that we can utilize to acquire private lands and improvements across the state, or we can utilize if we need to put money into a transaction to equalize the values through a cash equalization payment.
Okay. All right. Thank you, Mr. Chair.
Thank you, Mr. Treasurer. Madam Director.
Okay, Mr. Chairman, we note that we have provided the materials for this meeting in advance to each of the board members, and we have also briefed each of the board members individually prior to this meeting. At this time, I'm prepared to propose a consent list if the board would so desire.
Let's hear the proposed consent list.
Mr. Chairman, the following appear to be amenable to treatment on a consent list: D1 through D10, D12 through D13, E1 through E5, F1 through F6, G1 through G2, H1 through H5, and I1.
Thank you, Madam Director. I would entertain, if it's the board's intent, a consent list made up of item D1 through D10, D12, and D13. Items E1 through E5, items F1 through F6, item G1 and 2, items H1 through H5, and item I1. Is that the proposed consent list?
Mr. Chairman, that is correct.
So moved, Mr. Chairman.
That has been moved by the auditor. Is there a second? Second. It's been seconded by the secretary. All in favor of the consent list as described, signify by saying aye.
Aye.
Aye. That motion carries. I will now entertain a motion to accept the director's recommendations on the items on the consent list.
So moved, Mr. Chairman.
Moved
Second.
by the auditor and seconded by the secretary. Is there any discussion? Hearing none, all in favor signify by saying aye.
Aye.
That nays, motion carries.
Mr. Chairman, before we get into the remaining matters, we believe that one or more might take some considerable time. So with your approval, I would suggest that we bring State Forester Bill Crapser's report up prior to getting into the rest of the agenda.
With no objection, we'll do that, although.
Mr. Chairman, I think the secretary objects.
It's too bad that Mr. Crapser's not going to be with us at 11:15 tonight, but. Forrester.
Thank you, Mr. Chairman. Thank you, Mr. Secretary, for that rousing level of support. I don't know what to say. I'm speechless when you move to the front here. Mr. Chairman, members of the board, probably the first thing I want to mention about forestry is to remind you all that Capital Arbor Day is April 25th at 9 o'clock in the morning. I know you all received invitations to it and hope you can all attend. It also, because it's Arbor Day in Wyoming, would be guaranteed to be one of our last blizzards of the year will be that day. Mr. Chairman, we've reported several times about our fire management officer leaving state government and our search for a new fire management officer. I'm glad to announce that starting March, we do have a new assistant state forester for fire management, Jared DeLay. He started on the 15th of March. We were able to, for one of the rare times, we were able actually to steal Jared from the U.S. Forest Service. He comes to us with very high fire qualifications, type 3 incident commander, type 2 operations section chief, and has spent his entire career in Wyoming. So I think he's going to be a great addition to our team, which will be important in one of my next things I want to talk about. Our Good Neighbor Authority projects around the state have really moved forward with the legislature putting a little bit of dollars into Good Neighbor. We've got the Bighorn, the Black Hills, the Medicine Bow, and the Bridger Teton have all committed to fill those Good Neighbor Authority forester positions for the next 2 years. So we're pretty excited about that. The problem we're having is, like everybody else, trying to get qualified candidates to apply for the jobs. So that's been a struggle. We also continue to work with the counties in the state of South Dakota and the Forest Service on the Black Hills situation, looking at where their timber harvest is going and at their forest plan revision. Mr. Chairman, next I want to talk about, as you all know, I hate to predict fire seasons because I'm normally wrong. So I'm not taking credit for this. It came from the predictive services. I put on all your tables the next 4 months prediction. Governor, I think it's, there it is right there. April, we're looking at Laramie County being above average, but the months to look at that are concerning to me are June and July. As you know, usually our core fire season is in mid-July till the mid-September. We're showing this year, predictive services are showing above normal fire activity in the Black Hills and in the Medicine Bow in June. And then by July, everything east of the Continental Divide is projected to be in above average fire conditions. As I've told most of you before, my fire predictions I base on what the weather does in May, June, and July. That's going to drive what happens. But this is our best guess at this time that we're going to see a significant fire season. It also, Governor, as I've told you several times, according to my scientific study, it's an even year, and even years is when we have big fire seasons. I don't know why, but that's the way it is. It's also for all 5 of you an election year, which means it's going to be a real big fire season, because that's what history tells me happens.
You were saying we're going to all be on the hot seat. So.
To get prepared for that, we do have our single engine air tankers that will be coming on contract the 15th of June. That's the earliest we can get them, and they'll be here for the summer. The helicopter for our helitack operations, we are going to bring on a little bit early. That'll be on board the 1st of June to have available for fire. Mr. Chairman, that's really all I have for a forestry report, unless any of you have any questions.
Mr.
Treasurer.
What are we doing on those quick attack helicopters that we're going to be up by Glen Rock? Have we done anything on those? I don't know if that was with you guys or that was somebody else.
I think you're talking about the helitack base.
The helitack base,
Mr. Chairman, Mr. Treasurer, our helitack base is at the Duncan Ranch in Glen Rock. Right now, I think in your role as the building commission, you authorized phase 1, phase 2 study on what we're going to do with that facility long term. I believe that moved through the legislature, and hopefully we'll find some answers there. That for those of you that don't know, our helitack is our helicopter with a fire crew with it. We base it at the Duncan Ranch, which is state trust land ranch in Glen Rock. We have our heli base there. It consists of 3 10-year-old FEMA mobile homes that we picked up and have on site. It's worked good for us, but the mobile homes are wearing out. We have mold problems every year getting ready to go. Plus, we don't have any storage for the helicopter for during hailstorms and stuff. So we're looking at either upgrading that facility, or the study, the phase 1, phase 2, will look at upgrading the Glen Rock facility, or at the potential of moving the facility and the operation to the Casper Airport.
Thank you, Mr. Treasurer. Bill, the other question that probably would be helpful for the board, simply because probably if anything happens on Guernsey, they'll all hear about it and I'll hear about it. And we've taken some steps to sort of try to help with the command stack there. Can you just kind of walk through that? So,
Mr. Chairman, what the chairman is alluding to is if we have fire on Camp Guernsey on military ground, how we move forward with it, how we deal with that fire. Per the state forester statute and the emergency fire suppression statute, the definitions in those statutes of state land are lands that are under the authority and management of the Board of Land Commissioners. So the military department land is not classified as state lands as far as our fire suppression efforts go. So we're more of an assistance backup mode to the National Guard. They are doing a tabletop exercise, I believe tomorrow, with a lot of the interested parties to look at how they will proceed if they have fires. It seems every 4 or 5 years, they start a large fire, normally with training activities, and it becomes an issue, particularly when it starts burning off the military property. Last year, we had a relatively small fire, but it did burn off off Camp Guernsey. And the biggest concern the Guard has at that point is how is the fire going to be paid for when it gets bigger? I think we've got a good arrangement with them now, and I think the tabletop tomorrow will help, that if they have a fire that they feel is going to overwhelm their fire department, they instantly call us and we try to get either our helitack there, our seats there, or at least get somebody on the ground that has a lot more wildfire experience than they do to help them out.
thank you. Yeah. Any other questions? Bill, I want to thank you for your work on the Black Hills. That's certainly potentially existential for the mill in Hewlett. Very, very concerned about that. It is a longer process, but just thank you and your team for
for doing yeoman work there.
Thanks,
So,
sir.
all right. And you're going to stick around for the rest of the meeting, right?
I'm gonna move back here.
I'll be on Zoom. All right, Madam Director.
Mr. Chairman, that brings us to our next matter on the agenda, which is D as in dog, surface lease matters, D11, which is to consider an amendment of an existing special use lease number SU-00786, Powder River Energy Corporation in Crook County, Wyoming. The board in their regular session back in February of 2021 approved an application for a special use lease, which Powder River Energy Corporation, we refer to as Precor, was the applicant, and it concerns an electrical substation and access road. Precor sent a letter to us requesting that the board waive the bond requirement that's typically required with special use leasing. They stated that they're a nonprofit investor-owned electric cooperative, and it's unique from an investor-owned utility. They cited their 75-year history, commitment to environmental stewardship, and providing electricity at low prices by reducing overhead costs. They said that they're typically exempt from bonding requirements on federally managed public lands. And as a borrower, a federal borrower, they are subject to oversight of their financial and operational performance to assess and mitigate risk to government securities. The Board of Land Commissioners has required bonding of all applicants for special use leases, with the exception of governmental entities, to protect itself from non-compliance with lease terms, non-payment of rent, and to ensure full reclamation, remediation, or other appropriate actions are taken once the lease expires, or if it must be terminated or canceled. Staff has analyzed the situation, and while it appears the risk of Precor failing to pay rent is relatively low, staff continues to remain concerned about financial coverage for possible future reclamation or mediation or other actions associated with Precor's use. So the director's recommendation is that the board deny the requested amendment of special use lease SU-1035 to remove the bond requirement.
Madam Director, I am going to declare a conflict. I'm a member of Powder River Energy Corporation, so I'm going to turn over the reins to the very capable Secretary of State.
Thank you, Mr. Chairman. Any questions for the director or staff on this matter?
And Mr. Secretary, I do believe we do have somebody who wants to speak on behalf of Precor.
All righty. All right. Mr. Bump, do we have somebody online, or is there anybody in the audience that would?
Mr. Chairman, Mike Easley.
Mr. Easley.
Yes. Good afternoon, everybody. Can you hear me okay?
We can.
Excellent. Thank you for the opportunity to address the board. Mr. Secretary, Mr. Chairman, I'm the CEO of Powder River Energy Corporation. We're a member-owned electric cooperative serving Crook, Weston, Campbell, Sheridan, and Johnson counties. As an electric cooperative, I think it's important to understand more about the cooperative model. And so that's really the extent of my comments. It seems like there's some confusion on what a cooperative is compared to other investor-owned utilities or other businesses. And my hope is that I can clarify that and provide the board some perspective. The matter before the board is consideration of an amendment to the special use. And then within that matter is our request for the consideration of not requiring a reclamation bond for the project. Our request is based on the understanding of the regulation that specifies bonding may be required and is therefore a matter that is open for consideration. We've enjoyed working with Director Scroggin and her staff, and especially Holly Dyer and her team. We understand the internal policy from the office is to require reclamation bonds from all entities except governmental entities. I wanted to bring to your attention that electric cooperatives are different from other companies and business models. We are owned and controlled by our members. Our organization is essentially a perpetual, not-for-profit entity that's governed and controlled by our 12,000 members living in Northeast Wyoming, including, as Governor Gordon mentioned earlier, he happens to be one of our owners of our cooperative. Our reputation, our credibility, and our trustworthiness is a reflection of the strength and character of our members and the 10 directors they elect to oversee the operations of Precorp. Directors have served the Precorp membership in the past, such as the legendary Earl Christensen, Chuck Townsend, Bob Winandy, Tom Davis, and many others that I'm sure you all know or have heard about. Directors that currently serve the membership include Ruben Rittaler, Clay Branscombe from Weston County, Paul Baker and Philip Habeck from Crook County, Jerry Geist and Allison Gee from Campbell County, Jim Purdy and Mike Losey from Johnson County, and Jim Bumgardner and Mike Helvey from Sheridan County. Precorp has a long history of supporting the communities we serve, which are also our homes. This includes a strong commitment to environmental stewardship, following through on our obligations, including reclaiming the land to the satisfaction of landowners, whether it be federal, state, or privately held. We respectfully ask the board to consider that a one-size-does-not-fit-all approach when it comes to requiring a reclamation bond, and recognize that electrical cooperatives represent the best and represent Wyoming's character, integrity, and dependability, and should be no different from its view on government entities when considering reclamation bonds. I'm happy to answer any questions, Mr. Secretary, Mr. Chairman, that the board may have.
Board, any questions?
Mr.
Madam
Chairman?
Auditor.
Yes, and I apologize. This is not for Mike, although good to hear from you, Mike.
Thank you.
For the director, I have scribbled down what's the, but remind me of the total amount of the bond. I have about 78,000. Okay, and is that okay? Gotcha. That's all.
As a follow-up to that, just maybe I'm the only one. Consider amendment of existing special use 786.
Mr. Chairman.
1035 is down here.
I was about to make that correction. The special use lease number is SU 1035. For some reason, it's incorrect on the agenda as well as at the top of the board matter. We apologize, but it is SU 1035.
And then a follow-up. So we're talking about almost 8/10 of an acre. That's what we have here. So can you, I guess, educate us a little bit on, Mike had mentioned, he had specifically said amend to kind of get rid of the reclamation bond, but what I see in here also is more of a financial security bond in the text. So which are we really dealing with, and what are we most concerned with?
Mr. Secretary, I would defer to Ms. Dyer. I could explain, but I'll let her explain. I think she's closer to this one. Thanks.
Mr. Chairman, Mr. Secretary, so we typically require the bond amount be posted so we have our lessees submit a engineer's estimate, and that will set the bond amount, but we would use the bond for any lease terms. So it would be rental or reclamation. The amount for that bond is established by the engineer's estimate for reclamation.
And in this case, it's not probably so much reclamation, I'm guessing. So how is the $78,000 bond appropriate for its purpose?
Correct. Mr. Chairman, Mr. Secretary. So this applicant Precorp had submitted an engineer's estimate, and it breaks it down. The total is $77,912.50, and it is for reclamation purposes only. So this bond amount would satisfy reclaiming the site and removing all of the proposed improvements, which total, I think, about 1.9 million they had put in their application. It's a whole array of electrical items from switchboards to transformers. So we just, this bond amount would be to cover the expenses to reclaim that property.
Thank you. Board members, any other questions for
Mr.
Mike or the staff? Mr. Treasurer.
Yeah, I guess the question I have, have in pre-course history, have you ever relocated or had a substation that was no longer necessary and maybe you upgraded and put a newer one at a different location?
Yes, Mr. Chairman, we have relocated substations before. Typically, we go into the site and do it to the landowner's specifications. But I think more importantly, if you take a look at the entire CBM play that we went through, Powder River Energy retained dollars to go in and clean up all the distribution power lines and take those out and put the land back. So we see that more frequently is removing the distribution facilities, taking out the poles and reclaiming that. But we have done some substation reclamation as well. And typically in that case, we would go out and take out the foundations that are there where the equipment's at. A lot of times the landowners like the gravel and stuff that's there, and we typically would leave those kind of improvements depending on what they would want.
Mm-hmm. I'm curious, what is the actual cost of the $80,000 bond?
That was the engineering estimate to go in and clean up the site back to original condition.
Let me restate that. I mean, do you actually put on deposit the almost $80,000 in an account, or do you buy a security? How do you? I mean, what?
Yeah. Yeah, I understand. Sorry, I misunderstood. We could do both. We could provide that deposit, or we could go to our insurance company and we could secure a bond.
And that cost of that bond on an annual basis, is it $500? Is it $8,000? What is the cost?
I think it's I don't know if it goes up every year, depending, but the last quote we had was about 10% of the cost. And
about $8,000 a year.
Or like about 8,000 a year. Yeah.
Yeah. Or you could buy a government security and put it on deposit and restrict it to that purpose, and you'd actually make money on it.
That's an approach that could be out there. I guess our issue isn't, we collect deposits from, electrical deposits on our own from our members, even ones that we do know, but so similar to the state's position on not requiring government entities to pay reclamation, we tend to accommodate our schools and other government buildings and not require deposits because of the strength of that entity and sort of the reputation that goes along with being a state entity. We just feel like because the cooperative is a reflection of the members of Northeast Wyoming, it's not a privately owned business. It's not one that is likely, any more likely to go bankrupt than a city. And the fact that our members run us, and our members, as I mentioned, if you were banking on any one of these particular members that I mentioned, I think you would be your risk would be extremely low. And our history of providing power for the past 75 years, probably will be around in perpetuity. It just seems like the application and using a one size fits all, we should be more viewed like a government entity from that perspective than we would be a private business that presents some risk to the state.
Yeah. Have electrical utility ever gone out of business?
There's investor-owned utilities that have, that I'm aware of. Not out of business, they declared bankruptcy. That was due to a huge fire a few years ago, Pacific Gas and Electric. But As far as electric distribution cooperatives, I think going out of business, the closest that I can think of, at least in our area, is when you merge with another cooperative. And typically when mergers happen, those aren't done to eliminate obligations. Those are all transferred over to the new entities.
Thank you.
A question for Ms. Dyer. What kind of dangers would there be as far as setting a precedent if the board were to grant this request? And thinking in the future of matters similar, I mean, we want to make sure that we're consistent. And I don't know how many different kinds of utilities fall under the USDA Rural Utility Service versus others. I just want to make sure we're aware of any pitfalls. If we set a precedent for one type of utility, will it affect others down the line for your office? What are the dangers there?
Mr. Secretary, and I apologize, are you Mr. Chairman now, Mr. Secretary?
I am.
It just dawned on me. My apologies. Mr. Chairman, I am happy to answer that to the best of my ability. So we are concerned that it would set a precedent. Currently, we do require Pacificor or Rocky Mountain Power utilities that have special use leases to post bonds also. So it is similar, although I do recognize that Mr. Easley, his argument of the electrical co-op being more aligned with a municipality, and I respect that. Overall, we've been very consistent with requiring special use leases to post their bonds unless they are a fellow governmental entity, a sister state agency, a county, if you will. As for your question on number of folks that may also be in this rural utility service and be a federal loan borrower, I'm not sure about that. I will say that every time a special use lease comes up for a rent review, so we have those scheduled every 5 years in our office because our special use leases are longer term in nature. So we have those scheduled every 5 years, but we can open up a special use lease at any point in time. That's a provision in the lease agreement. And we can evaluate if the rent is appropriate. We can also take a look at the risk factor that is associated with whatever use is out there. So if at that time we do think that it is a riskier situation or not a risky situation, perhaps the applicant has a DEQ bond that covers reclamation on that state land, then we can adjust the requirements of holding that lease accordingly. We could adjust the bond amount to be increased or decreased, just depending on the risk factor at play.
And thank you. I think the basic thing I'd be concerned with is, and it's probably apples and oranges, but you have like a WIRELECT and you've got the municipal power agency and you've got this entity, Precor, and how many others are there that might be similarly situated that if we were to waive the requirement here, would we have knocks on the door saying, hey, what about the rest of us? And that's information I'd like to know before I made a decision on this particular request.
Mr. Secretary, if I could add some clarification to the question, perhaps?
Yes, sir.
Mr. Chairman and Mr. Secretary, I stand corrected. So there are 11 cooperatives in the state of Wyoming. Most of us, have been around for 70-ish years. We are all not-for-profit, which means we don't have stockholders that stockholder interests that we look out for. We look out for our customers, and our members are the same people. So there are 11 of us in Wyoming, and we are very different from investor-owned utilities and other energy companies that are out there. So and I think where co-ops are all very similar to themselves is our governance model, where they are all owned by members, and the members that are purchase of electricity are the ones that vote, nominate and vote on the boards of directors to run and operate and oversee the policy and big picture stuff for all the various co-ops across the state. And I mean, I'm sure you guys are familiar with the Wyoming Rural Electric Association. That's our statewide association that basically serves as sort of the aggregator of the cooperative issues and challenges and things within the state. And you probably also recognize WREA, and that's our statewide association. So we are very different from industrial and utilities and other energy companies. And while we are also all very similar to each other in our governance model, being controlled by by the citizens of Wyoming and not other folks.
Thank you, Mr. Easley. Madam Auditor.
Mr. Chairman, another question for Holly. How many special use leases do we have with the co-ops throughout the state? And I obviously don't expect an exact number, but I mean, is it like 200 or like 4? Because I think that's the precedent we're concerned about setting, is with all the other co-ops in the state.
Mr. Chairman, Madam Auditor, I don't know that number off the top of my head. It's a great question. I did do a quick search just on Basin Electric, and we do have several easements that were issued a long time ago, but we also have special use leases with Basin Electric. So I'd be happy to do some more research. Perhaps Deputy Crowder knows if we have special use leases with electric co-ops, but I'm just unfamiliar. I apologize.
Thank you, Mr. Chairman, Madam Auditor. I think the number is very small. As Holly mentioned, easements are a great, larger number. Obviously, those lines come across state lands regularly, but the amount of special use leases for substations is a much smaller subset. One of my jobs here is to provide some history, and so maybe I'll provide that for you. Bonding is a very important component to the jobs that we do to present you with the risk that could be present with each application that comes in. And I think Holly did a great job of telling you, we don't think that this entity presents a really strong risk. But the one place you are exposed is inside the reclamation arena. Everything else appears to be covered, and through an engineer's estimate, it's been determined that risk is about $78,000. And as the treasurer mentioned, there are several ways for them to post that bond, from putting that amount in cash to getting a surety through an insurance company, or receiving a letter of credit from a bank. And I'm not sure what the cost of those are, but we have all of those options available to us. And I'm always reminded of working through the coal bed methane play and how fast and furious that development occurred, and how open and exposed we were as a land office, and you were as a land board, and then the state of as well, for having the orphaned wells that were left when companies just disappeared in the middle of the night, to the tune of millions of dollars. And after living through that, we've been very steadfast and very I guess, always presenting to you the option of imposing a bond on these types of uses. So we're head shy, I guess, about not having a reclamation bond in place, and that's why we're pretty passionate about our recommendation to you. The other example that I'd like to highlight is, again, this is absolutely no reference to the current application that we're talking about, or the current special use lease and the lessee. We had a coal company come in and had an oil and gas lease, and several wells on that lease were idle. And as the board's aware, we require an idle well bond for those at a rate of $10 per foot. That idle well bond was required to be in the millions of dollars. That company came in and said, we are too big to fail. We are a very large coal company. We are here for the long term. We shouldn't have to post this bond. And 3 years later, they went bankrupt. And so we felt very good and lucky that we had that bond in place. And again, that casts no shadows on the lessee that we're talking about here, but that brings some of the history of why the director's recommendation is what it is.
Mr. Treasurer, did you have follow-up?
Yeah, just trying to look at a couple of things there. Mike, a question. You guys pay property taxes, license plate taxes, or registration fees. You're not exempt from any of those different fees, are you?
No, we're not.
Yeah, and I look at, I guess, special interests, or not, no, special districts that, like, irrigation, conservation districts, I think that they're exempt from vehicle licensing, but they're not exempt from taxes. But they can get government, bonds and go to the Water Development Board. But I'm not sure whether or not those government, kind of quasi-government entities basically have a lot of things, but they're still not exempt, I think, from bonding, if there's something. So I'm trying to get somebody else out there in your particular situation where we do exempt them from bonding. And can you think of anybody else that's exempt from bonding?
Well, I
That's-
think from Mr. Chairman, and Treasurer, I believe that if you're looking at business models that look like cooperatives, we are very unique. As I mentioned, we're owned, we don't have shareholders, so, we're owned by our members. All the expenses that we incur are paid for by our members. So that would be our folks, our 12,000 members spread across 5 counties in Northeast Wyoming. And that's the same for the rest of the co-ops in the state, the distribution co-ops in the state as well. But from a risk profile, I think we do line up with what a government entity would look like. We are a perpetual business. We are not for profit, and we are controlled, by the citizens of Wyoming within our particular areas. And so to me, that's why I was respectfully requesting the board consider that one size doesn't fit all, that electric distribution cooperatives, when it comes to the perspective of looking at bonding requirements, and this is a substation site where we have, I think we may have two other ones that we've had in our 75-year history. We are just requesting that the board consider us to be in the same risk profile as government entities because of our unique nature and, limited scope with only 11 cooperatives in the state. And, the substation sites are also very kind of a small number of things that occur, not like the distribution lines that everybody's building.
Anyone else want to testify, comment on this matter? Anyone else? All right. Board, what's your pleasure?
Mr. Chairman.
Madam Auditor.
And Mike, thanks for being here. And I think everything you're saying makes perfect sense. And I'm guessing that I certainly can't speak for the other board members, but I think we all know that Precor is a good Wyoming neighbor and will be here for decades and decades. But I'm, as mentioned, I think this board is not really well prepared to assess risk on every applicant that comes before us for all of these leases. And that's probably not a good job for us to be doing. And so I think while there certainly is, applicants all across the spectrum in terms of quality, and we know that Precor is a very high one, I'm not sure I'm willing to set that precedent, and therefore I would move the director's recommendation.
Second.
It's been a motion made by the auditor, seconded by the treasurer. Any further discussion? I would simply say if we were going to go down this road, I would prefer, I think similar to what the auditor is saying, that our staff, look at this as a whole, if you will, and if we want to make a policy decision change somewhere along the line, then maybe so. But for us to kind of consider them one at a time, it gives me pause, I would say. So any other comment? All right, all those in favor of the motion say aye.
Aye.
Aye. Motion is adopted.
Mr. Chairman, and Mike, I say you opened the door on this, and I guess what we have to do is look at all co-ops and all class and maybe do some kind of an analysis on that. And there might be a opportunity for all co-ops to have a bonding pool or something that would help minimize the cost associated with all the co-ops that are bonding. So I think there's some areas there to reduce the cost to everybody, but still make sure that the state's always whole. So thank you for bringing this issue forward, and there may be a solution to it, but I don't believe it's before us today. Thank you.
Thank you all for your time and consideration.
All right, thank you, Mr. Secretary, for standing in. Madam Director.
Mr. Chairman, that brings us to the next matter, which is G3, which is to consider applications for temporary use permits in Teton County. This is the next step in a process that we embarked on a couple of years ago. During the 2020 budget session, the legislature passed into law House Enrolled Act number 83, which directed OSLI to conduct a study and solicit proposals for the development of school state trust land in Teton County that would maximize the value of the parcel to the greatest extent possible. You may recall, board members, that you traveled for a working session up to Teton County, where you listened to what was important to the community and listened to their concerns. Some of you went out and visited the sites that we were asked to study, including the one that is at issue here today. In October of 2020, we received 30 responses to our solicitation that was required by the legislation. And on October 30th of 2020, we prepared and presented a report to the board and the legislature concerning the commercial development proposals we received. And the proposals varied everything from commercial development, conservation and preservation easements and leases to proposed land exchanges. Our study identified this, what we call the Highway 390 parcel, as a state trust land parcel that received the majority of interest related to commercial development. That this parcel is located in section 36 of Township 42 North, range 117 West. Recognizing the high demand and the revenue generating potential of this parcel and the parcel's existing temporary use permits, which are that are currently in effect, are nearing expiration. They'll expire in May of 2022. We decided to take the next step. We conducted a commercial permit solicitation in December 2021 to offer specific tracts in this Highway 390 parcel in a competitive and market-driven process. So what we're dealing with today only concerns the Highway 390 parcel. We accepted responses to our solicitation from December 13th, 2021 through February 1st of 2022. We received 18 proposals with a variety of proposed uses on the 9 tracks. And if you look at Exhibit A to G3, you'll see a map which identifies those tracks that we're referring to as part of the solicitation. We reviewed and scored each proposal, taking into consideration characteristics such as compatibility with long-term management goals for the parcel, financial compensation to the trust beneficiaries, disturbance to the land asset, financial ability of the applicant to sustain their proposed project, and potential management issues that might be created. The 5 applications we've described in Board Matter G3, we identified as those that best represent progressive land uses, fair market compensation, minimal surface damage, and consistency with management goals for the parcel. I will now yield the floor to Deputy Director Crowder to take you through these 5 proposals that we are recommending for approval of temporary use permits today based on the RFP process and analysis that we conducted. So with that, Mr. Chairman, I'd yield the floor to Deputy Director Crowder.
Thank you, Madam Director. Deputy Director.
Thank you, Mr. Chairman. I've put a map up on the screen for members in the public to understand the parcel that we're talking about and for you all as well. Because as the director mentioned, it's important to note that we are talking about one specific parcel in Teton County. Not all of the parcels that were identified in the 2020 report and study that we conducted, but very specific to the parcel that is south of Teton Village. And give me just a moment and I'll zoom in for you so you can see exactly the parcel we're talking about and have it on your screen. So as we were zooming in, you'll notice that the full parcel is 640 acres. We are only talking about 9 separate tracts within that 640 acres. Each one of those tracts range anywhere from just under an acre to just under 5 acres, all totaling around 23 acres of the whole tract. Some of the history behind this parcel, as the director mentioned, is that for decades now, this corner has been used for commercial purposes under temporary use permits. The uses have varied a little bit over time, but have really revolved around the stockpiling use case. It may be stockpiling for landscape purposes. It may be stockpiling of down trees within the community, just a place to store them. And of course, the county has their levee protection, their rocks laying there for levee protection. But that's been the historic use case. In 2010 into 2012, we didn't have this many sites recognized, but we did understand that probably these users at that time were not paying market rates. So we did an appraisal of all the tracts there and utilized all the information that we had at our disposal, which wasn't much because our greatest source of comparable, or at least the most accurate source for comparable rates, are private agreements, and those are difficult to get our hands on. But at any rate, at that time, we started a process to bring those users closer to a market rental rate. And we went from approximately, and I'm using round numbers, $500 a year up to close to $5,000 a year. And that depended on the size of the tract and the use that was there. At that time, that was a very big jump, and we negotiated with those permit holders at that time to spread that increase over 3 years. And so for the next 3 years, beginning around the 2010 time period, we got them up to what we felt was more of a closer to market rate, but it was based on appraisal, and the tracts were not exposed to the market. That was always intended to be the first step in advancing the use case of this corner of the Teton Village parcel to be a more of a sophisticated type use case, and to understand that we wanted the land asset to perform at its optimal level, but to also grow as fast as the market would demand and the neighborhood would allow. And at every point in this, we understood that this office probably wasn't sophisticated enough and didn't have the tools available to really understand what those measures were and when to take those advancing steps. And so we had always intended to take those advancing steps through exposure to the market and just grow in that manner. As the director mentioned, the study that the legislature put in place really did highlight the fact that there was great demand for commercial development in this corner and for the whole parcel as well, but this corner specifically. And that really kicked us into gear and saying now is likely the time. It appears as though the pressure is on the office to move forward in understanding what the potential for this corner is, and now is probably the time to expose them to the market. Through that amount of time and prior to the study, I should have mentioned, we had fewer tracts than what we have identified here on the map. I don't know the exact number, but through time, several other users have approached the office looking for a place to do their business. And we've tried to fit the puzzle pieces together to bring in more users. And we feel like we're at a saturation point, that these are the tracts that we have. And of course, we're always open to new proposals as we go forward. But the corner of this tract presents a lot of limitations as far as doing more than what we're presenting to you today. A large part of that limitation revolves around the water that runs through the property. As you're aware, the Snake River Ranch holds the grazing and agricultural lease on the property and has had for the last few years. But they have a lot of irrigation ditches that flow through this part and a lot of head gates to those irrigation ditches that flow through this part, which creates boundaries for the size and placement of these tracks. Along with that, this area is heavily sub-irrigated at times as the Snake River rises and falls and as the irrigation practices come and go. And a lot of the ground here gets extremely sub-irrigated and is not conducive to commercial development without some extreme mitigation measures to stop the flooding that occurs. So we feel as though we have the number of tracks that are appropriate for this parcel without some other extreme mitigating type measures. As the director mentioned, we have done extensive work in this corner. We have tried as much as we possibly can to approach the community in Teton County to not only comply with the act or the study that the legislature asked us to do in 2020, but to also make sure that we're walking in lockstep as much as possible anyway with the community as we're moving forward with advancing commercial development opportunities. We have attended county commissioner meetings. We have provided the study for 45 days out to the public to respond to, and we received comments from those. We provided that study to the county commissioners as well as sister agencies to receive comments to try to understand what may be important to the neighborhood and to the community as we were working through our processes. As the director mentioned, we provided this presentation of that study to the board in February of 2021. That was an open public meeting and you all accepted public comment at that time to get more of a sense of what the concerns were. And as the director also mentioned, within the working session, the main intent of that was to get you all in the county, in the neighborhood, in the community, and walk the ground and not only hear some opportunities that we felt were present, but to also hear the concerns and opportunities that the public may provide. And you'll remember that event was well attended, not only in the formal working session manner, but thanks to the Grand Teton National Park Foundation, we had a non-formal get together at the end where folks could approach you all and express those concerns as well. We did provide the solicitation as the director mentioned, and as a lead up to that effort, we provided notification to all of the existing permit holders that we were going to initiate the solicitation process once their existing permits expired. And as the director mentioned, that expiration date is in May of this year, May of 2022. So we tried to get out ahead of this process a bit and allow those entities that are currently utilizing these tracks to prepare themselves to participate in that solicitation process and be successful or at least competitive as we move through that process. At the same time, we placed personal phone calls to each of the local legislators in the area and the county leadership as well. Mr. Chairman, as we went through the solicitation process, obviously we have the trust land management objectives given to us by you to measure all of the transactions that we do or long-term leases that we do to ensure that they're meeting certain benchmarks or certain measures that you felt were important as far as trust land management. And those are to better meet the beneficiary's short and long-term needs, to improve the manageability of the land assets, and to meet a specific school or community need. And when you gave those to us, you gave them in priority order. So obviously we utilize them in priority order, and we understand the beneficiary's short and long-term needs and work down from there. It's important to note that the solicitation that we embarked on did not offer long-term leasing. These are temporary permits, but we utilize these trust land management objectives when there's a likelihood of these short-term permits somehow transitioning or progressing into longer-term ventures. And we feel there was a possibility here when we started the solicitation process. Now, keep in mind, we did not realize everything that was going to come to us as a response to the solicitation, but we understood that there could be a potential for longer term ideas. And so we wanted to ensure that we were utilizing these trust land management objectives as we went through our analysis process. As the director mentioned, we received 18 proposals from the solicitation. Each one of those were ranked and scored. And Mr. Chairman, we provided to you a spreadsheet that has all of the uses on it. It also has all of the scores on it for your reference to just see how everybody fit. And I think you'll notice that on that spreadsheet, the office didn't just select the highest dollar amount that could be garnered from these proposals to be recommended to you all. It selected the proposals that had the best response to the solicitation. Compensation back to the beneficiaries obviously was a component. Sustainability was a major component. And then something that might advance and make the use case out there or the uses out there go down a road of higher sophistication. Obviously, we want this asset to perform at its optimal level, and stockpile sites may be the optimal level, but we feel as though there may be other opportunities for this. And we want to always continue the advancement of those as the market and the neighborhood would demand. So quickly, Mr. Chairman, the evaluation topics that we ranked each submission under, I'll just read those out for you. The one is, does it fulfill the submittal requirements of the solicitation? What is the compatibility to build, or the capability to build and operate the facility by the proponent? What is the schedule to deploy the opportunity? What's the compensation back to the board? Does the opportunity adequately consider local impacts? Does the opportunity have an environmental review or need permitting? And does the proponent demonstrate the financial ability and wherewithal to conduct the process? And we've provided the solicitation to you. And I think that what we intended to, what we intended to do within that solicitation was to bring in all the comments that we heard throughout the study process, throughout the working session, throughout the 2021 open public board meeting, and those conversations with the local leadership, understand what the land use planning intents are for the parcel, and pull those into the solicitation and require those respondents to answer to those. And so we didn't limit the type of proposals we got, but we asked them to answer questions that were largely guided by those concerns that were raised throughout the process. Mr. Chairman, with that, I'd like to run through each of the proposals that we are proposing to you for approval. Then the first one is ArborWorks Tree Service LLC. They submitted an application for tract number 6 for the purpose of a stockpile site. ArborWorks is the current permittee for this tract and does not plan to alter tract 6. ArborWorks uses tract 6 to age and dry trees for cutting into firewood and regrinding raw wood chips into mulch. It's also used as a 24-hour emergency tree service company. ArborWorks is able to use tract 6 as a stockpile for fallen trees during emergencies at any hour. Next, we have Base Camp Hospitality LLC. Base Camp submitted an application for tract 9 for the purpose of an off-grid accommodation site. Base Camp proposed to place up to 11 units, a mix of geodomes and A-frames, a welcome center, parking, and a utility shed on tract 9. Each unit will be equipped with the modern amenities, including beds, restrooms, and solar power heat and AC. The units will sit on a raised wood platform to mitigate the impact to the land. Base Camp will erect a berm on the north end of tract 9 for flood mitigation purposes and plant additional foliage along Highway 390 for privacy screening. A self-contained septic system is proposed to ensure safe removal of sewage and wastewater. Next is Whole Landscaping. They submitted an application for tracts 7 and 8 for the purposes of a landscaping stockpile site. The 2 tracts will be used for storage of trucks, equipment, and materials with the addition of skid buildings for dry storage. Whole Landscaping may reshape, seed, and irrigate existing berms for privacy screening purposes, along with planting native trees and shrubs. Wilson Investments LLC submitted an application for tracts 2, 3, and 5 for the purpose of a storage unit yard and a landscape construction yard. Tracts 2, 3, and 5 will be graded and surfaced with a crushed gravel surface. A power main to a new transformer will be installed along with the water well to supply landscape, irrigation, and fire suppression systems. Approximately 800 mobile container storage units will be installed between tracts 2 and 3. And the storage units are designed for use without foundations or concrete slabs and will sit on top of a crushed gravel surface. Storage units and entry and exit areas will be illuminated by downcast 90-degree cutoff lights, which will be motion activated. A video security system will be installed. The storage yard will be open to the public for month-to-month rentals, and commercial uses of the storage units are prohibited. Tract 5 will be used as a landscape construction yard. The use of Tract 5 will include employee parking, in equipment and vehicle storage, and stockpiling of raw materials. Stormwater detention and adequate snow storage areas will be developed within all the tracts, along with wildlife-friendly fencing. Wilson Investments will plant additional native trees for privacy screening along Highway 390. And finally, Mr. Chairman, the last application we're presenting to you is Yellow Iron Excavating LLC. They submitted an application for Tract 4 for the purpose of a stockpile site. Yellow Iron is the current permittee on Tract 4 and does not plan to expand or alter the tract outside of reshaping the existing berm and adding hydroseed, vegetation, and trees to give the area a more natural aesthetic look. The main use of Tract 4 will be stockpiling materials and equipment and screening and recycling dirt for topsoil. Mr. Chairman, I would follow that up with we utilized our normal temporary use permit process after the solicitation concluded, meaning that we asked each of the proponents we're presenting to you today to present an application for your consideration. As you're aware, one of the requirements for that temporary use permit application is to provide a lessee comment form. The surface lessee on this parcel, as I mentioned, is Snake River Ranch. They have provided a comment form on each of the proposals that we are presenting to you today. There are 2 proposals that they express concerns on, and it's important for the board to note that through your rules, it is just a comment form. We utilize the comment form to address any issues that may be present and allow that surface lessee to be part of the conversation when adding new uses on there. They expressed some concerns with Tract 9 and Tract 2 and 3. And as you're aware, those are the opportunities brought to us by Base Camp Hospitality LLC and Wilson Investments LLC. Those concerns have been forwarded on to the applicants. We feel the applicants have provided adequate response to those. And I think it's important for them to explain those concerns to you rather than some version that I can provide. They're in the audience today to speak to you. So I'll leave that where it is. And then I'll end on temporary use permits, as we've mentioned in the past, don't historically have a bonding requirement because they're intended to be temporary in nature. The compensation back to the board is not as great as a lease would be. And it's just something that we've historically not required. However, in this case, we are requiring bonding equal to an engineer's estimate, as Holly described earlier, on each one of the tracks. And that's to do a couple things. To ensure that reclamation occurs at the end of the life of the permit. These are 5-year permits. And 2, these are relatively large compensation packages back to the board on a permit by permit basis, larger than we're accustomed to. And so we want to ensure that the board is protected in case one of the applicants can't perform and can't pay you and you have a security there. Mr. Chairman, I'll stop there and I'm happy to answer any questions.
Thank you, Deputy Director. Let me begin with any questions from the board. Mr. Treasurer.
I'll probably have some more later. The TUP 3342, you got 3 tracks there with 2 different uses. The one use on track 5 with the 1.03 acres is, similar to arbor works or whole landscaping or maybe even yellow iron excavating, and those are essentially somewhere between $2,000 and $3,000 a month an acre. So I didn't know whether or not there's a potential to split out those away from the ones that are potentially problematic.
Mr. Chairman, Treasurer, I think that's a great question and something that I should have hit on. 18 proposals came in, and as you can see from the spreadsheet, there were for a variety of different tracks, and it was a fun exercise for us to try to fit these puzzle pieces together. I think that would be a great question for Wilson Investments to answer their relationship with the entity that will likely be doing the landscaping work up there, and to understand how all of that fit. But as we were fitting the puzzle pieces together, it made sense that type of use be placed separate from tracks 2 and 3 because it was a smaller situation, and from the proposal that Wilson Investments provided to us, it just made perfect sense to go ahead and move that use up there. That tract is currently being utilized for this type of work. Sorry, it just made sense.
I guess a follow up on that, Mr. Chairman. Are those 3 areas there that to me appear not to be problematic? I didn't know whether or not there's a potential consent list we could have off of that list, and then just go to the areas that are problematic. And I'm not aware of any, because those are uses that's been on that ground for at least the last almost 10 years. So I'm not aware of anybody that's got a lot of heartburn on those, and I don't know if you guys are aware of that either.
Mr. Chairman, Treasurer, we wanted to provide you that opportunity, which is why we gave you the matrix in the board matter, that you could split out any of these that you would like if that was your intent. Make that easy for you. It's important to note, and it's probably important to talk to Wilson Investments as well. Their whole proposal to us considers all 3 tracks. That we may not be able to split tracks out and approve them separately, because that could change their proposal to us and change everything else. But on a TUP by TUP basis, you have that opportunity.
Thank you, Mr. Treasurer. Any other questions? Any other questions? Board, I guess there's probably some of these proposals that have, to the treasurer's point, more potential discussion associated with them than others. I guess I'm sort of anticipating we'll have some public comment here. My view would be, and I want to just have your thoughts on this. My view would be, if there are sort of general comments to the entire area of the proposal, I'd like to entertain those first, and then we can kind of walk down through the specifics. Does that meet with your approval? Yeah. Okay. So Holly or Deputy Director, Holly, what's your title?
Queen of everything.
Queen of.
I'm just here, Mr. Chair. No,
Queen of the world.
No, I'm the Assistant Director overseeing the Trust Land Management Division.
All right. Okay, Assistant Director. I wanted to be respectful. So let me open this up and I guess Mr. Bump, I do believe there's probably some hands up, but there may be some people in the audience. Let me take people in the audience first. If there's anyone here that wants to sort of generally speak to, and that doesn't mean you can only speak once and then forever hold your peace. It means if there's more specific, you can have it another time. I do see someone approaching, so. Yes, your button might need to be turned on. Light needs to turn red. There you are.
Thank you. Mr. Chair, members of the State Land Board, my name is Turner Rezor, and I'm here as a representative to the Snake River Ranch families. I'm a 4th generation member of the Snake River Ranch families. We're well into the 5th generation now, and I'm joined by my cousin Felicia Rezor here today. First, thank you so much for giving us the opportunity to speak to this and comment on OSLI's recommended proposals for development of the Highway 390 parcel. The family has been leasing this parcel for agricultural purposes for over 70 years. And if all goes according to plan, we have another 70 years, or long after I'm dead, that we'll still be leasing that parcel for agricultural purposes. We would like to support the OSLI's recommendations for all the proposals except for the 3 that have been, or the parcels 2, 3, and 9 as were identified by Assistant Director Crowder. And we feel that those parcels are, that those proposals conflict with the values of both the community, local zoning and planning laws, and also are not consistent with the language in the RFP itself, in the solicitation package. And that in the solicitation package asks for how proposals will comply with local planning and zoning laws, and asks for applicants to describe how, if not, they will make those proposals compliant. We feel that for a number of reasons, ranging from being in conflict with local planning and zoning laws, and also for water quality issues, for traffic impacts, and a number of other issues, that those proposals do not comply. Also, I wanted to recall back to when you visited the Valley in September, that there was a lot of discussion at that time, I think, among members of your board and public comments about a possible win-win solution for this parcel. A proposal that proposals that reflect the values of the county and the values of the state and the states. Very reasonable and understood responsibility to maximize their financial return on that parcel. Since that time, before that meeting and since that meeting, we've all been working very hard to understand how the local community can come up with a solution, because we don't want to be here today and simply close the door and say nothing can occur on this parcel, but we want to be there working with you to maximize your fiduciary responsibility, while also, as best as possible, reflecting what we feel are the considerations that are important to us as a county. Anyway, it's been a long day, so I'll keep my comment. I'll stop my comment there, and thank you again for allowing this comment. And please let us know if we can be of any help in your decision making.
Thank you, Mr. Reeser. Let me just see if there's any questions that Mr. Superintendent.
Mr. Reeser, thank you for coming today. In reading your letter, I just had a few questions. You stated that you feel like these 800 storage units, as well as the luxury lodging enterprise, would be highly incompatible with your agricultural operations. I guess my question was specifically how so? In what ways?
Right. Well, with the glamping or the lodging enterprise, I'll start there first. The proposed area abuts directly against the agricultural leased area. In particular, it's directly south of an area where we move the cattle across the road. It's right at a bottleneck where, when we move the cattle from the west side of the road to the east side of the road, which is a very important piece of connectivity in our operation, that we foresee conflict with having a lodging enterprise being, within 50 feet of where that crucial crossing exists. There's also concern. The ranch, we make a great effort in the way that we irrigate those pastures to minimize nutrient overload in the Fish Creek watershed, which is to the west. Deputy Crowder made mention of earlier the high water table in the area, and we have some concern that a septic system just right in that water table would have a negative impact on the watershed just to the west. For the 800 storage units, there's also similar water table considerations. There's a traffic impact, and generally creating most of its wildlife and natural impact considerations. It's removed enough from the ranching operation itself that I don't think I would foresee any impact in that regard. But so less so with the storage units than with the lodging.
Mm-hmm. And if I may, Mr. Chairman, a couple of follow-ups. You also stated that you feel like this was not a collaborative process. How so?
we feel that the recommendations became known to the county it felt almost accidentally when the lodging enterprise applied to the county for sewage related permitting. And that was maybe about a week ago. We feel that the RFP and the solicitation package spoke more to proposals reflecting local zoning and planning laws, whereas we don't feel that the recommendations themselves are looking to that directive, which is what was in the solicitation package. So we felt like there was a little bit of an inconsistency there. If you look at the scoring metric or the criteria, you'll see that 100 points are given for environmental impact and 100 points are given for local impact to the local county, whereas 125 points are given for compensation. The way it appears to us, the way that the proposals were scored, that more of a weight was given for compensation and less for those former two.
Mr. Chairman, one more question. Mr. Reeser, also you said the good news is that there are uses that can enhance the parcel's value. I was just curious as to what might some of those uses be.
Well, we think the previous uses, such as the Yellow Iron Arbor Works, and actually another proposal that was submitted by the Wilson Investment Groups that would have continued their landscaping use, that those uses have been very compatible. They've been very low impact. Those groups have been great stewards of the property over the years. And notably, all of those lessees and users have offered a substantial increase into what they're offering to pay from what they were paying. So, which goes to show that this OSLI and the state are making an improvement on that lease return. And that we would ask that while uses like similar to those are continued, that gives the county time to better articulate and define what this win-win situation may look like, something that really maximizes the value of the land, looking at the long term, not looking at and what is really the best result for the state looking down the road.
Thank you, sir.
Thank you.
Thank you, Mr. Superintendent. Mr. Treasurer.
I guess I'm going to ask you this question because you know a heck of a lot more about Teton County and that situation than I do. The county commissioners made a statement that they're unaware of any other viable sites on the west bank of the Snake River that could be used for rock stockpiling. Are you aware of any sites on the bank of the Snake River that would be considered a viable site? I don't know who owns the land. I thought that, maybe you probably see it every day.
Right. I think, if it were to get to it, we would look to see if we had any options. There are none that come to mind off the top of my head. It's one of those strange things where it's harder to find a site when there's a lot of land around you than you think that's appropriate for a certain use, especially when we're trying to maximize the viable agricultural acres. Push came to shove, we'd try to look and see if we could accommodate the county, but it's a strange thing. I know that that they're staging. Other people are having this question with regards to work on Highway 22 down the road, and there just aren't that many available acres as you might think that suit a particular use appropriately.
Well, I guess if you get any ideas, let us know. Thank you.
All right. Thank you for your time.
Thank you, Mr. Reeser. Any other questions? None. Okay. I see Mr. Magagna.
Thank you, Mr. Okay. Thank you, Mr. Chairman and members of the committee. And we submitted comments to you in advance that I believe you've seen in the last few days. Just to highlight a little bit what's behind that and what our concerns are. We see temporary use permits as being for use on the land. Yes, it's temporary, but it's also typically been for uses that have no extended impact. When the use is over, the items are removed, things are cleaned up, and you're back to where you were. The two problems that we have with these two particular projects here is, first of all, they involve moving significant items of value onto the land, which I have to believe if both of those enterprises are successful, that they would view this as going beyond 5 years, that they would be coming back to renew that. And I think the idea of using a temporary use permit for something that's going to keep coming back and being renewed is an inappropriate, in our view, use of a TUP, and a more appropriate use of a lease that lends itself to renewal. Our second concern with the TUP here is that these projects, again, in particular, are going to have an impact on those parcels of land. When they move their equipment off or their buildings off, the land doesn't look like it did before. Can it be restored over time through reclamation? Most likely it can. But in terms of being prepared to come back to the use it had, or being, restoring the aesthetic values that the land had, restoring the grazing values that the land had, we feel that these particular uses are not going to enable that without a period of time during which, if restoration is the objective, the land may have no uses for driving revenue for the beneficiaries during the time that you're ongoing that restoration. And as we've learned more about the interest in the community of coming up with some ways to significantly enhance the revenues to the beneficiaries of the trust, perhaps even beyond what these projects do, but in a way that recognizes and protects the conservation values of the land, the agricultural uses of the land. We feel this is a parcel that has tremendous potential to meet your objectives, your trust objectives, in that type of a manner, as opposed to with activities that disturb the land. And we certainly understand and respect the pressure that the office and the board is under because of the legislation that was passed. It was not something that we would have been supportive of necessarily, but it's there. But we think that should not be a reason for this board not to exercise your best judgment in saying not just what's the revenue today, but what is the long-term potential of this land? Is it in development really, or is it in contributing to the culture and the aesthetic beauty and the agricultural component of Teton County in that particular area? And maybe this isn't the right place for these particular activities. We would urge you to take that longer term look, and with that in mind, either to deny these two requests for these two projects, or at least to delay them so that those other ideas can be explored a little more fully. And with that, Mr. Chairman, I entertain any questions.
Thank you, Mr. Magagna. Treasurer,
I guess a clarification, or would you think that we should, these are temporary things. I mean, that 5 years from now, we get it, the board, whoever's there would get a chance to look at it again. But I thought I heard you say that we shouldn't do a temporary thing or a test drive or a pilot program on a use. We should just jump in there and do a 20 or 75-year lease. What is it?
Mr. Chairman and Mr. Treasurer, two things. One is, assuming that these people are successful, and we hope that they are if they're on there, we don't see this as really being a temporary use. We see this as something that will continue for a significant period of time if it proves to be profitable for the entities that have invested in it. So in that sense, we believe it doesn't really fit a temporary use. If you did a lease for 5 or 10 years, you still have the discretion, or the next board does, whether to renew that lease or not to renew that lease. But the leasing process is more reflective of the anticipated potential longer term nature of the project.
Mr. Chairman?
You follow up, go ahead.
Yeah, a follow up. I guess wouldn't the subsequent board have the potential 5 years from then to look at it and say, yeah, we can do a 25 or 35-year lease on this, or whatever. We can go up to 75 years in that other program. But from my perspective, I wouldn't want to lease it under that other program for even 5 years, and with the expectation there was a renewal for more. I think that would I mean, there's pushback on these projects now. I couldn't imagine if we came up with something that said we're going to lease it for 25 or 50 years.
Well, Mr. Chairman and Mr. Treasurer, I certainly understand that. I think, though, that where you're looking out for the long term of this lease by doing it under a temporary use permit, I mean, if you're doing that thinking, well, that will lead to a lease, it should be a lease from now because of the potential for it to be a longer term, as well as because of the greater impact on the resource and the ability to restore that resource to its original condition, if in fact it's temporary, which this would seem to imply. So that's our reasoning, that this is, plus the fact that just looking at the statutes and at your own rules, if it's going to be done under a lease, the amount of investigation, the amount of analysis that's going to be done for a lease tends to be greater, at least in my experience, than what's done for temporary use permit. The intent of temporary use permits is that they're assumed to be very temporary, number one. Two, they're assumed not to have any real lasting impact of any type on the land. And that's why the other projects proposed here that involve some storage on the land of materials and that are more appropriate to temporary use in our view, but these two are not an appropriate use of the temporary use provisions.
Thank you, Mr. Treasurer. Other questions? Other questions?
Thank you.
I don't hear any. Thank you. I think on screen, Mr. Bump, we have, oh, wait, we have one more who is approaching. That's all right. Yep, absolutely. Thanks.
My name is Scott Hardiman. I am one of the owners and of Wilson Investments LLC that has introduced the possible use of storage units on this property. You know, I will say to some of the concerns that I've already heard now, you know, traffic and water pollution issues, you know, these are all things that we took into account when we came up with this design. You know, there's definitely things that we could have done different as far as density and everything and really push the boundaries. But we felt like this was something the valley actually needs and something that could fit in with what they were asking for in the solicitation packet. You know, the people that are using this are the locals. You know, it's not generating new tourists, new road problems or anything like that. You know, we operate on lot 3 right now, and another landscaping company operates on lot 2. When they vacate, you know, there reduces all their employees coming in and out of this 390. And the average person visits their storage unit once every 2 months. So we're talking maybe 12 to 14 people a day visiting a storage unit. Now, you know, as far as water quality and things of that nature to do with the ranch, we've already hired a consultant, environmental consultant in Jackson, to start the process on how best we can mitigate that. You know, I come from a ranching family. I'm 4th generation in Jackson too. You know, so I care a lot about the water. I'm a fisherman, so you know, it's definitely at the top of my priorities. You know, we're not going into this just without forethought, I believe. You know, I feel like we've done our research and, you know, hired the right contractors to help us, you know, submit a proposal that could be beneficial for the board and for the community at large.
Okay, thank you. Mr. Treasurer.
Thank you, Mr. Hardiman. Okay. Okay. On the water pollution thing there, I see that you're just gonna, you know, probably level it out a little bit, throw down some crushed rock.
Right.
Yeah. And I guess the things that I've heard is that, well, there's not going to really be any control about, you know, what's stored in those units. I expect somebody that's stored different chemicals and stuff in their garage, they want to get it out of it, they'll take it out to the storage unit. If it freezes, which I doubt if these things are all insulated, so that jug of chemical will freeze, it'll bust, it'll run out the bottom of the storage unit, right into the crushed rock, and right into the water.
So in the lease agreement that we already have drawn up, there is it's very clear that there's no chemicals or flammables or any corrosive material that can be stored in these units. It's really for the homeowner that has their garage full of kayaks and bicycles and skis, or a room in their home that, is full of the same materials to come to and change out once in the spring, once in the fall. But it's very clear in our lease that we've already had drawn up and looked at, that is not acceptable. And also no commercial businesses can operate out of this. So there won't be like day-to-day storage movement in and out of any kind like that.
Yeah, I just suggest maybe a simple way to do it is to, take it down a little bit, throw in a couple, 3 inches of bentonite, then come back in with your crushed rock and you get a good solid base.
100%. And that may be a recommendation that the environmental consultant that we've hired will come up with. He hasn't finished his analysis of it, but we've already drawn in kind of stormwater collection to try and collect that in the runoff system before it actually goes back into the groundwater.
How long will it take for that expert to have a plan for you?
Well, it is like I said, we really do care about what we're doing to the environment there. So he's looking at all aspects of it, and I would like to provide it to everybody, the full analysis, not just bits and pieces. So I would say there's probably at least a couple more weeks for him to get back the proper requests or requirements that we might need out there.
But definitely by the 2nd of June.
Oh, for sure.
Okay, thank you.
Hey, Mr. Treasurer, I see the auditor has her light on. So.
Mr. Chairman, yes, it would need to be Wyoming bentonite.
Right.
I'm sure.
Yes.
Thanks for coming, and thank you for your interest in putting forward ideas. That's what we wanted. I do have a couple questions. Are these climate controlled?
Some of them will be.
Okay. Do you or does the company have other locations of storage facilities?
They do. So there's a company that we're using out of California that actually will supply the units. And this is what they do. They build and ship specific for this kind of usage.
Sorry, let me
I'm
ask
sorry.
that better. Do you have,
No.
so this is your first storage
Yes.
unit venture? And how long do you need it to be there to have made it worth it?
3 years.
So I'm struggling in your proposal, I believe it says 20.
Well, we had initially requested a possible 20-year lease, but that was denied. So then we had to rework all the numbers.
So, Mr. Chairman, and I recognize we don't want to get into the ins and outs of your business's financial statements in a public meeting, but it's surprising to me that all of the infrastructure and purchasing the units and everything and all the dirt work that has to be done and studies can be turned around and turning a profit in 3 years. Is that accurate, that you're in the black after 3 years and you
Well,
can
that's
pull
from the
out?
day of opening. Sorry, that we could return. Like the day we open the storage units, it would be 3 years.
Gotcha.
So no, that doesn't include the installation of everything, all the substructure.
So what will the average rent be?
That depends, but we're going to try and keep it right along with the market in Jackson. We're not trying to undercut or anything like that. So it could be, $225 to $300, somewhere in that per month.
Thank you, Mr. Chairman.
Further questions? But Mr. Hardiman, I did have a couple questions. I think you mentioned that typically was it 2 to 3 times a month is what you said people would visit. And I can remember loading up on every weekend in the summer after doing chores in Casey, Wyoming, to run over and kayak on either the North Fork or the Snake, depending on how it was running. And I guess I'm trying to think about how that would work here if you had folks that were, I'm assuming it's probably open to anybody. So if I have an apartment and I have a paddleboard and a kayak and several fat tire bikes and some other things, and I can't really find housing otherwise, I would imagine I'd use it. So I guess I'm wondering if you think that's still an accurate predictor of how much use there'd be in and out of the area.
We used a national average for that. You know, I couldn't predict, you know, if it would depend on how many were long-term units that were storing furniture for their rental homes and things
Sure.
like that, which there's quite a lot of that in the valley. You know, that would be something we'd have to probably dig deeper into as well.
Okay. Yeah, and you know, I'd also seen that, you know, in some of the more heavily, I guess, urbanized areas that people have sort of converted their storage units into apartments. Do you anticipate problems there? How would you deal with that?
We are going to have a full-time security camera system over the entire property, both looking in and looking out. There will be a gate security code that goes with each unit. So you'll be given that, and that will be to your unit. There'll be license plates, cameras to watch people coming in and out, and then it'll be closed at night. All lighting will be shut off from 9 p.m. to 6 a.m. as to not create any ambient light or light pollution. But yes, we will keep a very strict eye. There will be somebody on site every day during operation to make sure that the exact thing doesn't happen. Okay.
And with a TUP, temporary use permit, and it sounds, I mean, it's pretty significant capital investment.
Correct.
That you have there. And the question I guess I have on the units themselves, would they be yours, or would they be leased, or would they be?
We'd be purchasing them, or, you know, I mean, we've discussed lease with the company in California, but more than likely we'd be purchasing the units.
Okay, yeah, and the reason I asked that is it talks about them being portable or mobile, right? And I you know, if there aren't that many areas to go, it would seem probable, tell me if I'm wrong, that you'd look for a re-up in a couple of years' time.
Sure. Absolutely.
Yeah.
You know,
Okay.
and we also have property in Victor that we could move these over to and, you know, do that. But I feel like a lot of people already have that struggle driving over to Victor and Idaho Falls to find storage.
Sure.
So we tried to, you know, do something that the community could use.
Sure. Okay.
And, you know, we're not set on 800 either. You know, we know this is a work in progress. So, you know, if there's things that the board or the commission comes up with that we need to look at to help, you know, the Snake River Ranch be a little happier and Teton County, we're more than happy to work with all parties.
Yeah. Okay. Well, and you know, the other, and I don't think it would be so much for you, although people do bring their dogs. You know, one of the concerns, if I were an adjacent ag lessee, I would be concerned about what would happen with dogs.
Yeah.
And you're anticipating having a security fence, kind of a secure area and
Correct.
all that sort of stuff. Okay.
So yeah, there'll be a 4-foot wildlife friendly fence around it to make sure that, you know, people know to stay off, and we'll post private property signs going out towards the ranch.
So if it's wildlife friendly, that means dogs could get out.
Absolutely.
Okay. Okay. Thank you.
Yep.
Any other questions? Well, thank you.
All right. Thank
Mr.
you.
Hardiman.
Appreciate it.
I do know we have some people that have their hands raised. Is there anyone else from the audience here? Okay, Mr. Bump.
Mr. Chairman, Rachel Miller.
Ms. Miller, the floor is yours.
Hello?
Yes, can you hear us? We can hear you, Ms. Miller.
Yep, I can hear you.
You can go ahead. Please do.
Hey, I work for Grown Green, and we currently occupy track 2. And I just I don't know how this all happened so fast, but in the beginning you guys were talking about how where's my notes? Hang on. We never knew anybody was out in Jackson to look at the property. We were never told any of that or given a heads up. And we were never even told when the solicitation package was due. And I know I've spoken with Tyler Sino a few times, and he was shocked that we hadn't gotten any notification that the solicitation was due. We actually just happened to look it up, and it was due a week from when we looked it up and saw that online. So those were just two comments that I had from things that were previously said, but I know that you're trying to be good stewards with this land. We use track number 2 for a stockpile site. And we have about 30 employees all year long. And then in the summer, we employ more than that. But what you're proposing to do, it just has such a wide ripple effect, just not renewing our lease. We've been there for almost 15 years. And we service our clients in Jackson Hole and in Wilson and Teton Village and out at the airport. And, you know, the ripple effect just on our little landscaping company is absolutely incredible. And I don't know that any of you sitting behind desks in Cheyenne can really appreciate that. But it has a wide-reaching negative effect on the everyday people in Jackson and Teton County who need their lawns mowed and who need trees planted, and all our employees and all the people that work for us and their families and their kids. Like, as someone pointed out earlier, finding a spot, when you look on the map and you see all the empty land, but finding a spot to run your business out of is not an easy task. And I just would ask you to consider what you're doing to small businesses who have been on this land for years and years and years. And we've been very good stewards with it. Just to move us out and put some just, you know, sterile looking storage units on there is quite a different route to take than what you've done thus far with that land. And then the business owner is sitting right next to me, and he would actually like to say something also. Is that okay?
Please, and thank you for your comments. So go ahead.
Hello, Chairman. My name is Ben Bartlett, and thank you for actually taking our comments. We really appreciate it. And first of all, we want to express the fact that we have been extremely thankful to be able to use this property for the years that we have. It's been extremely successful for us. We're thankful for that. Moving forward, we understand that communities have to advance. We understand that the state is trying to maximize this particular piece of property from an income standpoint. But and we tried to talk to them prior to this about that and say, listen, you know, if it's about the money, we're happy to pay a substantial amount of money to increase our rent to maintain ourselves out there. But when it's closed bid like that and we get bid out, you know, I think we bid $52,000 on that 2.5 acres that we have there. And we were overridden by probably 3 times that amount. And anyway, my main concern is Growing Green will find a way to continue to serve this community. It will have an impact on some of us, but we just, I guess my family and some of the employees are the people that I'm mostly concerned about. And plus the traffic and the impacts that having that type of facility out there, the glamping and the storage facilities out there that would have on our community out here. Our office is right here in Wilson. The traffic is atrocious already. I know that they're, of course, going to expand this road here at 22, and what it might happen on 390 is going to be substantial. And I think thinking that the few employees that we run in and out of there on a daily basis out there in our landscape business is going to be comparable to what a 600 storage units would be is not even a close comparison. And I feel like a lot of the people that live on the West Bank that maybe don't even know what's going on are going to be impacted in a major way. And we would just like all things to be considered here. We're not crybabies. We'll find a place to operate and run our business out of. But I think what's being proposed, in my viewpoint, is really not what Teton County is all about and not what this community has been supporting for such a long time. And being a homeowner here in Teton County, I know that our hand is held to the fire all the time. When we want to do any kind of expansion, store something on our property, do anything, we, got to come with a full-on proposal to even put a fence up on property that we own. And it just seems a little bit hypocritical when the state could come in and push people around a little bit and then all of a sudden do whatever they want to do with the piece of property. It seems to be a little bit hypocritical to me. But anyway, we appreciate the opportunity to voice our opinion. And we have full confidence that you guys will make the right decisions when it's all said and done. Thank you.
Thank you very much for your comments. Appreciate them. Any questions? Any questions? Okay. Thanks very much for your comments. I think I saw Marguerite Herman. Ms. Herman, would you like to address the board?
Yes. Thank you, Mr. Chairman and board. I'm Marguerite Herman speaking as a member of a group called Advocates for School Trust Lands, and they are concerned with the management fiduciary duties of land managers in the states that still have trust lands, like Wyoming. We're lucky enough mostly in the West. I'm speaking in support of the director's recommendation to approve the temporary use permits listed on your agenda that you're talking about right now. For all the reasons stated in the agenda item, these meet the trust land management objectives that we all agree on. Additionally, I and other trust land advocates are acutely aware of the need to explore non-traditional ways of generating revenue on trust lands for the beneficiaries, who are clearly described in our Constitution, active admission statutes and rules, public school children. We are reminded daily of the education funding needs for public schools, and I commend OSLI for taking a look at school section in Teton County. Complying with statutes, the staff solicited recommendations and analyzed them to come up with this proposal for temporary use permits. They will raise an estimated $600,000 a year. They will preserve the ability to change direction in 5 years when the permits expire. And they will be able to assess whether the permit holders have taken good care of the trust asset, and if there is any information to be gleaned about the future potential of raising this kind of revenue on those kinds of trust sections. It is non-traditional, and it may be a little, unnerving to some current users and local community. And I do understand the concerns of the previous speaker about being kind of a change in their business model. I do appreciate it, and I'm sympathetic. I do trust OSLI that they have weighed all those things in their estimation and in the director's recommendation. But I have to say that it does meet the trust objectives. And it also meets the fiduciary duty of you, the trustees, for those school sections. So thank you for allowing me to comment. Thank you.
Thank you, Ms. Herman. Any questions for Ms. Herman? Okay, thank you. Mr. Bump, do we have more? Trying to shift back to do we have Mr. Coe?
Can you hear me?
Yes, we can.
Thank you. Governor Gordon and members of the State Lands Board. My name is Stephen Koch. My wife and I have a cabin on Fish Creek Road in Wilson near the 390 school section. And I do speak in opposition to the 2 development proposals outlined in the Office of State Lands report, specifically the proposal for a glamping business and the proposal for 800 storage units. These proposals fly in the face of local planning codes and the intent of Teton County for land in this area. And additionally, the Osley recommendation is not responsive to the county's essential need for rock storage to support vitally important flood fighting. I am aware that you are charged with providing financial support for the state's schools, but I think you are also responsible to be respectful of local jurisdictions. Through an open, collaborative decision-making process, I believe a win-win solution that maintains important uses on this parcel can significantly increase revenue to the state without degrading the approach to one of America's iconic national parks. I would also like to suggest an alternative long-term use for the state to consider for the lands in this area. A combination of conservation lease and affordable housing for teachers would both protect the approach to Grand Teton National Park, and at the same time, through providing affordable teacher housing, it would serve the objective of the board to financially support Wyoming schools and educational objectives. So I do urge you to vote no on the glamping and storage proposals. I think we can do better. And thank you for your consideration.
Thank you, Mr. Koch. Is there anyone else that would like to address or questions? All right. Thank you. I have Mr. Bump, maybe you. No. Is it a Catherine Nyop? Ms. Nyop.
Yes, thank you. This is Kathy Nyrop, and I'm a resident in Wilson. Thank you for the opportunity to comment today. I will start with the two proposals, the storage units and the temporary A-frames and geodomes or glamping, and suggest that they are inappropriate for this location. The proposed uses do not comply with Teton County planning and zoning, nor in my opinion do the existing permits, but we'll set that one aside for right now. There is no infrastructure for this site, no sanitation, water, electricity, or roads, as others have pointed out, which is very problematic. The 800 storage units and the glamping will degrade this world-class scenic corridor that we have, which includes both Wyoming's agricultural heritage with grazing cattle in the foreground and the majestic Tetons rising beyond. This is what tourists come to Jackson to see, and this is why folks live here. Degrading this particular area of our county is really beyond me. There are other locations for these kinds of commercial developments. So I believe that this kind of haphazard approach will ultimately reduce the value of Teton County, and that's not a good thing for the state's coffers. Next, I'd like to comment briefly on the process. So the process for evaluating and awarding proposals for the use of state-owned land in Teton County must be transparent and allow for accountability, public oversight, and comment. As far as I know, there was no public disclosure of the proposed permits before that you all are being asked to approve today, and no prior opportunity for either Teton County or its residents to comment. With respect, I beg to differ with Deputy Crowder's characterization of the opportunity for input over the last 2 years. Theoretical conversations are distinctly different from actual proposals. Please do not assume that today's meeting meets the state's obligation to host a fair and open, transparent process. A continuing dialogue between the State Board of Land Commissioners, Osley, Teton County, and its residents is absolutely necessary to find a mutually beneficial solution. This process and these recommendations really set a poor precedent, not only for the 4,000 plus state-owned acres of land in Teton County, but also for the rest of the state. And people are watching. I mean, it's not just Teton County. I recognize that your charter, and I agree that our state's educational system is woefully underfunded. But I am also convinced that there is a better solution than what is before you today. Please reject the glamping and the storage unit proposals. Thank you for your time. I really appreciate it.
Thank you, Ms. Nyrop. Are there any questions from Ms. Nyrop? Hearing none. Mr. Bump, it looks like we have Representative Schwartz queued up next. And if so, Representative, I would recognize you.
Thank you, Mr. Chairman and members of the board. I'm not going to go into you've received enough emails and comments about concerns about these applications. I would basically echo those, but my comments are a little different. I spent 8 years on the Planning Commission and 12 years on the County Commission dealing with Teton County land development. I'm familiar with both the process and the complications. I think I thought when I got elected to the legislature, I was going to put that behind me, but clearly I was mistaken. So looking forward, I think there are ways we can improve the process that State Lands implements in doing these RFPs and doing these leases. And more specifically, I think there are ways where we can enable a conversation to determine what would be the best mechanisms for both improving the returns on this land and finding uses that are more compatible with what the community needs are. And I'll leave it in that and stand for any questions.
Thank you, Representative. Appreciate your comments on that. And it is always interesting because until something is before somebody, it sometimes evades, I guess, recognition as an important thing to comment on. So I certainly do understand your comments there. Any questions for Representative Schwartz? Hearing none, I see that we have a Mr. Thomas. Mr. Thomas, the floor is yours.
Hello, my name is Ryan Thomas. I am the head of development and operations for Basecamp. I appreciate all the concerns that have been raised and assure you that we have thought through all of them and we have plans in place to abide by all the regulatory bodies and to do this project right. I had hoped to be here today. I ran into some logistical issues getting there, but I just wanted to first express my gratitude for your teams, the OSLI team, their confidence that we will come in and execute on this project well. Also, I'm open to any questions that the board might have regarding the clamping proposal or off-grid accommodation proposal.
Thank you, Mr. Thomas. Are there any questions for Mr. Thomas? I see the auditor.
Thank you for being here, Mr. Thomas. I had a couple questions. I was looking at the other type of services that Basecamp provides, and I mean, to be honest, I was expecting just sort of duplications of what we saw in your proposal, but I see that you actually have a wider variety of services depending on the location. Is that accurate?
Correct. We try and we do our best to cater to the land.
So which of those locations, do you have anything that's very, very similar to what you're proposing on this section? I've been digging on the other locations, but I can't necessarily tell. Or how many do you have that are very similar to this proposal?
Yeah, thank you, Madam Auditor, for that question. So in partnership with the Idaho Departments of Lands this summer, starting in mid-May, we are launching a location in Yellowstone. And then in Grand Targhee on the other side of the Tetons, we'll launch our second location. That will be very similar to this type of development. What we're talking about here is 11 low impact units that are on stilts And so we anticipate this being very easy on the land. And we look forward to shielding that from the public view and to making it as authentic to nature as we can.
And Mr. Chairman, a follow-up.
Please.
How long do they need to be there for this project to pencil out for you?
Yep, each project is a little different. For this parcel, we're looking at 2.5 years.
Okay. Thank you, Mr. Chairman. That's all.
Thank you. Other questions? Mr. Thomas, I do have a couple of questions. And one of them I mentioned a little bit earlier. Would you be allowing dogs to accompany people?
We've had a number of conversations with Snake River Ranch, and we want to be great partners with them. And so we will not allow dogs, given the risk that they might spook cattle and provide operational issues to them.
Okay, thank you. And what about winter? Do you anticipate winter usage of the units?
We do. We anticipate insulated units that are very much built for winter. And we're excited to be able to offer those. Teton County is a hit for many people in the wintertime, and tourism is very high at ski resorts and such. So we're excited about the winter offering as well.
Okay, and do you anticipate any, I'm sure this is probably all in the engineering, but any particular issues with water supply, sewage, trash, any of that sort of stuff that might be associated?
Yep, so we're working with our engineers. Our first step was getting board approval, and we're actively working with our engineers to design the right systems that obviously keep the environment very safe. You have closed loop systems, a number of options for that. And then we anticipate being able to make this happen in the wintertime.
Okay, thank you. Any other, Mr. Treasurer?
I'm curious as to the life cycle of your different units, your geodomes and your A-frames, as far as when you have to, I guess, totally replace them, or are they going to be of a substantial design that they could stay there for what type of time period?
Yeah, great question. It definitely depends on the unit. So the geodomes are made of multiple types of material, the outside being the most vulnerable to the sun and the damage that sun causes. So the outside lasts for 7 to 10 years. So we usually replace the outside every 7 to 10 years. The interior structure will last for 20 plus years. Now, on other structures, you can take canvas tents, much like we'll have in our Yellowstone property, or A-frames. Just really depends on the build and the location. We cater each product and each design to the location.
Follow up, Mr. Chairman. I guess the berms that you're looking at are they going to be able to hide all of the structures from the nearby road? So
we imagine that the trees and the different plants that we'll have around the development will do most of the hiding, and the berms will provide the protection from the flooding, or at least the rerouting. And a lot of outstanding items there to make sure we're doing it appropriately, and with making sure we are not hurting the environment in the way we build the berms, but they're not designed to shield the operation. That's what the trees will do.
How negatively impacted would be the project for getting up and going this year if it were carried over to our June 2nd meeting to allow more public input?
I think there's a tight window for construction. It's very much difficult to build when there's snow on the ground, or rather to set up. The construction is actually very light, but it's a matter of having everything on the ground set before the snow comes in. And so we we are in favor of the recommendation that the OSLI team has given to approve our permit, temporary use permit today. And we will have to look at timelines if the discussion moves to June.
Thank you.
Madam Auditor, did you?
Mr. Chairman, sorry, one quick follow-up. In your other operations, have you ever had to or been required to pull out of a location?
We have not.
Okay, thank you.
Okay, thank you. Any further questions for Mr. Thomas? Further questions? Okay, hearing none. I see Senator Giroux. You're on. Senator, the floor is yours.
Thank you, Mr. Chairman, and thank the board. I know you've had a long day, and I try not to make it any longer than I have to. But I wanted just to take a minute and speak on this issue. You know, when this bill came forward, we put on some amendments. I put on a couple of amendments. One that it had to have the approval of a whole raft of different agencies, and the body didn't go for that. And so then I asked to do it in consultation with Teton County, the park, the Forest Service, and whoever else might be affected. And I think that the staff has tried to do that, but I think there's been a communication kind of breakdown a little bit in between what folks in Teton County regard as a robust public process and what OSLI thinks is a robust public process. And I think there's a little bit of gap there between those two, both well-intentioned. I mean, I think OSLI has done what they felt that they were supposed to do. And I just think that folks in Teton County are just used to something a little bit different. And I think that we can get there, though. I think so. Improving the communication, having more sessions where people get to talk about their ideas might actually lead you to some winning opportunities that actually work well for all sides. I know you've heard today from folks that are against two in particular of those items. I'm afraid I do agree with that, but more to the point of just not knowing the full story and probably wanting to hear more and having more of that process leads me to that conclusion. The other proposals, the temporary uses that have been going on there in some cases for years, I think is fine. I think that bringing them to the table and getting more money for the state has been a good and healthy exercise. I think that the exercise in carrying forward to other parcels and however this moves forward can be done with a little bit of tweaking, I think can be achieved. But on the total today, I stand against the two proposals, approval of all the temporary uses, that the other temporary uses that are on there. And I wish you well in your deliberations and stand for any questions.
Thank you, Senator. Any questions for the senator from the board? Mr. Superintendent.
Mr. Chairman, thank you. Senator Drew, do you, representing that area and being from that area, have any sense of how the county, the people from the county and the community feel on this? Is it 80-20, 80% are opposed, 20% are on this, 50-50? What is your sense on the balance of what the people think?
Mr. Chairman, thank you. Mr. Superintendent, I never try to handicap the folks in Teton County. I've run and won there and I've run and lost. I can never figure out either way. But I will tell you this. I think that the majority of folks that I'm talking to right now are against the two temporary uses that are new. And I think they feel that way because they feel like there hasn't been enough attention paid to it. I think that the chairman was absolutely right. I think that a lot of times you don't hear from some folks until the 11th hour and the 59th minute. I get that. But I also can tell you that the community is used to is really used to more of a different process. And I was part of that as I too served as a commissioner, a town councilman, and a planning commissioner. I've done the trifecta. And so I can tell you that I think that given a more robust process, I think you can get people along more. And I also think you can get people some conclusions that they might think is more advantageous on some of these parcels, with regards to housing, with regards to, other uses. And then also the use of conservation easements, ways that can generate money for the state, can get OSLI comfortable with a revenue stream that it can really be proud of, with being able to fulfill its due diligence and get uses that people are comfortable with. Right now, though, I don't think we're there.
Follow, Mr. Chairman. Senator, how do you feel like the people of Teton County would want it to look different? Because when I sitting here today, listen to OSLI, it sounded to me like it was a robust process, like they did their due diligence, like it was very thorough. How would it or should it have been different? How would the people wish it would have looked?
Mr. Chairman, to you, Mr. Superintendent, I think that when we go through, if you take a look at the land use process for Teton County, I think you'd see they go through just a regular set of public hearings, and where people come and they really flesh out what it is that they're doing, and they go through a process, and the community is very well in tune with that, and showing up at those meetings and kind of having a chance to kind of voice their opinions. This process where it comes up today and with potentially a vote today, and that's it, is something that they're not used to. And it's not their fault. It's the system that Teton County has set up in their land use planning that I think has served us very, very well. And I think, frankly, one of the reasons why these parcels are worth what they're worth is because we go through this process. And so I'm not one to say that it's wrong. I know it's laborious. I know it's expensive. I know, and I tried it on both sides. After serving for 8 years as a county commissioner, I got on board with a developer, and I spent a year of my time going through it the other way. It's tough, it's expensive, it's hard. On the same token, the value of the property is worth it.
Let me just ask if the superintendent has another.
I was just going to ask, Mr. Chairman, I don't fully know my boundaries here, so you tell me if this is appropriate or inappropriate, but could we get OSLI to respond to that?
Yeah, I think we could. Yeah, I mean, that's fine. If you want to, do you care to characterize? I mean, I think you've already kind of mentioned what we've been through, but please go ahead, Jason.
Thank you, Mr. Chairman.
Deputy.
Thanks for the question, Superintendent, because it is important. We started off with this parcel because we have existing and known tracks. They've been identified, they've been mapped, and they've been historically used. And so we didn't add new tracks. We didn't add any new area that's going to be developed. These were existing situations that had temporary use permits on them already, and those temporary use permits are expiring. Our normal process through the Board of Land Commissioners rules, and there aren't any other statutes that further guide us in this, don't allow for public comment. We don't take a break and we don't advertise. The rules don't expect us to do that in this situation. And really, in large part, all of the programs we manage don't require that because these are trust lands. They're not public lands. We're expected to provide you with a fiduciary recommendation, and then you act on that recommendation as fiduciaries that are identified within the Constitution. But I want to make sure that it's clear to you and everybody else listening, this process that we went through is specific to this parcel and this set of TUPs. We are looking at moving forward with development or at least solicitation of proposals on other parcels within the county because there is some value there and there is some expressed interest in developing those. And from our standpoint, we need to respond to that. Otherwise, we wouldn't be doing our jobs. And in those cases, we are looking at leasing opportunities. And as the auditor mentioned, those cases, leasing opportunities, and Mr. McGagnon mentioned this as well, those require a deeper set of analysis. Those also require a deeper involvement of the surface lessee. He has to consent to that, not just comment on it. And so we have to go through a more robust analysis process when we're talking about leasing. In addition, we've had conversations with a lot of folks that have commented to you today, as well as the county commissioners. And we recognize this did just happen a few weeks ago. We had an update to that conversation, but we've had these conversations throughout the last couple of years as we've gone through this iterative process of the legislature and the study and everything else that we've previously talked about. That having a conversation with the community is extremely important, just like Senator Giroux mentioned. We anticipate doing that before we move forward with any more leasing proposals on any other parcels. We anticipate having a conversation with the county commissioners or some subset thereof and their planning department for them to give us an indication of uses that are that the county needs on these next parcels coming up, and we can tailor our proposal to that if it fits trust land management objectives. We also anticipate having a listening session with affected stakeholders. And I don't want to call it a town hall, but I anticipate it turning into that we show up and we listen to what they want to see out there. And it could be that they don't want to see anything. And that conservation conversation takes a higher tone. But I want to be clear to you that this process is tailored to these specific temporary use permits. And we've followed the rules to a T and again, didn't feel like any more needed to be done than what I've already explained, because this is an existing use case with existing tracks and identified and all of it's already there. We're just looking to replace them with something that's closer to the market. But the next process we go through, obviously that needs a more stronger and robust process related to it that involves not only county commissioners and county zoning department, but the public as well.
Thank you. Mr. Treasurer.
I guess this could be to Senator Giroux if he's still there. I guess, I think it's fairly evident that in our capitalist system here, that in Teton County, the two different things, the glamping and the storage units are more likely than not economically viable. And so my question would be if they can't occur on this particular parcel for whatever reason or reasons, then where in Teton County could they occur and still be economically viable? Yeah, to step away.
And the senator had to
all right.
to step away.
I guess that's kind of where I'm just curious, Mr. Chairman, that we've got an asset of the state, and there's definitely in Teton County, I think there's the public is wanting these two industries. And I'm hoping that we can try to figure out how, if not here, someplace that that you can get some, I guess, some normality in the economic process of our in that part of our state.
Thank you, Mr. Treasurer. At the risk of sort of belaboring this, let me, and correct me, Jason, if I missed something, but a lot of this came about because the legislature wanted to figure out how to improve returns off properties that were in Teton County. And I know the local legislators, specifically both Representative Schwartz and Senator Giroux, had asked for that to be more general than just targeted towards Teton County. I think the motivations of some of the people, just to be very plain about it, was that there's lots of rich folks in Teton County, and they should, by God, ante up to help everybody else. And so we have a very targeted proposal with a somewhat unique approach. You can't be somewhat unique. It is a unique approach. We haven't done this before. And I, for one, am a little bit concerned about the precedent setting of sort of going out there as a legislature and saying, we're going to target this group of state lands and look at them a little bit differently. But be that as it may, I think the Office of State Lands did a great job of identifying, as you've mentioned, Deputy Director, this was the easiest parcel to look at, and we see that it's raised a couple of flags. And I also note that this is a TUP, so we're talking about a term of how many?
Mr. Chairman, it's a term of 5 years.
So a term of 5 years, and at least two of the proposals sort of anticipate being able to renew those to some degree, it seems to me.
And Mr. Chairman, just to be a little more specific, you can't renew a TUP. You would have to be issued a new TUP.
Right.
And I think throughout this process, staff has been clear with people that there is no assurance of an additional TUP being issued for whatever activity will go on the parcel for the next 5 years. And also I would note too that if the board should decide to issue these TUPs, it doesn't prevent us from continuing the dialogue with the county with respect to their express concern about affordable housing, conservation, and all those other things that the board heard about up in Teton County. We want to have those conversations, and we will continue to have those conversations. So, this is a very temporary situation, if you will. And I think Mr. Treasurer was correct. It's almost like a pilot project to go forward with something that's a little different, little unique, that will bring in more revenue for the trust beneficiaries than what we've done previously. And I know that's scary. It's a different opportunity that people aren't used to, but there are some similar uses that will be that are proposed for this Teton Village parcel too. So I just want to make it clear that moving forward, as Deputy Director indicated, when we start looking at other parcels in Teton County, we will have those robust conversations and explore more of the leasing opportunities for conservation and whatnot. And it certainly doesn't foreclose us from continuing to look at the Teton Village parcel for other potential uses.
Sure. Thank you for that. Well, the other aspect of that I was going to ask about is that the current TUPs expire in a month. Is that correct?
Correct, Mr. Chairman. I understand they expire in May. I don't know the exact date. Do you know, Jason? But May, let's just say May.
And I do think one of the challenges, and we've heard this a couple of times, just generally speaking, one of the challenges is how do we notice the public? We have a website. We try to do our best to notice, but not everybody gets not everybody reads the way they used to or uses the same sites. So it is a challenge. So board, I just wanted to kind of give a little bit of the history, as we begin deliberations here on what to do. Just because I do think that simply because the legislature envisioned this kind of inventory for Teton County for, I think, somewhat prescribed reasons, it does sometimes mean that there is a precedent to be set here, and I do want to think about what that precedent might be and how it would apply generally throughout the state. I think we have a number of parcels. We have two proposals that have raised some concerns. And so board, I guess we have a couple of ways we could look at this, I think. One of them is to move the director's recommendation which is as it's described in the book. And the other is to break these out, as I think the treasurer had suggested at the beginning. I think we are left, and that's the last thing I was going to say, if there aren't modifications to the TUPs here, they will expire on the 20 in May. And what happens then?
Thank you, Mr. Chairman. As the director mentioned, TUPs cannot be renewed, so we expect each applicant or each existing user, if they want to continue that use, to provide us with a brand new application, and we provide that to you to reissue it. At this point, as the process has moved forward, we haven't accepted and haven't received any reissuant type applications other than the ones we've identified for you here that are existing users. If that's something that the board wanted to do, we would have to reach out to those current users and work our normal process, which is to tell them that your lease is expired or your permit is expiring. You need to submit a new application and we need to analyze it brand new and go forward. The board has in the past issued permits and leases with an effective date prior to the board's decision, and you could do that again here in this situation.
Thank you, Deputy Director. So what's the pleasure of the board?
Mr. Chairman, I just have a couple more questions and then I guess try to express where I'm at. Just to clarify, all 5 expire in May?
Mr. Chairman, Superintendent, we have 9 separate temporary use permits out there currently. All 9 of those expire in May. That's correct.
Okay. And if we were to vote with the director's recommendation, did I hear someone's estimate the potential gain per year would be around $600,000 from what is coming in now for the trust beneficiary? Is that
Mr. Chairman, Mr. Superintendent, currently the revenue generated is about $20,000 per year. If in fact the board approves the TUPs put forth in this board matter, it'll be around $600,000 per year.
And this one's really important for me to understand. Do we know exactly how many businesses and or people will have to be moved or be displaced or be affected somehow if this goes through?
Mr. Chairman, Mr. Superintendent, we do. I would have to do some quick accounting for you. If you give me 5 minutes, I could figure those out. But we do have companies, as the one that spoke to you over Zoom, will be displaced and we'll have to look for other places. And we understood that going into this process and we're extremely sympathetic to it. But maintaining a business is not one of the trust line management objectives, so we couldn't really measure it or weigh it. But that doesn't mean we didn't have conversations with others in the county to understand if there were opportunities for them to go elsewhere. And in large part, there are opportunities for them to go elsewhere. They just have to actively seek those. And so we wanted to make sure we understood that picture. And here in a minute, I can give you that quick.
Okay. So, Mr. Chairman, I'm really struggling with the tension between on the superintendent side, gaining financial support for our schools would be significant. Who wouldn't want that, especially if I could be guaranteed it could go to compensating our teachers. But I'm also very uncomfortable with pushing the little guy around. And I know there's so many variables to this that is not what OSLI is trying to do at all, but that's what makes me most uncomfortable.
Thank you. Maybe Mr. Peters or Mr. Miller, you could give us a little bit of color on the notion of maximum, or that's not really the word, but well, I think the court language speaks about optimizing return to on the state trust lands, but I guess there is, I think, a perspective about longevity versus best return at the time.
Certainly, Mr. Chairman. Jim Peters, the Attorney General's office, as you're aware, and probably would be aware with all the other lands that we deal with. What we are looking at here are our school trust lands. And so the benefit, all of the beneficiaries are the school trusts, or is a school trust. And we have a duty, this board has a constitutional and statutory duty as the holder of those trust lands to generate revenue for the beneficiary. And so depending on the various types of land that we're looking at, whether it's institutional land and we're generating revenue for that specific institution, or school trust lands, as is the case here, the duty of this board and OSLI as the administrative arm, we have a fiduciary duty to generate revenue for those beneficiaries. Certainly, we have to look at the trust land management objectives when we are moving forward with making decisions. So maximizing revenue is not the only consideration, but there are other trust land management objectives that must be considered when trying to maximize revenue and generate revenue from specific parcels for the intended beneficiaries.
Thanks. Does that help, Mr. Superintendent? All right, thank you. All right. Board, I think we've laid out a couple of options going forward.
I'd say I'd make a motion, see if I get a second, see if we have any discussion.
Okay, Mr. Treasurer.
I would move for approval of TUP 03344, TUP 0345, TUP 0343, and TUP 0341, and track number 5 of TUP 3342 at the same price of $3,000 per acre per month. For stockpile site.
Right, that motion has been made. Is there a second?
Mr. Chairman, I'll second for discussion purposes.
Motion's been seconded by the auditor, made by the treasurer, and we are now open for discussion.
And Mr. Chairman, I know I can't have two topics, I think, in one motion, but I'll have a second motion to lay back the remainder of these recommendations until the June 2nd. So there can be continued environmental studies and continued public input.
Okay. Discussion.
Mr. Chairman, if the treasurer could help me, I think I understand what you're doing with tract 5, but draw me a picture.
Track 5 is at 1.03 acres. That's in Wilson's Investment LLC. And that is being used for a stockpile site. But it omits the other two parts there, 2 and 3, which is the 3.22 and the 4.11 acres. And that is the site 2 and 3 would be laid back until June 2nd. And also site 9 would be laid back until June 2nd.
Oh, Mr. Treasurer, I thought I understood.
Yeah, but that would be in a second motion, the
No,
laybacks.
I thought your initial motion, and please correct me if I'm wrong, I thought your initial motion was TUP 03345 was included in your,
It was, yeah.
But that is track 9.
but that is track 9.
Oh, that is track 9? Oh, I apologize, Mr. Chairman, I misspoke.
You want to amend your?
I would
motion?
amend that. I wanted the 4-4, the 4-3, track 5 of 4-2, and 4-1.
Madam Auditor, is that acceptable to you?
So, Mr. Chairman, Mr. Treasurer, let me repeat that back to you.
Yeah.
You want to move approval of 3344, 3343, and 3341.
Correct, and partially of 3342, the 1.03 acres. All the stockpile sites.
So, Mr. Chairman, I have some more questions and discussions, but do I need to second that before I go forward?
Yeah, so that at least we have a clear motion on.
Okay. Mr. Chairman, I'd second that.
Okay, thank you. That motion is now amended and on the table.
So I guess my concern with the motion as written, Mr. Treasurer, is separating out the one piece of the Wilson Investments proposal and pricing that out at the same rate that they've been paying for years and years, which is kind of your intent, correct?
3,000 per acre per month, which is the same price as what we have on the other stockpile sites, except that Yellow Iron Excavating, the 4-1 is at 2,000 an acre, but I'm pricing it out at the 3,000 per acre, which is the same price as the other small stockpile sites.
Mr. Chairman, I guess my concern is, would that change Wilson Investments proposal that we would be? My concern is that it muddies up too much the proposal we would be considering in June.
Well, Mr. Chairman, I guess if you want to take that out, I just thought I'd leave that in there just so that wouldn't fall into a lapsed lease situation. That's, and I don't know, the folks from Wilson are here. I don't know, from my perspective, Mr. Chairman, it's their call. If they want it in, we'll leave it in. If they want it out, then it's out.
You know, the issue that I have here, I'm recognizing this is a bit out of order. And so I want to note that, and I'll allow some latitude here, but we do have a motion on the table, which sort of means that we don't normally have conversation about this, but since I think there's probably some work to be done on this motion, I'll accept a public comment. Mr. Hardiman.
Thank you, Chairman. Thank you, Board. Yes, we are absolutely open to that proposal. And if we need to file a separate TUP for that second away from the other lots 2 or 3, then we're absolutely fine with that.
Okay, thank you.
Thank you.
Mr. Chairman, could I also ask if that causes any issues for OSLI? Because the director's making scrunchy faces. So I want to make sure.
What I think, what I worry, and I would caution the board about, telling people how to do their business from here. So that's one thing I guess I worry about.
Mr. Chairman, Madam Auditor, I'm making scrunchy faces for exactly the reason that Mr. Chairman articulated. But with that said, I would defer to Deputy Director Crowder with respect to whether that provides us with any heartburn.
Mr. Chairman, that's exactly right. We want to make sure that the proposal that the proponent provided to us is agreeable to the situation you're presenting. So as long as they're agreeable, the scrunchy face, well, I would have had one of those as well. I
Okay.
also want to be clear that when we set out the time frame to go through the solicitation process, we were very aware of the current TUP's expiration date, the amount of time it would take them to remove any improvements that they had currently out there, and gave them a 45-day grace period to be able to remove them after the expiration date. And then also understanding that Teton County is very much impacted by snow load, and development of these parcels and putting improvements out there could be impacted by that. You might have a smaller development window than we have in other areas of the state. So we wanted to be able to give everybody a really good opportunity to remove in a very clean fashion and to hit the ground running in a very clean fashion as well. And so the time period was very specific and very well thought out when we went through the process.
So I very much appreciate that. I'm also mindful, and I respect the motion and the seconder, but I think probably the discussion is worthwhile. If we issue a TUP for a stockpile, that's what the TUP is for. It's not to be amended for a storage unit at some later date. Would that be a correct?
Mr. Chairman, you're absolutely correct. And I think we would ask Wilson Investments to bring us a new application with a very specific stated purpose. That not just a stockpile site, but is it a landscape company as well, but to be more focused and specific, that would allow the actual use that they wanted, but wouldn't allow it to creep into something more.
Okay, thank you. With that in mind, simply because I think it's a little bit squirrely with scrunchy faces, I would not mind an amendment that would remove parcel, is that 5 from the motion? If that was something that someone wanted to do, just simply because it would be a little clearer. But hearing.
Mr. Chairman, that as the hesitant seconder, that would make me feel better too about supporting the motion probably.
All right, Mr. Chairman, if that's what you guys want to do, that's fine. We'll get some of these things taken care of, and then we can go on and figure out how to take care of the rest of it.
Okay, so I think what I hear is agreement from the maker of the motion and the seconder that we are now talking about TUP 03344, TUP 03343, and TUP 03341. Is that correct?
That's correct, Mr. Chairman.
That understood by everyone. Further discussion on the motion. Further discussion?
Mr. Chairman, the only further discussion I would ask is, do we have those numbers yet?
Yes, thank you, Mr. Chairman. Sorry. The numbers are, we have removed 6 existing users from the tracks. We've added 3 new, not counting everything that you're voting on right now, but as presented, 3 new users, and have kept 2 existing. And sorry, when you add that up, the numbers won't add up because one of the existing users did not reapply and did not submit a new proposal within the solicitations.
Thank you.
Deputy Director, just so I'm clear, on the 3 proposals here that are in this motion, how many of those are existing?
Mr. Chairman, 2 of those proposals are existing. Arbor Works Tree Service LLC and Yellow Iron Excavating LLC. Whole Landscaping would be a new applicant.
Thank you, Deputy Director. All right, further discussion. Further discussion? Further discussion. All in favor of the motion signify by saying aye.
Aye.
Nays?
No.
And I would be a no on that. But that motion does carry as I count it. So.
Okay. Mr. Chairman, I have a question for Osley.
Please, Mr. Treasurer.
Okay, so would it be possible to generate a 4-6 number now? Or another TU 334 whatever, or 5 whatever to take care of the 1.03 acres? I mean, it's gonna be the same use as what it was. Was that Wilson beforehand? Or was that another user?
Mr. Chairman, it was not Wilson. It was a company called Eastman Excavation and Timber Works. So Wilson Investments would be a new user on that
Be a new
parcel.
user on that one. But is it gonna be the same use?
Mr. Chairman, we would like to be able to talk with Wilson Investments to ensure it's the same use or what their specific use case would be separate from the storage units. So I don't know that I can give you a full answer on that without that
A
conversation.
clarification, Mr. Chairman. We know it's gonna be in May, but we don't know whether it's May 1st or May 15th or May 30th.
Mr. Chairman, we've determined that's May 1st now.
It's May 1st. So nobody can have constructive, I guess, use of any of these that where there's pre-existing users until essentially the 15th of June.
Mr. Chairman, that is one thing that's missing out of the board matter, and I apologize about that. Timing of this are that the existing temporary use permits will expire on May 1st. The office is granting a 45-day grace period to remove existing improvements, so that's June 15th. And then these TUPs will become effective on August 1st, if approved.
They're not effective until August 1st.
That's correct.
And so even though somebody wants to get started on a base camp thing, they can't even get on the ground until August 1st.
Mr. Chairman, Treasurer, that's correct. And all of these dates were relayed to each respondent to our solicitation. And so that is what they're expecting as well.
Okay. And the rent won't start until August 1st.
Mr. Chairman, Treasurer, that's correct.
Okay.
All right. Well,
Well, I guess, Mr. Chairman, looking at those dates, it doesn't make any difference whether we approve this today or whether you approve it on June 2nd, because people aren't going to be able to get on the ground till August 1st.
yeah.
Yeah. And we'll have a lot more public input for the next so many days until June 2nd on the two problematic areas.
So this was reminding me of repairing my tractor and having a bunch of bolts and pieces on the ground and not sure exactly where they all go back.
Yeah.
So-
And the water pump is the wrong water pump.
Yeah.
You know?
So at this point, we have TUP 00342, which is up in the air.
Yeah.
TUP 03345, also up in the air.
Yeah.
The effective date, you have 45 days grace period to be able to remove the TUP, existing TUP.
From May 1st.
Will expire May 1st. Are there, and you have people that are currently in those two parcels that in both cases, they're new applicants. Is that correct?
Yeah, Mr. Chairman, this is great clarification. Specifically to TUP 3345, which is Base Camp Hospitality LLC
Yeah.
on Tract 9.
Yep.
That whole tract is currently under permit to a company called Wyoming Balloon Company. And they don't have any infrastructure up there. They
Right.
move the balloons out of a trailer and a van, and that's not an issue at all as far as timing. TUP 3342, we have two existing landscape companies in both of those tracks. One is Growing Green, which I addressed you earlier over Zoom, and the second is THL2, I believe. I think there's a relationship between Wilson Investments and THL, and I don't want to put words in their mouth, but they may be able to speak to how easy it would be to remove that landscape improvement subset up somewhere else or altogether.
Okay. And then we also have Teton County that has requested a place to stockpile. Is that also correct?
And Mr. Chairman, when you approve TUP 3343 to whole landscaping, you approve them to be on the site where Teton County currently is. As we mentioned in briefings, we've been in discussions with the county to put them somewhere else. Haven't had any resolution to those discussions. But if you've been doing the math with me, we offered 9 tracks for permit and only are giving you 8 tracks for approval. There's 1 tract that's left and we've offered that to the county as well to see if they can move down there. And that's track number 1 in the very southwest corner of this small parcel.
Okay.
Clarification,
Mr. Treasurer.
Chairman, I believe that you said that it expired on May 1st. I think it expires on June 15th. It begins on May 1st, the grace period.
Mr. Chairman, the grace period, right, is a 45-day period from May 1st to June 15th.
Yeah, I wanted to make clear because I think you thought that the grace period expired on the 1st of May. It expires on the 15th of June.
So, board, what is your pleasure here? We can either make a motion for these remaining parcels. At the risk of sort of further scrunching faces, I'm wondering if there isn't merit in taking some time on these other parcels and bringing them up in June. I know that puts our timeline out of whack. And I want to be mindful about that, Deputy Director. I mean, it really is a complicated process. It would be much cleaner to just either up or down it. But I didn't know if you had any thoughts on this?
Mr. Chairman, I appreciate the opportunity. Not only is there going to be some time to develop once they get the permit and once the permit is effective on August 1st, but there's also a lot of lead up into that. And when we developed our timeframe, we wanted to be sensitive to any new companies coming into the process that if they needed to secure some regulatory permits, in the example of Base Camp's sewage system and things like that, that they'd have some ramp up time to be able to put those in place, knowing that they had a permit in front of them. That's simply our concern. We can shorten that. I'm sorry, you can shorten that any length of time, but that was our intent, is to try to give them some lead up time before they actually had a permit and could get on the ground.
Fair enough. Okay, board, you've heard the discussions. Maybe there's some things that we've missed, and I'd certainly entertain any concept there. But I'm happy to take whatever your pleasure is. And then we get on to some other things.
Mr. Chairman, I'd be all for taking more time, as you kind of alluded to.
Okay, thank you, Mr. Superintendent. If that's the case, and then members of the board, do you want to table? This is getting to be kind of irregular with us, but do we want to table these 2 matters and possibly take those up along with the county's concern, which I don't think was particularly well articulated? I got the letter and some other things, but I didn't understand that. And I guess Director, Deputy Director, I'm wondering if there is a way to if there's any advantage. I think having time, the superintendent recommended, gives a little bit more time for people to express their points of view. If there's any policy implications here, we can explore those a little bit. And members of the board, you know, I guess if that's the case, I would want to make sure that we use that opportunity for those purposes. Mr. Secretary.
Thank you, Mr. Chairman. That was the one question I had for the staff was, you know, if we're punting for a while, ostensibly to have more public input, how is that going to take place? I mean, and in a meaningful way so that people are satisfied that they had this extra time. Because really that, to me, that's the only reason we're putting this off. I don't want to get to June and people say, well, we didn't have enough time. You had no more public meetings. We're already told this doesn't suffice. What are we going to do?
Mr. Chairman, Secretary, I think we would be open to any process that you would want to see. Absolutely. We would employ that before June to make sure you were satisfied with that resolution. We have some processes in-house that we can employ really easily. Most of those are relate to our real estate transactions where we can hold a public hearing. We can do that through Zoom, or we can do that in person and have folks just give us their comments and we can accept them orally and provide them to you. Or we can accept just written comments and have a direct clearinghouse for all of those to come in, and then we can provide them to you in a formal way. But if that's what the board's direction to us is, we're happy to do whatever.
Mr. Chairman, I don't have a particular preference. I feel like, I mean, for me, I'm ready to vote today on all of them, but if we're kind of putting it off to talk about these other two, I think at the very least, you know, if we have people submit like an open public comment period, I mean, we're not going to have another
That
meeting.
sounds, yeah. And
So
my sense is probably written comments are would be the best. Because those would be reasoned, articulated, people would have a chance to write them down. Does that make sense?
that works for me.
And do you think, I guess, Deputy Director, you could set that up and we could make sure that's posted and noted?
Absolutely. I think one of the things that the office has done to increase its outreach is to use a process or a system called Gov Delivery. We push all of our notices out through that, and anybody listening online can sign up and receive all of those notices as soon as we push them out. But we would also work in our normal course of putting a notice in the paper, trying to send emails to the local leadership so that they can distribute appropriately as well.
Very good. Let's do that. If that makes sense. And if that's the case, I think to be proper about this, let's table the other two matters. If someone would make that motion, then we would be in order, I believe.
Mr. Chairman, I'm actually not going to make the motion, but before that motion is made, because I think someone will make it, I would just comment, and this is certainly not to scold anyone, but I'm very surprised and certainly a little bit confused that there's no representation from the county here at all today to sort of have their concerns expressed.
Fair enough. All right. Well, we have an action before us if somebody wants to make it.
You need a motion, Mr. Chairman?
To table.
Okay, I make the motion, Mr. Chairman, to table the issue of the other two parcels until the next SLIB meeting.
Okay, 03345 and 03342.
Yes, sir.
Thank you. Is that seconded? Thank you, Mr. Treasurer. It's been moved and seconded. There's no discussion. All in favor signify by saying aye. Nays?
Nay.
Motion is tabled. Thank you for your time. Sorry that it's a tough process. So thank you. Thank you very much. Madam Director, I know we have a couple of other matters ahead of us. I don't know how my board's patience is. It's about 4:15 in the afternoon. I am not anxious to beat my own record. So yeah, we are not going to take another 6 hours.
I could use a 5-minute break.
But so
5 minutes.
we are going to be directly on 5 minutes. That's it. We're taking it back up unless we don't have a quorum. So come back. room. Treasurer will join us, I hope, soon. So next matter.
Mr. Chairman, I think the only remaining matter on the Board of Land Commissioners agenda is a walk-in matter. It's walk-in matter number 1, which is to consider 2021 grazing and agricultural lease renewal applications. And pursuant to our discussions with the board yesterday, this is to ratify issuance of some leases. And with that, I would stand for any questions.
Okay. Members of the board, I don't believe this is a, I don't believe this is a conflict, but I do know the Tillards, Tim Tillard, they're one of the members of the Tillard 55 Limited Partnership. I'll take your advice. I don't have any business dealings with them, but they are people that I know. But probably some of these others are too, but I did want to point that out. If you think it's appropriate, I'm happy to step back.
Mr. Chairman,
Madam Auditor.
this is not a legal opinion, as I am not an attorney, but I think if we all stepped back from every lease of anyone we knew, none of us might be voting very much. But that would just be my comment.
Fair enough. And I do think, and Mr. Peters or Mr. Miller, I think basically you identify a potential conflict and you can conduct, and I have no business dealings with the Tillard. So very good. All right. Madam Director.
As I mentioned, in this walk-in matter, we're asking the board to ratify these leases pursuant to our discussion yesterday. If you have specific questions, we could certainly answer them.
Any questions? Mr. Secretary? Oh. Any questions? Any questions? Mr. Secretary?
Thank you, Mr. Chairman. I would move the director's recommendation as contained in walk-in board matter number 1.
Been moved. Is there a second?
Second.
It's been seconded by the auditor. Is there any discussion? Any discussion? Hearing none, all in favor signify by saying aye.
Aye.
That motion carries. And I said it was going to be another hour.
We work quickly, Mr. Chairman.
All right.
Mr. Chairman, that's the last item on the State Board of Land Commissioners agenda for today, April 7th, 2022.
Very good. Thank you, Madam Director. Thank you, Deputy Director. Thank you, Assistant Deputy. Assistant to Assistant Director. Yeah, very good. Mr. Treasurer, we just passed the walk-in matter, grazing and agricultural lease renewal applications.
Okay.
And that would bring us to the close, and I would entertain a motion.
Mr. Chairman, I would move to adjourn.
It's been moved and seconded, moved by the auditor, seconded by the superintendent. All in favor signify by saying aye.
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 God bless you. Thank you.